All right, we're going to go ahead and get started, and apologies for being 15 minutes late. You know, we're business people. We like to start on time, and we had a delay this morning. We got all of our event approvals yesterday, except one from the, not Dubai government. The Dubai government actually approved us yesterday. The other one is from what we say in the United States, a three-letter agency that wouldn't give us approval until a few minutes ago, and I apologize for that. But we're good to go now, and we're expecting to have a full day at the conference. Now, this event has been 2 years in the making and the result of a lot of meetings in Kabul, here in Dubai, in Istanbul, with the bankers, with the Afghan Banks Association, what we'll call today ABA, as many of you know, as well as with the donor community, who's been very supportive, but not at the point of, they need us to act first, is really what the donors were telling us on the banking issues, and that's what we've done today. The Afghan commercial banks have been very much frustrated by the many challenges that they're facing each day in Afghanistan under Taliban rule, but it includes non-Taliban issues like liquidity, difficulty, in transacting some trade finance deals with other neighboring countries. There are sanctions impacts, both primary and now the U.S. use of secondary sanctions as well is proliferating. Dealing with an unrecognized government when your bank is from that country is an issue. The withdrawal of the United States from Afghanistan militarily and politically didn't help either. But this group of Afghan commercial bankers, I've known them for more than 10 years. They're entrepreneurial, they're young, they're very smart, and they're incredibly resilient. They know how to make things work when things seem fairly desperate from a financial standpoint in Afghanistan. You're going to hear from them today. I've got a lot of respect for them and what they do, and the banking and finance businesses that they're running are now profitable to a large extent, not all of them, but to a large extent. The Afghan economy itself is growing, but again, small numbers in the less than 5% rate. But what's really affecting them now is the return of more than 4 million refugees from Iran and Pakistan, which has now put a huge burden, and their per capita income rates are dropping because those people are not being absorbed into steady income jobs. So increased investment, increased capital is needed to get the country stabilized, and the Taliban and the central bank know that. Poverty is going to continue to be a problem in Afghanistan going forward, but I'm very happy and very proud, frankly, of the Afghan business community because they have jumped in when the government has been unable to keep up with earthquakes and floods, and it's our business community and the banks themselves also that have stepped in to deliver humanitarian assistance in all 34 provinces and to assist the international donor community in keeping people alive. So the private sector is really for us a beacon of light, and having worked on Afghanistan for so long, it's to me right on the cusp of rapid growth in the banking sector and in the finance sector, digital money, e-payment systems. We're going to talk about a lot of this today at the conference. I just got back from Kabul and Mazar. I had the observation that security is still extremely good. There is no problems. I walked on the streets. I went into some of the banks and met with their staff, especially the young women bankers at AUB Bank in Mazar and Ghaznfar Bank in Kabul. They're very happy, to say the least, the women, of having me stop by to talk to them. I asked the men to leave, and I have an open conversation with them, and they're really wonderful. And their generation is incredibly excited about working in banking, but they're fearful that this will end. And so that's why the bank's success commercially for us is really important. Right now, the banks have made progress, as I said, in the compliance area programmatically. They've made progress in transparency and accountability. You can read many of the bank's bank statements and financial statements on the web. They're published. They have very good compliance-based board and independent auditors, some of whom are here today to join us. And from my feeling is they're trying very hard on AML and CFT. I'll use that acronym today because we're going to say anti-money laundering and counter-terror financing, I think, a lot today, but there are still improvements. The banks would admit this, that they have to make, but they're making them. And they're seeking outside participation and a detailed knowledge of experienced bankers from other countries in the region to help them to do that. So what is our goal today? Our goal is to hear Afghan voices and to welcome the corresponding banks from the region here to meet with them and to listen to them. You've received at your table today our agenda. We'll try to keep up with that throughout the day, and we're also welcoming our live streaming, which is in the back of the room. So we'll be live on both audio and video throughout the day. And we have people watching from all over the world, from the US and Canada, from RAACC members, from the Canada-Afghan Business Council members. Some of the AIB members in Turkey are going to be watching online. And the donors have all said that can't travel here. They're going to be watching the event all day today. So don't just look at us in the room. We have actually a very full plate of people joining in. One of the bankers, so why did we pick this date for this meeting here? So the idea came to me last year when I went to the BAFT meeting. BAFT is the Bankers Association for Foreign Trade. It is the International Trade Association for all corresponding banks internationally and including in the MENA region here. And as a result, BAFT I've been pushing BAFT, let me say it this way, to include Afghans in their programming activities. And you saw in the last 2 days, they held their 2-day conference here for the region right in this ballroom. And so I've attended it. Mr. Abadi from Ghazafar Bank was also there, and probably some other corresponding bankers that are here attended that as well. I spoke to them about the conference. They said they're going to be coming by. Some are going to come early, some are going to come late because they have other bank meetings here while they're here in Dubai. But the good news is that several of them said, you know, I just met a whole bunch of Afghan banks in Sibos, which is another international banking meeting in Europe. And a lot of our Afghan banks now go there. They have a full exhibit, and they've done a ton of outreach. The Afghan banks' names are circulating in the banking community. They are trying to see how the Afghan banks are reacting, whether they're going to try to build relationships with them, because I think they're cautiously optimistic that, yeah, Afghanistan and the banking side, commercial banking side, is really turning around very well. So they're anxious to meet more, and this is something that I've said to the Afghan Bankers Association. This is about trust building. The international banks don't know you as well. Now that the donors are gone and the United States is left, it's up to Afghan banks now to make that step in outreach to the international banking community. I don't think they need much work to do it in the regional banks because they're really already talking to many of those regional banks and undertaking transactions with them, and we'll hear about some of that today. So remember, our goal is to hear their voices and to see what things we can do to help spur more Afghan banking in the region. The international and regional corresponding banks, more than 30 committed as of yesterday morning to come to the conference today during the day, so they'll be popping in and out. But none of this could have happened if we hadn't had some good sponsorships from the banks. And I want to recognize our gold sponsors, our Afghan United Bank, which is, I think, right down here. We have Ghazafar Bank, which is, Kishro is someplace here with Ghazafar Bank. Our other gold sponsor is the United Nations Development Program. They decided that they wanted to help carry the message and the video live streaming of the event because so many people outside of Afghanistan or outside of Dubai wanted to watch it. So they helped us to pay for some of the live streaming and video services that you're seeing here today. By the way, we will publish the video on YouTube tonight. It'll be done, but people are watching us right now through the live stream, and on your agenda at the top on page 1 is the live stream link if you want to send that to any people back in your headquarters offices. Our silver sponsors include Katawalzai Group, which are located here. Also, silver sponsor Azizi Bank. You've all heard about the new Azizi Tower in Dubai, which is now being built. I understand construction already started. I went to their launch in about 6 months ago, was it now? And unbeknownst to me, in a room packed, it was a big auditorium packed with people, I thought it was going to be Mr. Azizi speaking, and before he even spoke, out comes Jennifer Lopez to show you how Azizi really has figured out how to do good marketing here in Dubai. And she put on a show as part of the rollout of the Azizi Tower. So thank you, Azizi Bank, for your silver sponsorship. Lastly, we'd like to thank Afghan Credit Guarantee Fund. Bernd is here. Dirk is watching. Many of us know them. They're very active in the donor community for Afghanistan and access to financing. And we're going to hear from them a little bit later. So what I thought we'd do first is we want to give a welcome from the Afghan Business Council of Dubai and its chairman, Mr. Haji Obadullah Sadr-Kale. And then we'll hear from Eshanullah Kamaval. He's representing what's called the Afghan Investors and Businessmen's Association of Turkey. It is the largest and the most active in Turkey of Afghan business associations. We will not have a representative from the Canada Afghan Business Council, but they shared our link and they're watching on the live streaming from Toronto, Montreal, and some of their SIVs way out on the west coast of Canada as well. So, Haji, I'm going to hand this over to you, and then after you and Mr. Kamaval have finished, I'll reintroduce our new speakers.
Bismillah ar-Rahman ar-Rahim. Good morning to everyone. Subutan bakhair, sabah al-khair, saharam pakhair. First of all, thank you for all of you to attend our today event. And thank you for Mr. Jeff. He did very hard work to happening this event. This is very important for our banking sector. And thank you for Dubai Chamber. Mr. Ahmad from Dubai Chamber is here. And always he supports us business event in our conference. And this event is very important because Mr. Jeff, he worked, I think, more than 1 year. In this event, we want to organize, then delay. Finally, it's happened today. This is for our banking sector because 85% of our largest business community is living in Dubai from last 35 years. This is very important. We'll be with you in all day, and thank you again for all of you to attend this conference.
Thank you. Mr. Kamaval.
Bismillah ar-Rahman ar-Rahim. Raz mu bkhair. Assalamu alaikum wa rahmatullahi wa barakatuh. زه د ترکی بزنس کونسل په نمایندګۍ د ښاغلي جیف حاجي صاحب صدرخیل او د جیف د خانمې نه مننه کوم چې دا دننه کنفرانس ایجاد کړی ده او جیف همیشه دغسې کنفرانسونه جوړ کړي دي.
He's saying good morning, Mr. Kamawal, to all of you, and thank you for Mr. Jeff to organize this conference, and thank you for all of you to attend this conference.
نننه کنفرانس چې نړیوال بانکونه او خصوصي بانکونه پکې حضور لري، زمونږ یو خاص پیغام ده ورته چې افغانستان د هر څه نه نن سبا د سرمایه ګزارۍ دپاره یو ښه فرصت ده. په ټولو غږ کوو چې دغه بحرانونو کې فرصتونه زیږېږي او په افغانستان ته راوړاندې سي او خپله سرمایه ګزاري وکړي.
This conference is very important because our country is open for investor. Afghanistan to go through this banks is today here in conference. We can talk with them and to invest in Afghanistan. Now is a good opportunity for our country to invest.
په آخره کې مونږ حاضر یو چې آینده کنفرانسونه انشاءالله موسم به هم ښه او په استانبول کې درسي. مننه.
I wish in the future days or months, we can do the same conference in event in Istanbul. The weather be good. Thank you for all of you.
Thank you very much. Appreciate that. Our last group that I think we need to thank, they were tireless in support of this, is the Afghan Banks Association, ABA. Their executive director, Mr. Najibullah Amiri, is going to speak to us in a short while on the Zoom from Kabul, and he's guaranteed all the Afghan banks that can no longer get visas to UAE will be joined together and watching us from Kabul. So we have a big family audience in Afghanistan that are listening to your speeches today and our discussion as well. Thank you, Mr. Amiri, and to the entire ABA team for everything you've done. Now, for some conference rules of order, just so you know how we're running the conference today, the event is 100% on the record because we're videotaping it to the world, both live streaming and the recorded tape, which will be published tonight on YouTube. In recognition of this live stream, we've reduced the amount of PowerPoints, so you won't see any PowerPoints today from any of our speakers because we want them to be concise and quick-moving in their remarks so that we can get into discussions with you in the audience and with others on Zoom. In addition, as the event moderator, if you're running over time, any of our speakers, I'll just give you a quick wrap-up signal to let you know that you're end of the time period. We'll also be introducing our speakers without big, long biographies. You can go to LinkedIn. Every one of our speakers has a LinkedIn post, and most of the Afghans have LinkedIn, Facebook, and Instagram, so you can check out their biographs on those as well. We have several speakers who are going to speak, as I said, from Kabul or other locations, including Uzbekistan and other places. Bear with us. We're managing the live stream, we're managing the Zoom interventions, and the in-person all at one time. For us, this is the first time we've tried to do this, and we're very happy to be able to do this for everyone. We will schedule time after each series of the panel discussions to allow our audience members to react or ask questions or give us some greater depth if they feel the need. As always, we seek everyone's comments to be respectful and polite. The ABA and the AACC agree that we have to look forward, really, in banking now. The days of the Kabul Bank are well behind us. We are interested in the future for Afghanistan, and the Afghan banks are showing us that they're willing to lead the way into that future. As always, we're going to have a buffet. We can't be at an Afghan conference without great food. So we'll have a nice lunch buffet outside, and also a dinner buffet today is provided, and we'll have 2 networking breaks that are 15 minutes long for coffee and nibble food outside. Tonight at the dinner, feel free to invite any of your corresponding bank or fintech or e-payment colleagues to join us for dinner. We've ordered food for 100, and we will have more than enough, I'm sure. So let me introduce now Mr. Kishro Fazli, the CEO of Ghaznfar Bank. Kishro is going to speak for his opening scene setter on the Afghan banking scene. Kishro, you can do it from the podium or at your seat, whichever you prefer.
Yeah, it's okay.
Okay.
Bismillahirrahmanirrahim.
A little closer. There you go.
Bismillahirrahmanirrahim. Good morning, everyone. It's my privilege to be here today and address as a board member of Afghanistan Banks Association and representing the banking sector today. And I would like to thank Afghan American Chamber of Commerce for such a great work and organizing very important, at a very critical time, this conference. This gathering is particularly important because it is the first time Afghanistan has a conference fully dedicated to correspondent banking relationship. This clearly shows that correspondent banking is not a technical issue. It is a foundation for trade, transparency, and economic activity. For Afghanistan, correspondent banking relationships, especially for US dollar-denominated currency transactions, are an urgent need. They allow legitimated trade payments to move through official, regulated, and stable banking channels, rather than informal alternatives or traditional financial system. This is important not only for Afghanistan, but also for countries and banks that trade with Afghanistan, because traceable payments protect exporters, importers, banks, and regulators on both sides. Afghanistan's banking sector understands its responsibility, and banks have taken strong steps to improve compliance, internal controls, and risk management. Customer due diligence, transaction monitoring, sanction screening, and reporting systems are firmly in place. Financial crime risks are taken seriously, and banks continue to align their practices with international standards and the recommendation of Financial Action Task Force Recommendations Committee. It is, in this context, I would like to express our sincere appreciation to the international community, first to the U.S. Treasury Department of Office of Foreign Asset Control for providing clarity to 7 general licenses that allow legitimated and complaint transactions to continue through the banking system. We also appreciate the role of the major international banks that act as intermediaries in the US, like JP Morgan, Wells Fargo, Citibank, and also other banks in the US who are the key players and clearing US dollar payments related to Afghanistan. We are equally grateful to our correspondent banks, existing correspondent banks in Central Asia, South Asia, the Gulf region, and other regions that continue to provide services to Afghan banks. These relationships help to ensure that trade payments remain safe, transparent, and fully traceable, benefiting businesses and financial system across the region. At the same time, I would like to briefly highlight an important structural development within Afghanistan financial system that presents a major opportunity for the future of the country. In the central bank, with the banking sector together, has made recent progress on a national financial inclusion strategy. It is just approved 2-3 weeks back by the leadership. This strategy focuses on bringing more individuals, traders, businessmen and women into the formal financial system through the digital banking, agent banking, and broader access to basic financial services. This represents a real and practical shift in the financial system of Afghanistan, and financial inclusion improves transparency, increases payments traceability, and supports the small and medium-sized businesses by bringing transactions into the formal banking system. As more payments move through the banks instead of cash and informal channels, correspondent banking relationship becomes more reliable and easier to support. For correspondent banks and international partners, this leads to more structured and predictable transactions flows, clear audit trails, better compliance visibility, and lower long-term risk. Allow me to just briefly touch on Ghazanfar Bank, which I represent as a CEO, only as an example of the Afghanistan banks position themselves. Ghazanfar Bank is one of the leading banks in Afghanistan for international payments, with a strong track record in correspondent banking relationship and cross-border transactions. Over the years, the bank has cleared and processed billions of dollars every year in international payments, working closely with correspondent banks, international organizations, and regional partners. The bank has invested heavily in compliance framework, corporate governance, which is really important, digital infrastructure, and transparency, and operates with strong internal controls. Monitoring system and reporting mechanism is also the top priority always in the strategy of the bank. This experience allows Ghazanfar Bank to reliably support trade payments, humanitarian flows in the last 4 years, and institutional transactions through formal banking channel. More importantly, Ghazan Fair Bank, like other banks representing here today, is committed to supporting trade payments and correspondent banking relationship and financial inclusion initiatives to men and women in Afghanistan to ensure transactions move through safe and regulated banking channel. To just touch about business to the correspondent banks and also its importance to the regional countries, correspondent banking is not only important for Afghanistan, it is also practical and sound business opportunity for correspondent banks. Afghanistan is closely connected through trade with neighboring and regional economies. As per the Ministry of Commerce and Ministry of Finance report, more than $13 billion is the international flows in and out. And only 30% of these payments are going through the banking channel. So that means 70% is the blue ocean for correspondent banks. So the international banking relationship supports legal imports again and exports, structured trade finance, and remittances across border payments. And when payments move through the banks, they reduce risk, improve visibility, and protect all the parties involved. For international organizations and donors, correspondent banking is important for accountability, reporting, and transparency in the movement of funds, whether for humanitarian assistance, development progress, or operational payments. So looking ahead, I would like to deliver a clear message from the Afghan banking sector. The banks represented here today are open, well prepared, and ready to engage with foreign banks. They are ready to establish new correspondent banking relationship, expand existing ones, and clear US dollars and other foreign currencies transactions based on the market needs. Afghan banks are available to meet individually with correspondent banks during this conference who are available here today to discuss compliance framework, business models, and concrete opportunities. Despite the challenges of the operating in a frontier market, Afghanistan has a strong potential for the international payments, and as well, if you look at the minerals of Afghanistan, it's more than it's actually calculated, which is going to be more than $3 trillion, which is untapped market. And there are a lot of foreign direct investors who are investing in Afghanistan, and I'm sure without banking channel, it's not possible. And in Afghanistan, in different sectors such as agriculture, energy, and services, all offer room for growth. The market remains underserved, and when banking channels are strong, everyone benefits. Banks, traders, regulators, donors, and regional economies. In closing, let me just clearly say that correspondent bank is about business, trust, transparency, and shared responsibility of everyone. By working together openly and professionally, we can build correspondent banking relationships that are commercially viable, compliant, sustainable, and mutually beneficial for banks, businesses, and the wider region. Thank you once again to Afghan American Chamber of Commerce and to our partners, correspondent banks who are here today, and also to the businessmen who are present here. And thank you also for accepting our invitation for the first time in this conference. And I wish you to have a productive and very successful day ahead. Thank you.
Thank you, Kishro. Excellent points. I want to thank you. A couple things you said, I want to make sure the audience, both here and at home, is understanding. JP Morgan, the largest U.S. corresponding bank, is already doing clearing of Afghan bank payments. They're already a partner. Our problem is we want to get them to be a bigger partner in trade finance and in other areas of banking and finance as well. We're happy that DABS has finished the National Financial Inclusion Initiatives. We've been waiting for this for over a year, and the ABA was very much involved in the policy development of it going forward. And I want to credit DAB for having the smarts to be able to invite the banking community to advise them on how to make this really work and to make it resilient and sustainable. So trade finance is something we're going to talk about throughout the day, and Kishore will join us later on a panel discussion as well. I now would like to go to the Afghan Banks Association Executive Director, Mr. Najibullah Amiri. He's in Kabul at the ABA headquarters, and we have him now on the Zoom screen. Najibullah, I'm handing over the microphone to you, my friend.
Great pleasure for me to joining here. Fortunately, it is our great pleasure to have the chairman of ABA with us today, Mr. Matiullah Fayek. Despite his travels, he has joined us and will share a few words for a few minutes. Mr. Fayek, please.
Mr. Fayek is the chairman of the ABA, and he is on travel because they're making a big business announcement that we're going to break today here at the event. Matiullah, are you able to hear us? You can go ahead.
Okay, thank you. Thank you, Jeff. Thank you, Amirisa.
Yeah.
Okay, ladies and gentlemen, unfortunately, due to official engagements, I'm not able to join you in person today. But still, I'm very pleased to have the opportunity to address you, and I would like to thank the organizers, especially Mr. Jeff, and all participants for being part of this conference. Let me start with a brief point on the misinformation about Afghanistan's banking sector. Not long ago, even an AI platform repeated the common assumption that Afghan banks are not functioning. When I explained that the bank I am associated with processes millions of dollars in electricity import payments, facilitates annual Hajj payments, and channels hundreds of millions of dollars in remittances, particularly through MoneyGram, the response from AI was, now that it makes sense. That short exchange says a lot about how partial information can shape perceptions. Afghanistan banking sector has shown a lot of resilience since the paradigm shift in 2021. The good thing is that the Afghanistan banking sector was ready to adapt. And fortunately, in the last 4 years, we have come a long way. Recently, the banking sector has turned naturally to the digitalization because it is a necessity rather than a choice. At Afghan United Bank, we are now connected, and this is a very good news that we are now connected with almost all mobile network operators and electronic money institutions, allowing secure push and pull transactions between accounts and wallets. We have also integrated with TerraPay, which connects to a regulated global payments network operating in over 210 sending countries and more than 150 receiving countries, linking billions of mobile wallets and bank accounts and enabling instant cross-border remittances into AUB accounts and the associated wallets. You will hear more from my colleagues who have joined in person about this transformative change. At the sectoral level, the Afghanistan Bank is working closely with the courts on non-performing loans recovery. These are the issues that are challenging to our banks in Afghanistan. And it is, unfortunately, I don't have time to delve deeper into these issues. But the Afghanistan Bank or the Central Bank of Afghanistan has taken leadership to resolve these issues. Likewise, the Central Bank is coordinating with the Ministry of Finance on public project financing and has relaunched the Afghanistan Banking and Finance Institution to rebuild professional capacity. In parallel, as Mr. Khosrow Fazli mentioned earlier, DAB is developing a broader strategy to expand access to finance and encourage greater use of formal banking channels. To conclude, confidence in the banking sector is gradually returning. This can be seen in a growing deposit base, ongoing corporate governance reforms, and the increasing use of regulated banking institutions. The Afghan banking sector is functioning, adapting, and open to constructive engagement. Finally, I would like to thank the UAE government, especially the Dubai government, for hosting this important conference. And I wish everybody a day full of achievement. Thank you.
Thank you, Mr. Faiq. Najib, can you jump in quickly?
Assalamu alaikum. Good morning. It is an honor to join you virtually and share my warm greeting with our distinguished CEOs, delegate, donor partners, and international colleagues. Today's gathering, brought together by ABA and AACC with the valued support of the Afghanistan Business Council of Dubai, the Canada Afghan Business Council, and AIBA. The Afghanistan Banks Association, established in September 2004, is a non-political independent body uniting all licensed commercial banks in Afghanistan. It works to ensure safe banking operation, effective customer services, and sustainable economic growth. As a membership-driven organization, its strength lies in the trust and active participation of its member banks, guided by the shared goal of financial stability and expanded access to responsible financial services nationwide. ABA acts as both a voice and a bridge for Afghanistan banks, advocating for supportive policies, engaging international partners to build trust and restore correspondence relationship, and strengthening sector capacity through collaboration with EIBF, UFI, and others. We are proud of this achievement and remain committed to continuing this vital work. Our core functions include lobbying and advocacy, international coordination, internal strengthening, survey and analysis, publication, and awareness. Following the political transition of August 2021, Afghanistan banking sector encountered severe challenges, including liquidity pressure, frozen foreign reserve, and limited access to correspondent banking. These difficulties were further compounded by the Ukraine war, as sanctions disrupted Russian intermediary channels, making financial operations even more complex. At that challenges time, ABA stood together with Afghan banks, addressing urgent issues, offering recommendation to the Afghanistan bank, promoting Islamic banking to keep services ethical and aligned with our values, and communicating openly with the public to build trust and reduce fear. Together, the Afghanistan bank worked diligently and wisely to manage liquidity, set withdrawal limit, and issue key policies. These measures enabled Afghan families to access their savings, allowed business to continue operating, and helped the sector avoid collapse. Esteemed participants, despite past challenges, today our banks stand stronger and more resilient, in some respects even better than before 2021. At this point, I would like to extend my appreciation to the Afghanistan Bank for its outstanding support, and to Economic Commission, respective ministries, for their important contribution in strengthening resilience and confidence in our banking sector. In concluding, let me be clear. The EBA exists to help banks operate more effectively today while building a stronger, more resilient financial system for tomorrow. We will continue to coordinate, educate, and partner with national and international stakeholders to restore confidence, expand services, and support sustainable economic recovery. I would like to assure all prospective correspondent banks attending today's conference that Afghanistan banking sector is fully compliant with international standards, including AML safety policies and FATF guidelines. A strong culture of compliance is firmly embedded across the sector. The ABA remains committed to facilitating dialogue between international stakeholders and our member banks, ensuring transparency, trust, and collaboration. Thank you for your attention. I look forward to engaging with you and to shaping a stronger future for Afghan banking sector.
Thank you, Najib. Very good. Very good. That's a perfect, opening remarks for our next speaker, Mr. Sunil Pant. Geez, I think I've known him almost 10 years, it feels like now. He's a regional banking and compliance expert in South and Central Asia. He's a independent member of the board of Ghaznafar Bank. He's a geostrategist, and he and I talk quite frequently about all the changes that are happening here in South and in Central Asia, and what it's going to mean longer term for Afghanistan and for the banking sector. He's going to give us his opening keynote and try to draw in all those threads and give us an idea of what we can expect in 2026. Sunil.
Jeffrey, distinguished members of this audience, it's a pleasure to be here, though Jeffrey has given me a task which I think is a very difficult one to handle. Just as you think that you've been able to draw the boundaries on what geopolitics and geostrategy is and what geoeconomics really means, the boundaries shift. And we've seen that happening with a very regular consistency over the last 1 year. Where things have been changing, suddenly you find that people who were in very close alliance are no longer in close alliance, and people who were deemed to be far away from you are suddenly very close. So I think, we have been going through a period of huge turbulence, and I don't see this turbulence coming to an end in the near foreseeable future. As we enter 2026, the bird is actually hanging on a precipice, at the edge of a precipice. The turmoil caused by kinetic wars, alongside deployment of economic weapons for strategic advantage, is coming to a face-up position and is continuing to fragment societies. Rules and institutions that have long underpinned stability are under siege in a new era in which trade, finance, and technology are being wielded as weapons of influence. The rapid resetting of political priorities and the growing impact of technology on the way individuals, communities, and nations interact are transforming the global landscape from the more predictable forms we knew not so long ago to a harsher, more demanding environment today. The current phase is witnessing a redefinition of the principal rules of sovereignty and engagement, giving new dimensions to the familiar norms of statecraft. Along with a changing environment, global risks are also transforming rapidly. As indicated in the Global Risk Perception Survey, GRPS 2026 of the World Economic Forum, there have been significant changes in the way the world is looking at risk today, and that is a global risk that I'm talking about. While geoeconomy and geopolitics have distinct features, they're also very closely interconnected and often overlap in their impact on international relations. Geoeconomy focuses on the economic factors that influence state behavior, while geopolitics delves into the strategic and geographical factors that shape state interactions. Both concepts recognize the importance of power and competition in international relations, as well as the role of institutions and alliances in managing conflicts and promoting cooperation. By comparing what is similar and what is different across the region, we can understand how these changes impact everyone. In fact, geo-economic confrontation has increased to number one risk globally. There has also been an uptick in the concerns for technological risks as we enter 2026, with misinformation and disinformation at now moving to number 5, which is a response that has been received from about 7% of the candidates that were interviewed for this GRPS. And 2 new entrants have also come in, which are adverse outcomes of AI technology. In fact, in the morning outside, I was talking to someone about the impact of technology on how the world is now reshaping itself. And technology, particularly the artificial intelligence and the machine learning that is coming in with that, are today becoming very important aspects that need to be considered and supported, I would say, in terms of the importance by cyber insecurity that we have. And I'm not saying cyber security. After a year of heightened uncertainty over trade policies, there is now a growing recognition of the escalating use of other economic and political instruments, including sanctions and regulations, as well as capital restrictions and the weaponization of remittance and supply chains as tools of geo-economic strategy. Rising geo-economic tensions between countries are also coinciding with the elevated levels of inequality and uneven economic impact of transformations that have been underway. And there have also been a huge amount of transformations that have taken place in the last couple of decades. Deepening divides along political, cultural, or identity lines within societies are also being amplified with the impact of technology that is there, because there is a very rapid transmission of ideas, thoughts, beliefs, and their implications and their results. This misinformation, disinformation, and information is today making a very potent mix of what is happening and how relationships are being defined. I'm talking repeatedly about relationships because the word and the trade that flows through it depends largely on the relationships that exist and on the perceptions that people have of who their trading partners are and what they stand for. Deepening divides along political, cultural, or identity lines within this society, in the societies, are being amplified. And this is something that I'm repeating because this is something that we have to also keep in mind when we are working on international relationships. This corrodes public discourse. It weakens crisis response and is propagated because, again, as I said, of the technological changes that have taken place, such as, again, social media proliferation and the cross-border impact of these social media changes that are being introduced. These developments in turn heighten the risk of increased digital distrust and dilution of ambitious socio-environmental decision-making amid shifting short-term priorities and increasing nationalistic narratives. You know, in a situation where people or groups of people go into a defensive mode, the first thing that happens is that they withdraw into clusters, into groups that are more akin to what they believe. And that is how nationalistic perspectives sometimes tend to get sharpened and often distorted. So that is also something that we need to keep in mind when we are talking about the geo-economic and geopolitical changes that are taking place in the world today. The new changes visible in global landscape are a pointer to the transforming geopolitical and geo-economic reality. These represent sparks, but these are also sparks. There are sparks that we can see in this accumulating gloom, if I may use the word. There are opportunities that come up, and as they say, with every challenge, there is an opportunity that is correspondingly there. If we look at how the importance of geopolitics is impacting geoeconomics, you can well imagine that trade between neighboring countries sometimes is something that is preferred. The access to neighboring countries is something that is a preferred mode of transaction. But sometimes it doesn't happen. There are barriers to this in terms of either entrenched political opinion or because of any other factors that come in the way, maybe perceived levels of fear, insecurity in terms of what people would have to face. Now, when we look at all these changes that are occurring, I'd like to take a specific look at what Afghanistan represents and could be facing. Afghanistan is a very unique place. I mean, it has historically been recognized as the graveyard of empires. A lot of people have tried to come into Afghanistan. They've tried to capture Afghanistan, but they have failed. And it is also a fact that it is sitting at the crossroads of trade and commerce between very important segments in this world. Initially, if you look at it, the trade from India to the Middle East and then further on to Europe, or from China, or then Cathay, to Europe, they all sort of transited through the Silk Route that went through the Afghan territory, what is today Afghanistan, and the trade between India and the Middle East, or rather the Western Asian countries, also transferred through Afghanistan. In fact, the Indian experience with the Persian Empire of the earlier times was largely rooted through the Afghan nation, and geographically, therefore, this country has been sitting at the crossroads of a large number of trade channels, cultural channels, and also of historical overlaps. Looking at the differences and similarities across the region, we see how geopolitics determines the use of power to make economic alliances and therefore of economic consequences. One big similarity that we see in looking at the world around us is that most countries are trying to balance the relationship in a multipolar world with the existing poles of China, US, and Russia. So there is some kind of a balancing that is sought to be done by many of the countries, because this is an area where there is a lot of emerging change, but where the multipolarity is not being substantially supported by the multi-institutional strengths that we have. In fact, there's a whittling down of multi-institutional strengths even as multipolarity is growing, and that is going to create difficulties in the years ahead unless we can work out some kind of a reconciliation. As an example between the overlap of multipolarity and single polarity, or a single focus, you can have the example of India itself, which works very closely with the US in terms of strategic tie-ups, in terms of security, but also has a huge trade ongoing with China and to an extent with Russia. So there are these kind of contradictions that are also there, and balancing these contradictions becomes sometimes a major challenge in relationships between nations when we are now looking at a more and more focused way of what is national interest. If you look at the Belt and Road Initiative of China, then transferring through Pakistan has given them an access to the Arabian Sea, which they wouldn't have had earlier. And therefore, the Malacca Straits, which could have been a bottleneck for them at one time, can now theoretically be avoided to the extent that they are able to move their goods and trade through Pakistan and into the areas that are on the warm water ports. There is also a big difference here when we look at Afghanistan in this context, because Afghanistan has faced instability in the recent past. The Taliban government is not recognized by many countries. So the Emirats that have been established there are there as a governing body, but not really recognized as such by a large number of countries, which therefore hampers what banks need to do in being able to build channels through which trade and finance can flow. It is a very important factor to believe and accept is that without money, very little can move. Money is the prime mover of the economy in most countries and in most regions. If we look at the example of, say, countries like Kazakhstan and Uzbekistan, and contrast it with the examples of available from Afghanistan, what we see is that because of their more stable outlook, the fact that they have a greater level of acceptability, they've also been able to partner in a number of multilateral relationships which have benefited them. Whereas Afghanistan, because of the political constraints that it faces, has had difficulty in that particular respect. Geoeconomics is about how countries use money, trade, and resources for power and growth. In fact, in the definition of comprehensive national power, and this is something that came up from the research side of the US international operations at one time. The comprehensive national power is not just the power of the military that a nation may have. It is not just the power of economics or the size of their economy that a country may have, but it is also the legislative power, it is also the capacity to be able to address the internal needs and external requirements that the country is able to follow. And there is an indexing that has been done on that score. And it's a very difficult concept to actually index and to quantify, but it helps us to understand how difficult it is to be able to work together in an environment where we are all looking at maximizing individual national benefits versus what the global narrative should be. One similarity is that all countries are trying to connect to global banking systems, to global trading systems. But their institutional strengths are getting whittled down. For instance, the WTO, which at one time was supposed to be the arbitrator between a large number of differences that people could have or nations could have, is today not being able to deliver the results the way it was expected to. Similarly, the International Court of Justice has not been able to develop and deliver the outcomes that were expected of it. So I think as we go forward, some countries that have stronger internal institutions and systems are going to be able to make use of the changes that are coming up, and therefore I think this is something that we need to realize and understand. We also need to see how local groupings of nations are going to impact the future growth of those particular nations. For instance, if you look at ASEAN, ASEAN has shown remarkable growth, and particularly in the last few years. Today they are growing at about 4%, which may not look very large in terms of the actual growth numbers, but when you look at it, that it is a composite of a large number of economies, some of which are large economies, strong economies, and some not so large and not so strong. I think the overall aggregate expectation of 4% growth is something that is worth considering and worth acknowledging. Today, they have been able to grow to close to about $4 trillion in terms of the aggregate economy, but that is something that is very interesting. Partly due to perceptional issues, unfortunately, Afghanistan faces constraints in deriving the benefits from regional and potential national growths. And therefore, some of these countries cannot actually interact as much with Afghanistan as they could for mutual benefit. Central Asia has also become a very edgy place to be in, particularly with the Russian-Ukrainian war that is there. And as a consequence, the interactions that are there and the fact that Afghanistan, with its unique position, could have played a role between trade connecting the Central Asian republics with the South Asian republics is not something that is likely to get fulfilled very shortly till this crisis point is resolved. Looking forward, we have a number of issues that we have at hand. We've not talked about Gaza, we've not talked about Iran, we've not talked about a lot of these other flashpoints that are there in the world because there's paucity of time. But then, as the world keeps on changing, opportunities also keep on arising. And that is something that we need to see. And we have to look at trade as one of the major factors that will keep the world moving together in a single direction, or at least an aligned manner. In fact, I'd like to conclude with a reference to a statement that was made that trade is the best antidote for wars. And in the words of the French economist Frédéric Bastiat, if goods don't cross borders, soldiers will. So I think we have to work on those lines, and let's see how it works out. Anyway, thank you very much once again. Jeffrey, you gave me this opportunity, and thank you very much.
Very cogent analysis. At the BAFTA meeting yesterday, they had a panel on a similar kind of discussion about all these sectoral changes that are going on globally. And one of the panelists said, we should have called this panel Tariffs, Trade, Transportation, and Trump. So it's a lot of change happening at the same time. So thank you all very much. This panel is now relieved of your duties. You can grab your seats, and we will start with the next panel, which is waiting for us, I'm sure intensely, since we're a little bit behind schedule due to the later start this morning. Could the panelists come up, please? I'm putting out your name cards. And then we have two panelists that are also joining us. Mr. Haidari, you'll join me up here. And we have two panelists that are joining us from the Zoom as well. Mr. Ziuddin Haidari is from First Microfinance Bank of Afghanistan. He's their president and CEO. He's going to take on the topic of Afghan bankers' perspectives on why increased regional correspondent banking is happening more and more with banks in Afghanistan today. Our second speaker will be Mr. Mirshad Kurbanov. He's the first deputy director of the Agency for Government Efficiency in the Office of the President of Uzbekistan. He'll join us via Zoom. His topic is improving both Uzbek and regional corresponding bank relations and how that will strengthen Afghan commercial banks, and for Uzbekistan especially, improving bilateral trade and trade finance with Afghanistan. Lastly, we'll hear from Ms. Nadine Shihadi. She's the World Bank Afghanistan Senior Financial Sector Specialist dealing with banking. She's going to break down for us the World Bank 2026 Afghanistan programming and some other updates as well, and then we'll have time for a few questions after it. But we'll start with Mr. Haidari. Sir, to you.
Thank you, Jeff. Good morning, everyone. This is Ziuddin Haidari. I'm the CEO of First Microfinance Bank. We are part of Afghan Development Network. We have been in the country in Afghanistan for past over 2 decades, mainly in microfinance sector, but we are a full-fledged commercial bank. I think the topic of increased regional correspondent banking involving Afghan financial institutions is very critical and very important one. I think from our perspective as an Afghan banker, this increase in regional correspondent banking is not new. It's recently driven more by the geopolitical situation in the region. But if I start with the historical context of regional correspondent banking in Afghanistan and with the countries in the region, I think historically Afghan banks were heavy relying on the Western banks, mainly in Europe and US for US dollar and euro clearing. But after the political transition back in August 2021, there was problems with the Western banks, especially due to the country recognition issues, freezing of Afghan assets, and which created, in fact, pressure back in 2021 and 2022. But I think the Afghan banking sector handled this situation very well, and 2025, the sector was in a much better position than it used to be in 2024 and 2023. As I mentioned, the geopolitical situation recently has impacted the regional correspondent banking, the international correspondent banking for Afghanistan, but I think the regional correspondent banking was even there before political transition. The banks were working with the regional banks, with especially the trade partners of Afghanistan, in local currencies, and it continues to work. And I think it has helped the businesses so far. When it comes to regional banking, I think for the banks in our region, they have good understanding of the general licenses which were issued for the Afghanistan, especially GL 14, 15, 16, 19, and 20. They have very good knowledge about these general licenses which were issued by OFAC and US Treasury, which allows the international banks to work with Afghan banks. So for any regional bank or for any correspondent bank, I think two questions are very important. First, what is the risk level to work with Afghanistan? And what is the volume of business? And banking is all about business. So I think these general licenses gives the opportunity for regional banks to work with Afghanistan. Afghanistan as a country is not as under sanctions, so there has been always this misperception about Afghanistan. But I think if we visit the OFAC or US Treasury website or FATF guidelines, there is no such sanction on Afghanistan. And there are general licenses which allows regional banks to work with Afghanistan. So this was the case before political transition, and currently the regional banks, I think for last 4 years especially, they have been able to manage the risk. They have been they have taken calculated risk. It is not just that they have been working with every bank, but they have been doing a lot of due diligence. And from Afghanistan, the banks have been also strengthening their compliance system and programs, because as the situation changes, they have to be also well prepared for the level of due diligence that they will face from the regional banks. So I think the banks, especially in the Western countries, have been extremely risk conscious. But there is opportunity. We have almost $12 billion annual imports and almost $2 billion exports from Afghanistan. So they have been taking the advantage of this opportunity. And I think some of the other speakers also mentioned about geopolitical situation. So this will continue to impact and shape the regional correspondent banking in Afghanistan. And banks in Afghanistan, especially central bank, is pushing Afghan banks to meet the international compliance standards. There are special audits. There are mandatory independent audits by external audit firms. And I think from my perspective, the digital transformation or the financial inclusion roadmap and strategy, which is developed by the Central Bank of Afghanistan and is going to be implemented by banking sector in Afghanistan. It will help the overall compliance in Afghanistan in coming years, and there is an opportunity for the correspondent banks to do business with Afghanistan within that parameters, within those general licenses that is issued by the OFAC and US Treasury. With that, I think there are challenges also. We have to also understand the challenges. There is always cost for transactions with Afghanistan, but I think there is also business opportunity. So with that, with that I conclude my remarks, and I would like to thank the Afghan American Chamber for this opportunity. It's very timely in the first month of the year, and there is a lot of opportunity for the banks, especially in the region, to work with Afghanistan banking sector. Thank you.
Thank you very much. We appreciate that. Excellent comments. We're now going to go on Zoom to Nadine Shahade from the World Bank. Nadine, you are next. Can you hear us okay? And go ahead and start your presentation.
Thank you. Do you hear me fine?
Yes, we hear you fine.
Okay, thank you. Assalamu alaikum jami'an. Thank you for inviting me. Thank you, Jeff, for the invite and for the organization of this important event. I'm sorry I could not be physically in person present with you. I'm just back from a trip to Kabul, where I have had the pleasure of meeting a number of the banks present here, a number of the CEO, the Banking Association. And so I will cover essentially two parts. One, a bit of an overview of where Afghanistan stands today, including on the financial sector, and what the World Bank is trying to do to support the financial sector overall. I think, Jeff, you already mentioned we are witnessing an increase in GDP. Our projections show something close to 4% in 2025, which is good. But indeed, this is masking the fact that the population is actually growing faster than the economy because of the number of returnees that's quite significant from Iran and Pakistan. And so the GDP per capita per se is actually falling by about the same number, 4%. And so the economy today is simply not producing enough to be shared among all the population. But it is improving, and we do see a lot of potential going forward, notably in terms of export. Now, the one thing that's been great over the past couple of years is the stabilization in prices and the relatively low inflation, only at around 2%, which is one of the lowest in the region. And so this has actually helped improve the import conditions notably, and they have supported households and businesses to live in a bit more of a predictable economic environment. And that's been particularly important as a cushion for the lower income households. Now, when we take a look at the domestic revenue mobilization, I think everybody knows, and we're seeing it globally, and we just heard about the geopolitics. The external aid has dramatically declined over the past 5 years. This has been slightly offset by better and higher fiscal collection that has reached today 17% of GDP. But it is not sufficient, obviously, to compensate the decrease in external grants that used to stand somewhere close to 40 billion and that are now close to 12 billion. And 12 billion, for a reminder, is the figure that Ziauddin just mentioned, and that is the imports to Afghanistan. And so this shows that there's a lot of potential for work, especially for banks, for correspondent banks around trade finance. So $12 billion in terms of imports and about $2 billion of exports. And what we would definitely like to see moving forward is an increase in the exports from Afghanistan to actually close that gap between the two figures. And so if you take a closer look at that, at the trade balance specifically, you would see that a lot of the exports are primarily regional. They go a lot to India, that's about 40%. They go to Pakistan, that's a little bit less than 30%. And then to Uzbekistan, Kazakhstan, UAE. And so the import, similarly, is also regional. Iran, UAE, Turkmenistan, Pakistan, etc. And so when you take a look at that, you kind of see the importance of maintaining regional correspondent banking, but also international ones, since you still have about 75% of those trade flows that are actually done in US dollars. And so the composition of the financial sector in Afghanistan, I would say, is fairly diversified. You have banks, you have non-banks operating. It has the potential to be very dynamic moving forward. Now, it has been historically and still is relatively small compared to the GDP. We're speaking collectively and quoting, ABA figures, a sector that's about 17% of the GDP. And the financial intermediation is actually very small. That said, the sector itself is very significant in its outreach. This is a sector that is a very large employer in Afghanistan, close to 10,000 staff. We're speaking about 4 million depositors. The number of borrowers is relatively small, reflecting the relatively small financial intermediation. Now, indeed, everybody mentioned that the past couple of years have been difficult. There are issues in collecting, especially the legacy portfolio, with relatively high non-performing loans. And capitalization stands still high, a lot thanks to the forbearance measures that were put in place, and typically the absence of the need to provision for the relatively high non-performing loans. But what we have seen in the past few years is that the key figures have been improving for the financial sector overall. The number of depositors is growing. The number of borrowers, especially for the micro and small enterprises, has been growing. And the key figures have been improving year on year, including on the profitability. And so, of course, how things will play out in the future is yet TBD. once institutions have to provision again, it might have an impact on the overall balance sheet, but we do want to focus on the opportunities in this event. So when you take a look closer at the international payments ecosystem, you kind of see four main channels. And so one of them, and this is the topic of our event, is the correspondent banks. The second one, we've touched upon it briefly in the opening remarks, is the remittance services. Afghanistan is a country where you do have very significant remittances coming in, although this is on a slightly declining trend since a lot of the Afghans living abroad are actually returning today. But you still have a very vibrant economy around that. You do have incoming physical cash that is coming in through the United Nations. And the four main channel is the Hawala transfer system. And from our conversations last week in Afghanistan, it was very clear that the trade is dynamic. There is international payments, but a lot of it today is happening through the money service providers and the hawalas rather than through correspondent banks, which raises its own issues. They were mentioned, notably around transparency, integrity, etc. And so this need to actually move towards banking channels for larger transactions that is more robust, that is more compliant, and that is more transparent is definitely both a need and an opportunity today in Afghanistan. Now, historically, even before 2021, the level of access to financial services in Afghanistan compared to peer countries from the region, since this is a country that is very much anchored in its region compared to Bangladesh, compared to Pakistan and other countries from the region, the access to financial services has always been lower. So it is great news to hear that the central bank is moving forward on national financial inclusion strategy. This will improve the depth and breadth of the financial sector overall, and primarily will probably ease some of the liquidity tensions that are here today. And that were the primary reason for some loss of trust in the banking sector, and from this movement that we have seen over the past few years of transactions, including trade transactions, moving from the banking sector to the more informal hawala system. So in terms of what the World Bank projects in the financial sector are about, we have been for the past couple of years focused on supporting foundational access to finance for micro and small enterprises. So we've had a small pilot operation for the past couple of years, primarily looking at the microfinance providers and helping them rebuild their capital. We've also, through that, helped them disperse loans while working at the same time on the demand side and getting micro, small, and medium enterprises to become credit ready. In the next phase, and what we would like to do moving forward, and we've again discussed this with a number of our stakeholders last week in Kabul, is to actually focus on developing full-fledged and as much as we can the financial sector as a whole, for it to be able to refinance the economy on the one hand, and to be able to resume some of its traditional roles, hopefully including around trade finance. And so we're coming in with a series of proposals and activities. One of them is to work a lot on technical assistance to strengthen the capacities of the financial service providers. We did hear digitization. We did hear Sharia compliant finance. We did hear as well compliance, although we hear it is strong, but the perception, especially among international actors, is not there yet. So the question will be around how do we actually bridge this lack of trust that comes from lack of information. The second element that we're going to be focused on is de-risking. This is a country where it's been historically difficult to do business, primarily for lack of political stability. And so being able to de-risk the financial transactions for us holds the potential of expanding the financial sector to refinance the real economy. And the last element that we want to focus on, and that was also mentioned a bit earlier, is digital payments, especially the ones that are private-led. So I'll stop here for me. Hope you've heard me well enough, and happy to take on questions. Tashakkur.
Great.
Over.
Thank you, Nadine. That was very comprehensive and greatly appreciated. We're now going to go to Mr. Mirshad Kurbanov in Tashkent by Zoom for his remarks, and then we'll have a few questions, and then we'll take our first networking break for coffee and some nibble food. But first, Mirshad, I wanted to introduce you because this way, you are extremely important to us because you are a former Chamber of Commerce leader yourself in your home city. Was it in Kalshi? Was that correct?
Yes, exactly,
All right.
exactly.
Thank you so much. Go ahead, sir.
Thank you, dear participants, dear colleagues. It is my great pleasure to be here together with you from Tashkent. And thank you for invitation. Thank you for inviting. Yes, from my previous experience within Chamber of Commerce and Industry of Uzbekistan within the Kashkadarya region, which is more close to Afghanistan geographically, I have seen firsthand an immense commercial will and potential by businessmen to trade with Afghanistan. Our business community is fully ready for this in Uzbekistan. However, time and again, this potential collides with stark reality, unfortunately. I should mention it. The absence of reliable direct banking channels is currently like a challenge for both sides entrepreneurs, for both sides businessmen. So while let's say our traders shake hands, then our banks often cannot send the payment. That is the real challenge, and that's why I'm here today to argue that addressing this specifically by foreign strong correspondent banking ties between our nations, our businessmen. It's not just, and it is not just a financial issue. It is the single most critical step to unlocking prosperity we all seek in both countries and also in Central Asia. Then also I was going to mention that here is the common issue. Contract. Let's say the goods are ready. We have order. An Uzbek exporter has order and has already secured the order from Afghan partner, and then also goods were ready. Then the contract was signed in majority of in majority of cases. Then suddenly there will be like a prolonged silence. The banking delay. It is mainly connected with the banking delay. Then in this regard, the weeks would lost navigating indirect payment routes. That is the most challenging situation. And here they are using third countries, and it's this method, this mechanism, eroding trust first of all between two partners, and also it just decreases profit margins, which we should take into consideration, unfortunately. And unfortunately, this story is not just an exception. It is currently it is the norm. Today, unfortunately it is the norm between trade of between two countries. And today we have the chance to change narratives. And this, before also I appreciated Mr. Jeffrey's initiative, Chamber's initiative to handle this issue, because it is one of the main hurdles for developing regional connectivity in Central Asia, in broader Central Asia. And from my side, I was going to mention it. And please, if you have some questions, I'm ready here. Thank you again.
Thank you, Mirshad. That was great. We're going to come back to you in a second on a key question, so stay tuned on the Zoom for us, please. We now want to open up the floor if there's any questions or some comments. If not, I will jump in and start with one myself. Maybe first for Nadine. Nadine, you mentioned in your talk, and this has been an intense issue of discussion with ABA whenever we meet with their board, and that is the issue of needing to improve the trust of everyday Afghans in the banking system inside Afghanistan. Since the days past when that trust was broken, but now the systems are better. We have better bankers, frankly, and more honest bankers running the system today. How can the World Bank help the ABA and the members of Afghan banks to improve the confidence of everyday Afghans in their system? Is there things specifically that the World Bank or IFC could do, or would you look to ABA to lead and then you would join in partnership?
Thank you, Jeff. Very important question. I am Lebanese, so I can speak a lot about trust in the financial sector. And I think the first answer is, stability, clearly. The one thing that everybody hates, especially when it touches depositors, is uncertainty, and is the lack of available liquidity as number two. So indeed, 21, 22 have been hard on the banking sector in Afghanistan. We've seen a liquidity crunch, so although the balance sheet actually showed high figures, the simple lack of availability of physical bills has been an issue. And so this, I would say, like in any financial sector, takes time, and trust comes back in time. And the infamous proverb is that, it takes years to build, but it takes a fraction of a second to destroy. And so this is a lot of hard work. And the hardest work is actually done by the banks themselves in being there every day, in providing excellent customer service, in making sure that there is liquidity available. So there is also a role for the policymakers in that, and that's in any country. But that said, what is truly in the hand of ABA, its members in Afghanistan, is this proximity to the clients, is offering a service that actually works, that works all the time, that works without disruption, and that works with high quality. And so we have had partners through our projects in the past. Our IFC colleagues have also investments in some of the banks, and we are collectively trying to improve the banking and the overall financial sector offering on the one hand, and second, overall experience for the clients. And so I did mention the existing project that has also helped with funding directly through recapitalization of some of the institutions. And we think the combination of those interventions leads to a more stable banking system. Now, what we would like to see next is going a step further, is providing more products and services that are adapted to the needs of the Afghan population. And this is key for trust. It's like, banking and financial sector is a little bit more difficult than other products, but it's no different at the end of the day than purchasing any other good or product. You want it fast when you need it, you want it of good quality, and it needs to meet your need. And what's great in Afghanistan is that you have a huge diversity of actually providers. And so you have the ability to meet the different needs of the different segments of the populations. So we are here to support the overall sector, definitely through the ABA. And again, I bring a regional, global expertise, but I have, as a Lebanese, lived in the past few years in a very severe banking crisis, where you see that the difference is actually made by the institution themselves and by how they actually treat their clients. So we'll be here to support the ABA and all of its members going forward in providing this excellence in financial service to the Afghan people and businesses. Over.
Thank you, Nadine. I think that's exactly what I think ABA is planning to do. They will lead, and they will look to have the bank support as they can as they do that initiative. I'd now like to go to Mr. Haji Sadarkil, who has a question and comment in the audience.
I have a question from Mr. Murshid, because last year in 2025, from Afghanistan, people including business community, he visit Uzbekistan, 500,000 people. Now, what the Uzbekistan government, he can help us, our private bank, he help us, our private sector bank, because we are neighbor, we are have border, every day we are going and coming back. What you can help, what your government can help our private bank? Thank you.
Mirshad, did you hear that question okay?
Yes. I appreciate, Assalamu alaikum again. I appreciate Mr. Haji's question, and we frequently talk with chairman of business chamber Dubai, with Mr. Haji, and 2-3 times only last year we met in Tashkent, and he is the true leader of business, which I met in all over the world, let's say, who is caring about Afghanistan, who is caring about mutual trade, who is caring about increasing trade turnover between two countries. And Mr. Haji, if you are also well aware that since your last visit, we are closely working on it to finding some solutions on banking sector. And here, such initiatives will be proceeded in the coming years, and we have several initiatives. And from my current position, I was newly appointed, and here I am also searching some solutions, because it will bring such kind of prosperity, trade between two businesses, businesses of two countries. Businesses of the two countries, because here is the demand is real. From Uzbekistan textiles, let's say agricultural machinery, to Afghanistan, and from Afghanistan minerals and dried fruits. And why not we should not use this opportunity, this capacity. That's why we are searching for. And here I will restrain myself from sharing some government official government position, because I'm not mandated on it. At the same time, we will work directly with the chamber, with your chamber, individually with the entrepreneurs from Afghanistan, from my side. And here is my role as a connecting bridge between businesses of two countries. Like banking sector is the main hurdle. There is still some areas in which we should work together, which you raised by your side, and we are working on it, still working on it. Thank you so much. Thank you.
Thank you, Mirshad. Just one follow-up question for you. So on our recent trip to Mazar, Termez, and Tashkent, you described a very interesting strategy that the Uzbek government is pursuing in terms of both economic growth and improved trade among your regional partners, especially Afghanistan. And that was the link between Chabahar port in Iran, which we believe is under continued waiver, but we need the president to actually issue that waiver again to let everybody feel safe so that they won't be sanctioned. You linked the use of Chabahar Port as a northern route to Tashkent and to Uzbekistan through Termez possibly, and then on all the way to the Chinese border, and that this is we say in business in the U.S., this is the long play. You have planned for it. You've invested heavily in Termez. I've seen it. What do you hope to accomplish that the banks, Afghan banks, could perhaps help with, either in opening banking offices in Termez or along that supply chain route that you're building now? Where do you see that going? What is the plan?
Here is the official position of official position of Uzbekistan is to develop it and not connect to one area, because if we just connect the all trade in one area and direct our main focus in one region, that will not bring expected results, because it involves to develop, to use the capacity of all regions along with that corridor. The same approach is using in the other trade routes which are connecting us from outer ports. And here is still I will restrain myself from official position of government, because in my current position, what I tell should be received from mandate from my government. That's I'm not fully mandated of providing you such kind of position. At the same time, my personal point is our government's view is to develop all regions or along with that trade routes, and use the capacity of them for developing bilateral trade. Thank you.
Thank you. That's excellent. So there's a role for Afghan banks in the future of this trade route. It's a trade route based on road, rail, and air. I've seen the facilities. The Uzbeks are investing in this, and it's going to be really incredible within 10 years. So, all right, we're going to stop now. It's right at 11:30. We'll have a 15-minute networking coffee break, and we'll come back at 11:45. Can I hear a round of applause for our speakers? Thank you.
Thank you.
Thank you. All right, could we ask panel number 2 to take the stage? Mr. Yousafzai from Azizi Bank, Mr. Manpreet Singh from the India Chamber, Mr. Sunil Pant, and Mr. Abdul Wasey Hakiki from Turkey. Oh, and we're going to have an opening comment from Mr. Haji Sadakel.
Assalamu alaikum. Welcome to Shirina from Dubai Chamber, and she's always busy in Dubai Chamber. She come today for our conference, and thank you for Shirina to attend our conference, and she's always help us here in the business community of Afghanistan, which is living in UAE. And also I'm the Kirkuk board of member of Kirkuk board of Afghanistan. We have yesterday and the day before yesterday we win the Kirkuk from West Indies. Today is the final match tonight. If anyone come to the match, I will invite him. Thank you.
So this panel will be working on the topic of regional corresponding bank success stories in Afghanistan and with Afghanistan. Our panel moderator, Mr. Yousafzai, is going to be speaking about Azizi Bank's role in with the corresponding banks in the region, and going into 2026, they have some planning. Panelist 2, Mr. Manpreet Singh, has flown in from Delhi. He runs the India Chamber of International Business. He's going to address India's corresponding bank success and how they view Afghanistan as critical to India's strategic planning for trade finance and Chabahar port, which we talked about briefly on the last panel. Mr. Sunil Pant will then speak on India's corresponding banking success regionally and how he thinks Afghan banks today can go forward into 2026 with more and more India trade finance through the corresponding banks. And we'll end on Islamic financing with Professor Hakiki. He's a professor in Turkey. He's going to address not only the Islamic banking and finance, but he's going to make specific recommendations on how to improve relations with the regional Islamic financing institutions. And with that, I'll hand it off to our moderator and first speaker, Mr. Yousafzai. Thank you.
Thank you so much, Mr. Jeffrey, for the support and coordination for making this event possible. I hope that the end result of this conference provide confidence to the international communities, to the global financial market, to support and extend support the Afghan payments and banking sector of Afghanistan. Because we are seeing that the international financial market are always looking for secured financial stability, and the correspondent banking will be the key area for this stability as well. Thank you so much, Mr. Jeffrey. Distinguished panelists, respected guests, and ladies and gentlemen, it's about afternoon. A very good afternoon to all of you. Thank you so much for joining us this session. It is a great honor for me to moderate this wonderful and important panel discussion on international correspondent banking, bank success stories from Central Asia and South Asia. This topic is highly important and relevant at a time when regional connectivity, cross-border trade, and trusted financial linkages are a key to financial security of any country. We do understand that correspondent banking remain the backbone for every financial system of every region, and more specifically for Afghanistan integrations with international financial market. It enables trade settlement, remittances, access to international currencies, and integration of local economies into the global financial system. For emerging and frontier markets, strong correspondent banking relationship are the critical necessity for financial stability as overall. So please allow me to briefly share the experience of Azizi Bank and how we have worked hardly day and night to build the trust and maintain a good correspondent banking relationship with the with these regions, Central Asia, and with the Middle East and with the globe. Despite of several challenges that we have and we had before. I can probably state that Azizi Bank is one of the largest and leading commercial bank in Afghanistan, covering the overall geographic of Afghanistan. We have over 1.5 million customers, including corporate, retail, and individual client. Over the years, we have focused on credibility, compliance, and regional engagement. So I can say that as a result, we have successfully established and maintained a good corresponding, direct corresponding banking relationship with the key regional markets, notably India, Uzbekistan, Kazakhstan. So through our correspondent banking network with local partners bank in these countries, we are able to provide our customer with direct access to local markets, faster settlement, improved transparency, and stronger support for regional trade and investment. Behind these direct corridors, Azizi Bank has developed a broad correspondent banking network that connects Afghanistan to the rest of the South Asia and Central Asia and to the rest of the world through reputable financial institutions in the Middle East as well as in the Europe. This diversified network enhances resilience, manage risk, ensure continuity of services for our customer, even in the complex operating environment in the country. Our objectives has always been clear to act as a reliable financial bridge between Afghanistan and the region and to support the legitimate trade, business growth, and economic integration as a whole. So by having this vast network, Azizi Bank is able to serve its customer with more than 10 international currencies. For instance, USD dollar, euro, British pound, Turkish lira, UAE dirham, Indian rupee, Chinese yen, Kazakhstan tenji, Bahrain dinar, we can say, Saudi riyal, and so on. So this multi-currency capabilities allows our corporate and retail clients to conduct international financial transactions or trade, we can say. They can easily manage their remittances and access to the global market efficiently, competitively, and securely while being fully compliant with the international standards on regulations on AML safety regime. As you might have noticed earlier, back in 2022, or starting on August 2021, when the ex-regime has been collapsed and the Islamic Emirate has come to the power. In that situations, most of the sectors in Afghanistan has been adversely affected, and specifically the banking sector in Afghanistan. While the banking sector of Afghanistan, within these 4 years, hardly struggled how to bring confidence to the international community, international donors, and specifically to the international financial market and correspondent bank to rebuild the trust and maintain the correspondent banking relationship as a whole. So by hardly struggling day and night, we have given them a surety and confidence by considering the good corporate governance, risk management structures, a robust compliance system have been implemented in the banking sector in Afghanistan and specifically in Azizi Bank. So by considering these all measurements and the key area, that is why we have built a good correspondent banking relationship with these regions and with the globe as well. But still the bottleneck remain with some of the international market or the big player in the globe. Like, for instance, I can say that the Citibank and we can say the other big player in the market, still they have some doubt how to support Afghan payments in this regard. By having this conference and the end result of this conference, I'm sure that it will give them some clarity and clear their doubt to support the Afghan payments. Also, I can say that in that time when the humanitarian aid had been flowed to Afghanistan, mostly it was happening through, I can say, like BB dragging cash load into the airplanes. And nowadays, we are seeing that, and also our CEO of Ghazantpur Bank has cleared that the inflow of funds to Afghanistan through humanitarian aids are happening through correspondent bank. Means this is the good part, and strategically the banking sector as a whole are working in this regard. Before I go deeper into the discussion, it's my privilege to introduce our distinguished panelists whose collective expertise can greatly enrich today's session. Though it has been introduced by Mr. Jeffrey, I will again introduce. First of all, I would like to introduce Mr. Manpreet Singh, the Chief Executive Officer of India Chamber of International Business, Mr. Singh brings valuable insight into India's role in regional trade, investment flows, and international business cooperation. Next, Mr. Sunil Pant, a respected geostrategist and regional banking compliance expert. Mr. Pant will share perspective on geopolitical realities, regulatory expectation, and compliance challenges that directly influence correspondent banking relationship across our region. And finally, Professor Abdul Wasi Haqiqi, a renowned Islamic banking expert who will shed light on the growing importance of Islamic finance and Sharia compliant banking in cross-border and regional financial systems. Before I request Mr. Manpreet Singh to share his thoughts, I would like to inform the audience that contrary to the popular perception, Afghanistan has a dynamic commercial banking market with direct access with SWIFT network and strong compliance structure, pervasive all through the banking structure and scenarios. So, ladies and gentlemen, the key message I would like to emphasize today is that the sustainable correspondent banking relationship across the world by Afghan banking sector are achievable. They require transparency, strong compliance, sound governance, and a clear strategic vision. I could say that Azizi Bank's experience demonstrates that even in the challenging environment, commitment to international standards and regional cooperation can deliver meaningful results. So I look forward to a rich and insightful discussion with our esteemed panelists. Thank you all. Thank you so much. Now I will call upon Mr. Manpreet Singh to shed light on India's correspondent banking success and how Afghanistan is critical to India's strategic plans for expanded trade finance and Chabahar port use in 2026. Though we are noting that the commercial ties between Afghanistan and India is enhancing day by day.
Thank you, Khanulaji. It's a pleasure and honor to be here today. And I would like to thank the Afghan American Chamber of Commerce, the Afghan Bank Association, and Jeffrey, of course, who's known to me since a really long time now. We've been working with Afghanistan since a really long time. I think it's decades now. And we, as a Chamber of Commerce, are present in about 42 countries globally. We have been working with Afghanistan, for Afghanistan, through various countries. And it's a long association. That's about me personally and the Chamber of Commerce. But when we talk about India and Afghanistan, it's a relation of centuries. And that is something that we have to always keep at the back of our mind, that in the last centuries, if we talk about, there have been all the possible things that could have gone wrong, have gone wrong. And in spite of that, we are still here today. We are still working together. We are still doing business together. So geopolitics will be changing, will get riskier, will get murkier, but that will not stop business. This is what we have to keep in mind. Businesses always find a way, irrespective of the global situations, irrespective of the governments, and the businesses will find a way. This is what we have to all keep at the back of our mind. We are all going to eat food, we are all going to wear clothes, whether it's from one place or the other. And with that, trade comes into the picture, banking comes into the picture. Some traders might go, some might come, some banks might go, some banks might come. But when we look at the bigger picture, that's what is important. And we have to sustain ourselves. We have to be dynamic, we have to keep changing. We have to ensure that we are part of something that we can pass on as legacy to our children. That is what is most important. When I talk about correspondent banking, a little bit of information on India's robust banking system. We have the UPI, which is now globally famous. We are doing, as of last year, about 200 billion transactions. Even the size of those transactions, the number is phenomenal. You have to look at what goes behind it, the technology, the infrastructure, the people, and what the government of India has facilitated. This is something that we have to keep in mind, and this is what India can give to the whole world, including Afghanistan. When we're talking about correspondent banking, we know for sure that the world now does not need a correspondent bank. It needs correspondent banks in countries. It's no longer that, oh, I have one correspondent bank in one country and that's enough for my business. The leverages have now changed. Multipolarity is a normal now. It's no longer bilateral or multilateral. It is geopolilateral, if I might choose to call it. So this is something that we all have to keep in mind. We have to keep in mind that for an Afghan bank, you have to be present in at least 100 countries around the world. It requires finance, it requires partnership, it requires manpower. That is something that you will need training on, technology on, and that's what India can give. That being said, India's banking system is very robust. We have banks and correspondent banks present globally across territories. So this is what we have to keep at the back of the mind when we're talking about a long-term collaboration. India's partnership with Afghanistan is critical. By critical, I mean it is not one way, it is a two-way street. We are both interdependent, and we have to keep in mind that the banks are here because the trade is here. So as a bank or as a banking institution, we have to ensure that trade flourishes, banking flourishes. Also, we have to keep in mind that trade does not depend on the banks anymore when we look at what is happening around us. Of course, there's Hawala systems, there's crypto, there's blockchain. It is how you are adapting today that will change everything. Either you can adapt to blockchain and build upon it for the entire banking system, utilize it. Although, of course, everything is risky. It's not that there is no risk, but the higher the risk and the higher the reward. And that's what it is. So we find banks that have invested in commodities, in physical commodities, they have grown a lot in the last 1 year. So it was a risk, it was a calculated risk for some banks. Others kept on thinking that, okay, what if? There's always a what if in business. When we talk about connectivity, and when we talk about what connectivity is going to be coming in the next 2 years, I think the only connectivity is uncertainty. That nobody can take away from you, and change is going to be the only constant. When we talk about change, well, there's no choice about it. We really don't know how the world will play out. We each have to play our part in that, and we have to ensure that our stakeholders are taken care of. For a bank, it's its depositors, its investors, and its clients. And when we talk about correspondent banking, without them, I think the world will become a much troublesome place. So it's your partnership with your correspondent banks everywhere in the world that will make a difference. In fact, when you look at the trade that is happening with Afghanistan today, it is majorly was happening through Pakistan, which is changing again every day. It is happening through Turkey, may or may not change. It's happening with India. It's happening through Uzbekistan. But I have been to Termez personally. If you say that, okay, it's a nice connectivity to have in today's time, it's an opportunity. With Uzbekistan growing, infrastructure growing, the road transport, rail transport growing, it's very nice. The Mazar-Termez connection is amazing. But do you really think that entire Afghan trade can work through Termez? Like we heard from the Uzbeks, you cannot depend on just one mode of transport or one port or one point of exit. You need multilateral. We don't know what will happen with Iran or Pakistan, but that does not mean that you close your avenues. I have personally a belief saying that if you are there where nobody is going today, the day that opens up, they will be your best friends. But you have to have friends where you really need them and they need you. It does not mean that you have to come out on the roads and start singing songs with them and saying that, oh, we are friends, we are friends. But relationships do matter, and that's what is there. When we talk about the support of the US administration, I believe that a major point of discussion should be Chabahar when Afghanistan discusses this with the US administration. And I'm not involving India in this because India is a very small part of Chabahar. India runs the Chabahar port, but it is for the Afghans. This is what you have to keep it in mind. The connectivity of Chabahar is not just India-Afghanistan. You have to look at the other way around. Imagine an Afghan business using the Chabahar port to export to Africa, to export to Southeast Asia, to export, to have access to that port. That is what is important. Imagine why depend on just 2 or 3 countries? Why not look at the exports to all the other countries that one port can give you? Why not have transshipments? And that is what is important. Why can't Afghan businesses buy from, let's say, Uzbekistan and sell to another country in Southeast Asia? That is how the businesses will grow. That is how the long-term aspect will come about. And that is what will give you the money to run the country. What the world has to understand is that Afghanistan has to be run by Afghans. It is an Afghan who knows his country more than anyone else. And time has tested this, and time has shown this to everyone. And it is now time for the people who are involved today to realize that it is the Afghan who has to be at the forefront of leading his country and ensuring that do what is right for their country. And for this, they have to leverage partnerships. Everything might not be right, but it will not be known until you try. There will always be mistakes, and this is normal for any developing country. Sometimes I get surprised and confused when I talk about with my friends and business colleagues that, okay, let's do with Afghan, the trade. And when you look at the currencies, the Afghani is more stronger than the Indian rupee when you look at it. And that should tell everyone something. And however robust an economy is, it is the people's trust in their own country, in their own economy that will change things. When we look at this room today, and I think this panel, they are experts in their fields. But I am an expert of none. But I would say jack of all trades and master of none. But that's what makes everybody bring together on the same table, and that's what changes things. When you're talking about banking system, Afghanistan, with India's perspective, India's connectivity to the world is very important today. When we talk about the situation, we're talking about being the world's 4th largest economy. We're talking about GDP. We're talking about the consumption. You from Afghanistan's trade statistics can find out the growth of Afghan exports into India. Imagine that in spite of all the troubles that we are having, the business is only increasing, the value is only increasing, the prices are only increasing, and still we have not found a dearth of consumption in India for Afghan products. On the other way around, when we talk about exports, pharma, machinery, we are not even talking about machinery exports from India to develop Afghanistan's own infrastructure and manufacturing capacities. You have such huge raw material, you have metals, you have everything that you need. It is just a matter of will of the people and the political will to put it together, put it in place, and speak to your donors, the donor agencies, that we need to invest in the manufacturing sector. Not only India, take German capabilities. German manufacturing and engineering is known the world over since decades now. So that is something that Afghanistan needs to look out of the box now and to talk about the perception that matters. And how you can change this is actually in your own hands. Of course, you have support of organizations like ICIB, Afghan American Chamber of Commerce, the business community in Dubai, in Turkey. I am sure that everybody wants to help. Everybody wants to help not only because of an emotional connect, that gives you a base, but it's also about the profits. Imagine that if you are a business and you are getting about a 30 to 40% profit, where in the world is that coming from today? We are still looking at 4%, 5% growth. Imagine 30% if you're setting up in Afghanistan, manufacturing in Afghanistan, selling in Afghanistan. The prices and the profitability, the import substitution, that goes a really long way. And import substitution does not mean that you substitute everything. You substitute the finished products. You're still importing at the end of the day, but the companies and the countries that are giving these materials to you are more than happy because their exports don't go down. In fact, it should be good for you because you are stop paying for air because, for example, in a packet of biscuits, 50% is air. That's what matters. In any packaged product, why can't you do the end packaging yourself? Setting up a common packaging plant. India has done that in Africa quite a bit, where we bring 5 companies together who are importing a certain product. We tell them, set up a joint manufacturing facility for packaging, import in bulk, do it yourself. The cost comes down, the leverage comes up, and the sales go higher. because you have that much extra capital to deploy into your own business rather than giving for transport. So this is what is important, and I think these are the things that we need to keep in mind. And from an Indian perspective, well, the technology is what we have to give, the support is what we have given always, and it is the port, the Chabahar port, that will always be there with you. And I'm sure that we request all of you all in Afghanistan, around Afghanistan, the supporters of Afghanistan, to ensure that you tell the people in the administration on your side, on the US side, and on the stakeholder side, that the importance of Chabahar is not just for India, but also for the entire region. And that makes all the difference. And when you're talking to these stakeholders, and I think when you talk about sanctions, yes, they are effective to a certain extent in certain territories, in certain segments, but not when it comes to such matters. Maybe it sometimes becomes counterproductive because, like I said, trade does not stop. If you have a port which is regulated, that is controlled, that is transparent, that is digitally sound, you have access to data, you have access to information, you know what is happening, is better than an unknown devil that might come out of the box. And that's about it from my side. Thank you so much.
Thank you so much, Mr. Singh, for insightful discussion and detailed, fruitful information. Thank you so much. Now it's my humble request to Mr. Sunil Pent to provide remark on the topic.
I think we are heading towards afternoon, so I'll start with good morning and I hope I'll end before good afternoon. Thank you very much again for having me here, and it was a pleasure listening to my colleague on this panel. It was a very profound outlook and a view that he was able to deliver, given his long association with international trade. There are a couple of things that I'd like to mention here, since I've been asked to talk more about what have been some elements of success that we have seen in India in terms of correspondent banking relationships that we have established. First is, as I was mentioning to a lady outside before we came back inside to this session, banking is trust. The essence of banking is trust. And if trust is missing, no matter what you have, is not going to work as a bank. Just think that there is a person who takes all his money, all the wealth that he has, deposits it in your bank, and just gets a scrap of paper in return. And he depends on that piece of paper to give him the confidence that when he wants, he will get the liquidity, he'll get the safety, and he'll get the return on it. This is trust. And trust is something that banks have tried to foster, and they have been able to do that. Afghanistan had a phase in its initial opening up and the initial modernization of the banking sector where it went through a rough patch, and that was largely compounded by the Kabul bank failure. But I think that is now history, and Afghanistan has come out of it very well, as was remarked on and commented on by some of the earlier speakers. I think today the Afghan banking sector has a very robust foundation, has been doing quite well, and not just doing well, it has been facing a large number of challenges and then doing well, which is, I think, a remarkable situation and something for which they really need to be appreciated. One more thing that we need to see is that access to banking, or rather access to money, is sometimes more important than the money itself. So if you have a system where you can provide access to money, it's not that you have so much money in your pocket, but the fact that when somebody needs the money, at that point in time, you have the resources to be able to support that person. And that is what correspondent banking tries to provide to most of the users of correspondent banking. Because correspondent banking essentially is putting a footstep into an area where you don't have any presence. So you are creating a virtual presence out there, using some other bank, using some other facilities to be able to provide resources and money, particularly in that particular place. So access to money becomes very important, and for that, sound correspondent banking relationships become very important. Again, going back to the concept of trust. only when your correspondent bank has the capacity to generate trust will you be able to move millions of dollars, thousands of dollars, even hundreds of Afghanis through it because you trust that bank. And that trust is something that is engendered not just by the financials of that bank, but by the dealings of that bank, corporate governance that is seen in that bank, and how they respond to you and how do you actually work on the regulatory compliance requirements and mechanisms that give people comfort in terms of what you are seeking to do. There are 2 or 3 things here that I would like to slightly deviate from this topic on and talk about. One is, when we talk about correspondent banking, we have been talking basically about international correspondent banking. But there is also, if you really look at it, a system of domestic correspondent banking. And in India, we've been able to use that very well to be able to reach segments of the society and to reach certain geographies where this was not otherwise possible. This is something that was built in by way of business correspondents, business facilitators, and I find that, Afghanistan has an equally sound and a well-established model that has evolved in the last couple of years, which is your agents. The agency banking arrangement that is there in Afghanistan, which needs to be developed and which needs to be perhaps better regulated for more pressure being put on it, for more demands being made on it. Given the fact that, this is largely going to be a support arrangement, we need to be also able to see what are the basic factors that are going to impact on correspondent banks. In the Indian experiment that I'm talking about, when we started off, we didn't have very many correspondent banks. We had traditional banking arrangements that were there with many of the countries that were part of the erstwhile British Empire, and more so in the near neighborhood. Later on, as we developed, we found that there were a couple of things that become very important, which need to be addressed. One is, what is the price of services that you are offering? It shouldn't happen that when you are moving money through certain correspondent banks, you are actually paying them so much, or you are required to pay so much that it really does not become a viable option for the person who is sending money through that channel. In which case, you have the alternate channels that come up, like MSPs here, Hawala operators in India and other places, who are then providing alternate unregulated or less regulated channels, because the cost of regulation itself is becoming pretty significant. I was talking to my friend across who's sitting at that table there, and we were talking about the cost of compliance having gone up from around 2% when Sarbanes-Oxley Act was introduced to about 8% today. And that is a significant cost. And if part of that cost is because of correspondent banking, then we need to see whether that cost and that role of correspondent banks can be better managed, better regulated, better understood. So one is price, obviously, the price of service. And as South Asians, I think we always look at the price before we look at anything else. Then the volume. What is the volume it can handle? If you are looking at a correspondent bank which says, I can only do $100 for you, but I can't do more because I don't have the capacity, then I don't think it's a bank that you would really be very happy to deal with. Speed. How long does it take? Does it have to go through a variety of channels, a variety of interfaces before they are able to actually do something about it? You have restrictions. How many restrictions do they face? Do they have domestic restrictions? Do they have international restrictions? Are there other constraints and hurdles that need to be overcome to be able to manage this? And then what are their internal risk management policies? Because that again becomes a restriction in terms of what kind of banking they can do. There is also a question of how compliant are they? Because if they are not compliant, it is possible that your money in transit through them may get impounded. So you have to be careful about that also. So that is where, these were the factors that we actually tabulated, and we made a matrix out of that, and we looked at what we used to then, when I was handling correspondent banking in State Bank of India, we used to call the Berry model, which was bank exposure and risk integrator. So we used to work on that basically, and we used to do a bank-wise evaluation of each of these features for each bank that we were looking at. One other thing that we need to also consider is that sanctions, restrictions are not new. They are not something that have happened only now. It's not something that we are seeing in the global arena only in the near past. It's something that has been there in the past, significant past also. I remember when I was recently in the bank, when I joined the bank, we had this nuclear explosion in Pokhran. And there were restrictions on India. There was sanctions on India, as a result of which there were certain difficulties in terms of movement of funds, raising of funds, getting funds, financing of projects, capital, shall we say, raising. And this was then handled largely because we had a very strong network of correspondent banks who stood by us. It's not that there were any violations, but the fact was that there was a lot of forbearance. And that is also something which is very important when we are looking at a kind of a challenging environment that you have to work in. So I think we need to look at it from that angle also. We also need to see what are the new emerging technologies and how they are going to impact movement of funds and movement of services through the correspondent banking channel and now the replaced correspondent banking channel. One of the key factors that is coming up when we are talking about movement of funds is the CBDCs, which is the central bank digital currencies that are coming up, where you can do a direct arrangement without having to go through the banks at all. And that is something that is going to impact the future of correspondent banking if and as these CBDCs actually become important. So we have to consider these factors also. How is technology going to impact this? We were talking to some friends here, and they were saying that there have been huge layoffs in technology firms recently because of the introduction of artificial intelligence. Even in the financial sector, it is expected that about 25% of the jobs are going to be, or should I say, downsized because of the changes that are going to come with the introduction of artificial intelligence and maybe backed up with machine learning. So you will certainly have so many redundancies. But these redundancies in terms of the existing functions may have a meaning. If we look at it from the other side, there are also opportunities for the newer kind of technology, learning, and skills that will be required to handle all this. So we have these kind of services. If you look at it in a certain way, you have a respondent bank, which is the originating bank. You have a correspondent bank, which is the bank that corresponds or corresponds. So it's the correspondent bank. And the correspondent bank then delivers on behalf of the respondent bank as an agent of that particular correspondent bank. And that is something that has to be kept in mind. And therefore, to reduce their risks, correspondent banks sometimes cut out the respondent bank or reduce exposure to the respondent bank. And that is something that we have to keep a close watch on, and therefore a close understanding, a deep understanding of what the regional or global or that particular national regulatory requirements are is very important, because that is going to impact on whether this kind of business can be done or not be done. One factor that we need to also consider is when we are talking about the digitization of business, of funds, of financial movements, is also the fact that we are looking at what kind of support are we looking at from the particular correspondent bank that we are choosing. In many cases, this is very fundamental. You have a letter of credit and you send it to the correspondent bank, which then negotiates that as per requirements, or it acts as per the requirements that are given out there. Sometimes there is no negotiation. If it's a standby letter of credit, it is going to be just a guarantee. It's something like a guarantee. It's a US counterpart of what in our system we call a guarantee. So you have this kind of an arrangement that comes up, and we can be looking at how the facilitation of global trade in the emerging environment is going to be managed. And this is going to be more important when we are looking at financial inclusion through correspondent banking. How we are able to bring more of our traders and international traders at that into the net of being able to utilize these facilities that are available and make the best use of it. Banks also use these international banking correspondents to make money, because when there is a pool of funds available in an nostro account, it is often invested and you can get overnights or you can get 2-day or 3-day kind of credits on or interest on that. So this is also something that is worth considering in terms of how to use these. There is also a question of operational efficiency. We have to see how efficient are the channels that we are using. When you are looking at the trade channels and you are moving documents through those trade channels, and when you are looking at the money channels and you are moving money through those channels, the efficiencies out there are going to make a big difference in terms of whether a bank is able to work a large correspondent banking network. I think there are a lot of other things that we could be talking about. The most important, I think, is largely in terms of having regional correspondent banking networks that should be encouraged to grow. There it becomes easier for people to have a proactive and a sympathetic view, because you are closer to that region, you have historical ties with the banks and with the country out there, the people out there, and therefore it becomes important that if these are supportive networks that are created, it will always be beneficial. I can just about say that, as an example, there was a mention of the UPCI, which is the Unified Payment Council of India, and it's an umbrella organization. So they last year did something like 228 billion transactions, and the number has been growing up. It was 170 something in the year before that. So that is something that we could look at, and UPCI is something that has been introduced now in 11 countries, including UAE. I think this is something that could become a challenge in years to come to the simple funds movement that we are seeing in the role, in one of the roles that is played by correspondent banking. And I think essentially what we need to look at is using correspondent banking to also exchange learnings, so that we get the learnings that they have from the particular situations in the country of their operations, and that they are able to transfer to us so that we can also benefit from them. So I think India has been able to do many of these things very confidently, which has been doing very efficiently, and we have been able to build a large number of operational benefits out of that. And I think this is something that Afghanistan could use, and we could try and even organize in due course, perhaps not a conference, but at least a con call between Indian banks and Afghan banks to be able to take this kind of an idea forward. So thank you very much. Thank you for the patient hearing.
Thank you so much, respected Sunil Pant, for the wonderful, insightful discussion and detailed remark. Definitely, the suggestions you have provided, if they implement in the banking sector of Afghanistan, will definitely boost up the tie-up with the correspondent bank that we have a relationship with them, and how to further engage and create good regional connectivity with the specific regions. Thank you so much. Now I would like to request Professor Abdulwasi Haqqi, who will shed light on the Islamic banking and finance structure in Afghanistan today. He will also provide some recommendation for improved relation with the regional Islamic finance institutions. Please.
Bismillahir Rahmanir Rahim. Sallu ala Muhammad wa ali Muhammad. Sallu ala Ibrahim wa ali Ibrahim. My respected colleagues here, I was so happy to see some of my close colleagues, students, and friends. And thank you very much, Mr. Jeffrey Craigo, I think a lot of people do not pronounce your name properly. I hope I did it. So to start with, I think I also would like to thank Mr. Yousafzai for introductory remark and the other two panelists for a beautiful presentation. I'd like to, Mr. Craig already gave me signals, so he didn't give signal to the other panelists. I think he just, yeah, but I will try to be fair. So let me just say a broad 3-4 differences of conventional bank or traditional bank and Islamic bank, so that we will understand what is the Islamic bank. The Islamic banking is based on, in principle, from different point of view, like three, I will summarize it. Financial, which is, the traditional banking is motivation, and their philosophy is more or less based on interest, whether it is excessive interest or interest in general and profit. And it's based on what is called debt assets, where the Islamic bank is not secular, it's religious, and it's based on Islamic principle or what is called Islamic Sharia. What is Islamic Sharia? Islamic Sharia is based on Quran Kareem, the holy book, and Hadith and Sunnat, and Qiyas and Ijma. Qiyas is analogy, and Ijma is like community consensus. So it's based on these 4 principles of, so in Islamic banking, there is like Sharia board. So they interpret from the Sharia law the rules and regulations how the Islamic bank should be in compliance with. So these are from the point of general, financial thing. The second is in terms of governance. The governance of the traditional bank is based on, and regulation is based on the central bank and some other standards, where in Islamic is not only the standards international, but it is based on Islamic banking standards, and not only considering the Basel II or III, but they also consider other factors as well. Of course, Basel II and III is by default accepted by many banks, but this is. The Islamic bank at the beginning, it was thought like informal. I don't understand, sometimes people just love to use formal and informal, but for me it's a little difficult to say that, which is formal, which is not. The Islamic banking started in 1963, but practically in 1975, which is just like 50 years, half a century. But surprisingly, it has expanded now. The total assets of Islamic Bank is almost $6 trillion. $6 trillion. And it's in almost 80 countries, Muslim and non-Muslim, such as England, Switzerland, Germany, and even the United States in different forms, whether it is the share value and stuff. So these are the governance. The third one is the accounting and auditing. The accounting and auditing aspects of Islamic Bank was not something that was like old things. I don't want to say too much about myself, but Professor Pomerantz and I wrote an article in the big economic journal on the needs of the needs of accounting in Islamic banking in 1986. Fortunately, After 5 years, that institution was established in Bahrain. It's called AIOIF, which is Auditing and Accounting Organization of Islamic Institution. And I was so proud to hear that. So I'm not going to talk about the marketing of that, but just to tell you an idea how their standard is, how this whole thing started. So these are some of the differences. And like in traditional banking, they do not consider that much the ethical and social responsibility. You know, these days there's a lot of things in accounting and finance, corporate social responsibility. But the Islamic banking, that is the main things of the Islamic banking, corporate, regional, responsibility is that they have to think about how the society, when they get their money, how they use it. And as you know, they have their system of without interest. What does that mean? They have like 4 major schemes, which is called Murabiha, Musharika, Muzariba, and Ijara, 4 major. But of course, there are about 6, 7 more of them. I don't have to go to that. But they're all based on assets based, not on the debt. And there is a system, it's called perennial, which is profit and loss sharing. So if the traditional bank, if you get interest you get interest without considering whether that bank is in terms of getting into bankruptcy or some kind of problems they get. The traditional bank had also a lot of problems, like we also see in 2007 and 2009 when there was financial crisis. So the United States started to strict the regulation. So that way people will not lose. And they have FDIC and all that stuff. But in Islamic banking, these things are already considered because they share the risk. But in traditional bank, they don't share a risk. So just to give you very general idea, what is the difference? Now I will be just brief that before I finish my things, I just want to say and have Mr. Greco's attention and the audience is 2 suggestions that when we finish a conference, somebody will ask, what is the result of this conference? Just talk, have lunch, and gathering? No, there is some things that I would like to suggest. The one thing that I like to suggest, like we have in terms of economic development, we have sustainable development goal, but we should have a sustainable banking goal. And that is something I would like to propose, and I would like to emphasize that. And on that, who is going to initiate that? That initiation will come from AAOI, from the IMF, and from the United Nations. So they have to work on this one, and that way, all the banking, regional, local, they will be pretty much tied up to follow certain goals. And since we are talking about this goal that way, that will be very confined. So this is something I would like to propose. The second thing I would like to propose to Mr. Greco especially, that I wish in today's conference, somebody should have come from the IMF. I have a very close relationship, I have working relationship I had with IMF, because IMF is really the banking part, World Bank is the development part. So the World Bank, unfortunately, the lady Naidi Chahara, I think she's not there. She talked a little bit about Hawala, and she was trying to say it's a non-formal. I don't understand that. As I was saying, I don't like the word non-formal. Why shouldn't we make it formal? What is wrong with Hawala? We talk about trust, and the word trust started with Mr. Greco. I hope I don't talk too much about Mr. Greco, but he started that stuff, the trust. So Hawala is the trust. And the Islamic banking was established in terms of trust. So Hawala should be, looked upon if this could be formalized. And people really love that. Much better than, Islamic banking even in other banks. So these are the two important things that I wanted to emphasize.
Thank you for that. I want to answer your questions directly because the ABA was very specific. This conference is going to end up producing what's called an actionable recommendation report that'll be circulated to the government in Kabul. It'll be circulated to all of us and to all the chambers and to all the banks, including their partner banking relationships as well. So you'll see those. So your contribution and ideas will go right into that report. So we welcome your inputs. Thank you for that. I have a question for you.
Sure.
So what I've seen, I worked on the Sharia banking law in Afghanistan many years ago under the new government or Taliban interim administration, excuse me. They have attempted to revise the Sharia law from the previous government, which I think everyone agreed was very good. And the banks, Afghan banks here, had a major role in that. When you look at where we are now in 2026, how are women being treated better in Islamic banking and financing than they were maybe 5, 6, or 10 years ago? Is there a new role for women in Islamic banking that we haven't seen enough of? Is that something that the ABA should be pushing? What are your thinking on that?
It's a good point, but I don't have that much of research. I'm just a research guy. I don't work, but I have my own, what is called Social Security legally, hopefully. And so I'm very happy to be in these kind of conferences to share my knowledge. So I don't have a detailed research on it, but I will be happy that if I find, some kind of solution to your question, which is a very interesting question, I will share with you.
All right. Mr. Yousafzai, I know Azizi Bank takes great care in women in Islamic banking. How are you approaching the women as a market for Islamic banking and finance?
Thank you so much, Mr. Jeffrey. That was a great question. Obviously, in the banking sector in Afghanistan as a whole, there has been good treatment for Afghan women, and they are working in the banking sector, and specifically in the commercial bank. And in regards to the Islamic banking and finance, as previously it was conventional banking, so the same treatment is going to them as well. So there is no any means deviations from the past. So only the reason is that on each and every branches, a dedicated counter has been specified for the women. And when the customer means the female women, they are coming to the banking sector. So they are directly approaching to the women, and they are accordingly providing the banking services accordingly. Means there is no restrictions from the governing side as well. But in regard to their means transparency as a whole, there's some control measures in place in each and every banking sector.
Are you expecting that there will be more access to financing for women in Islamic banking in the future? Is that something you see could grow as a market? It also helps you to build confidence with 50% of the population or more. If they're in there, every bank that I have visited in Afghanistan, the women's sections are very busy all the time, almost more busy than the other side. So I think it's something that maybe ABA should be thinking about how to not, the donors, by the way, already provide the Afghan banks with some access to financing, and we're going to talk about that and guarantees on a future panel today. Are there any other questions? Yes, Kishro.
Thank you. My question is to Mr. Singh, ICIB. You mentioned the size of trade between Afghanistan and India is about $2 billion, right?
Actually, the official statistics vary because there's a lot of trade that is routed through other countries, and there's a lot of trade that is also happening through unofficial channels. So, giving it a particular figure would be vague, I would say. But yes, it has increased a lot in the last. There was a gap in the middle, but it's increasing.
Right. So, okay, if it is 1 billion or 1.5, so we were expecting $2 or $3 billion in the future. That's okay. Just I'm trying to raise our concern on behalf of the banking sector. Based on our data, most of these payments are going through other correspondent banks from different countries, which we call it third-party payments. Let's say from Central Asia banks, from Gulf countries, or from European countries. It's not direct payments to Indian banks. So the goods are importing from India or exporting to India, but the payments are not going through banking relationship with Indian banks. The first reason is because we all banks, we have INR account, correspondent bank account with Indian banks. We don't have US dollar denominated currency Nostra account with Indian banks. So as a representative of ICIB, a CEO of ICIB, how you can support Afghan banking sector to establish direct correspondent bank relationship with Indian banks to facilitate dollar payments directly to Indian banks, only for the clearance of the payments of the trade between India and also Afghanistan.
Actually, I have a slightly out-of-the-box solution. Why would you want to stick to US dollars or any other currency? India is now going on with a lot of rupee trade with cross currencies. Maybe we can look at the Afghani and the other one, Indian rupee, directly. That's possible because if you're already having Nostro-Vostro relations and you're holding rupee accounts, I think it makes it easier to slightly diversify. And but we have seen in case of other currencies where this is already there, for example in some European countries, some Southeast Asian countries, where we are trading in rupees directly or in regional currencies. What happens is the trade is not aware of that, and the pricing and the calculations are always done in terms of dollars. So the moment the industry has come to know that okay, you can do trade in direct currencies, they start switching slowly. But there are two hindrances to that. One is of course the awareness when it comes to the trade, the companies. Second is when you're talking about some large corporations, they have assets in Western countries, they have banking relations, much stronger trade relations, and they have systems in place which are placed for the dollars. So maybe it is not easy for large corporations to deal in other currencies, but for the SME industry, which is I think 80% of India's trade, when you talk about relations, and there are a lot of imports and exports with Afghanistan is happening with the SMEs. I think it is possible to have a direct trading relation between currencies. We would take it to the government and see if that is possible, and try to take a representation from the banks. That's one part. Second part is when you're talking about in terms of dollars or euros or other currencies that are there, the SWIFT is definitely in place. But when you're talking about, again, it coming down to the trade, the regime change happened, I think, about 5 years ago now. It's a really long time. Things are stable, but still there are apprehensions in many countries, including India. I think it is up to now the Afghan traders and the Afghan people to come out and to have conferences, virtual meetings. I know travel is not easy, but at least the virtual conferences to re-engage the trust that we are all talking about, that we are still in business, we are still working, we are still there. And then the banking relationship would definitely come back on the trade. Second is one fact that the Indian banks are not very open on talking to the industry about what country are they dealing with, what country they're not dealing with. It's a very close that, okay, yes, you can work through foreign countries through us, full stop. So there is no outreach mechanism when it comes to specific countries and specific currencies. So that comes down to Chamber of Commerce and institutions like ours and many others. And we will be happy to engage with Afghan banks and to create virtual meetings through other stakeholders, through the traders, through the Chambers of Commerce in Afghanistan and other space to take this to the people. So it's a matter of will and not a hindrance when it comes to either technology or a political will or something like that. I think it's a matter of awareness that needs to be sorted.
Thank you very much. We are at our break. We have a beautiful lunch, 2 buffets, one at both sides of the outside. You're welcome to bring it in here and sit with your colleagues, or there's stand-up tables outside where you can have lunch standing with your friends. We'll come back here in 30 minutes at 1:30 for our 2 keynotes from Afghan Credit Guarantee Foundation and from Katawazai Group and the MSPs. Thank you. All right, can we get Mr. Ahadi and Mr. Leitner to come up onto the stage and take their seats? Now, for our luncheon keynotes, we asked 2 of our sponsors to talk on their programming because their programming is critical to the state of banking in Afghanistan and the ability to access financing by both commercial sector and individuals, men and women and so forth. Our first speaker will be Bernd Leitner. He's the chairman of the management board for the Afghan Credit Guarantee Foundation. They're a silver sponsor today. He's going to address how the bank guarantee initiatives can assist Afghan banks, protect donors, and also promote the corresponding banking relationships that Afghanistan is seeking to improve this year in 2026. And then he'll be followed by Ahmad Javed Ahadi, the CFO of Katawazai Group, on behalf of Mohammed Mirza Katawazai, and he's the chairman of Katawazai Group. I had a chance to spend time with him in Washington when he was there recently. They're also, of course, a silver sponsor of ours, and he will speak more specifically on the topic of the role of Afghan MSPs, the money service providers, and how they strengthen Afghan finances and help to stabilize the economy itself. So we have 2 great speakers, each of about 10 minutes, and then we're happy to have some engagement with the audience. So Bernd, over to you.
Thank you very much. ACGF, Afghan Credit Guarantee Foundation, is a guarantee fund. We share credit risk with Afghan lenders, specifically for financing of MSMEs, micro, small, and medium-sized enterprises. We also provide extensive technical assistance, training, product development, improvement of risk management, improvement of compliance systems of our partner institutions. In 2025, we had the strongest year ever in terms of business volume. We had guaranteed more than $50 million US, which was by far more than what we had done in any specific year in the past. Overall, ACGF does have a strong footprint in the market. We estimate, clear figures are not available, but we do estimate that we have 60% of all MSME lending in Afghanistan in our books. That is an extraordinary footprint for a guarantee fund. It's a double-sided sword, obviously. On the one hand, it's an impressive result. On the other hand, it shows how small the market is, that one guarantee fund can have such a footprint. You might wonder why we as a guarantee fund are relevant for the purpose of this conference, and I will explain in more details. Let us look first into the legal environment of our joint work in the financial sector in Afghanistan. It actually is, and it was touched upon this morning, much more favorable than what is generally perceived. This morning it was discussed that it's mainly trust that is missing, not so much the legal environment that would provide limitations. One of the main fears encountered generally is the sanctions schemes and regime that is in place. Here's a question for you. What do you think? How many people and entities are on the sanction lists?
Oof. A lot.
A lot? You're saying a lot?
On the U.S. government sanction list, it goes on for pages and pages and pages.
It is 150 on all sanction
For
lists.
Afghanistan?
For Afghanistan. There are other counterterrorism lists, yeah, that are on top of that,
Yeah.
but the sanction lists, UN, EU, US, 150. That is not so much, yeah, and your response, a lot, that is the normal perception.
There's secondary sanctions on Iran that include many Afghan trade companies, so there's some of that, but not as many as the 150, so yeah.
The government is not sanctioned. There are these general licenses, number 20, and others that, provide the framework for working in humanitarian and development goals. And there are many donors on the ground. They work, they don't violate sanction schemes or any other regulations. So against this framework, international banks can do business with Afghan banks, but they haven't for many years, since 2021. They, to quite some extent, refrained from it. As a German, I can speak for the German banks, Commerzbank and others. They are shying away, and each time we come to them with any need to transfer into Afghanistan or so, we are in trouble. It is not the legal environment. It is their perception of risks. It is their reputational issues that they have, and it is their lack of trust in the compliance of Afghan banks and financial institutions. Now, we as ACGF, we are subject to compliance requirements as well. How are we dealing with this? We are an international NGO. We are a foundation. We are not for profit. We are set up in Germany legally. We depend on donor funding. And the donors that we work with, some of them are in this conference, they have no tolerance for compliance issues. We do not have tolerance for compliance issues, and still we work with partner institutions very closely. I think it's fair to say that our existence as a donor-funded entity depends on compliance. So what do we actually do about that? And we have two main areas that are relevant here. First of all, we are a guarantee fund. Our work is about credit risk. We share risk for MSME lending of Afghan institutions. Our coverage standard is 70%. We take more risk than any of these banks that are here in terms of exposure to these MSMEs. That is one. And on the other hand, and I want to say that, talking about risk, we know what we talk about. Just 3 years ago, we had 94% of our portfolio in delinquency. 94%. That is also extraordinary. And that was not only us. I mean, all the banks that are here had similar situations, and we covered their portfolio into MSMEs, hence we had the same situation, but it was really extraordinary. And that risk exposure that I've mentioned is why we are so thorough in selecting our partners and in monitoring their work. I will explain a bit more. Selecting our partners, we carry out a due diligence of each partner that we work with. That due diligence is thorough. Just recently, AUB has had the privilege of suffering from it. That is part of our work on this. We look into the policies and procedures. We look into products. We look into training needs. We look into compliance management systems, and if not perceived sufficient, we help with our technical assistance to improve. We oblige our partners in the framework agreements that we do to comply with the compliance frameworks that are best practice as per international standards. That encompasses KYC, AML, counterterrorism finance, sanction screening, environmental and social risks, and what have you, the whole lot of it. But we not only oblige our partners, we actually monitor. And our partners, the existing ones in this room, FMFB and Razan Farbank, they know that this monitoring is sincere. We are in your neck all the times. And AUB, we will be in your neck all the times as well. We take that very seriously. We don't do that in a, let's say, negative approach. We just want to have you as partners comply with your own policies that we assessed initially, which is our benchmark for the validity of our guarantees. Hence, we kind of help you being your outsourced internal auditors, if you want. We have more than 50 staff in Afghanistan. 25 of these are entrusted with reviewing files, monitoring operations of our partner institutions, and preparing for guaranteed decisions and doing the monitoring work. When it comes to sanctions, we have zero tolerance. We request our partners to screen each and every customer. And on top of that, we do screen ourselves, each and every customer that we guarantee. And to tell you one secret, we have never had a positive match since inception. We do have some PEPs at time, politically exposed persons, but never any sanction screen match. So with that, I explained our compliance activities, and you might wonder why this is relevant. And we come back to this issue of trust. We believe that with our existence, with our role in the financial sector, being part of the financial sector, we provide additional trust. We are an international institution. Our partners' compliance is our life insurance, given that we are so donor dependent. We now work with 3 PIs, partner institutions, but by the end of this year, we expect to have 7. So we are expanding our footprint into the financial sector, covering more than half of it, I would say, or roughly half of it by the end of this year. We ensure trustworthiness in the local financial institutions. Now, with that, I explained our principles and the benefit in general. We de-risk our partners' portfolios, and we ensure compliance systems being best practice. Now, looking forward, how can we find ways for cooperation? And I would like to come up with one specific suggestion here. We're ready to explore more ways to make our principles work for international banks, and we think trade finance is one of the areas we can reach out more. We had this morning 12 billion of imports, plus 1 to 2 billion of exports, but 12 million imports. A lot of it by SMEs. Many of the SMEs that we guarantee are actually importers. And many of the facilities that we guarantee are used for imports. Now, what Afghan importers usually have to do is to pay upfront in advance to the suppliers abroad. And that is very risky. And I can tell you, we had some claims that we had to pay because that money was just lost for various reasons, individual. But it is very risky. Letters of credit would be a solution to that. There are Islamic letters of credit. It is a regular product that could be used. Now, for Afghan importers who want to use a letter of credit, they usually have to provide 100% cash margin. 100% cash margin is not a very strong incentive for a business to take a facility from a bank. We can help with that. Our guarantee is considered like cash. It can substitute the cash margin from customers. And we think that, we can take care of the credit risk of importers. If we add post-import finance, we could expand that facility. And with this cooperation, we could facilitate the relationship between international banks and local financial institutions, backed on our guarantees and backed on letters of credit that can be covered by us and guaranteed by us. With that, we would find a way, and maybe an example of stronger international integration of the Afghan financial sector. We are ready to reach out and offer our hands for that. We are, as I said, part of the financial sector. We are here for the long haul, and we are ready for such cooperation. Thank you.
Very good. Very exciting. I feel like we're breaking a lot of news today. AUB this afternoon is, I think, going to tell us their news. But Bernd, I think you've just given us some more great news. Getting into the trade finance area would be wonderful. So, Ahmed, are you ready?
Yes.
All right, sir.
Distinguished guests, respected colleagues, and ladies and gentlemen. As someone who has worked inside Afghanistan financial reality, it is a personal honor for me to speak on behalf of Mr. Mirza Katawazi, Chairman of Katawazi Group, and to contribute this important dialogue on Afghanistan's financial future. Also, I would like to thank Mr. Jeffrey to make this space. Finally, the banks and MSPs can talk at each other, not past each other. My topic today is the role of Afghan money service provider and how they strengthen Afghanistan financial and economic systems. In most countries, MSPs are peripheral sectors. In Afghanistan, they are foundational infrastructures. In Afghanistan, when the formal banking system contracts, MSPs expand. When liquidity becomes scarce, MSPs circulate it. When borders harden, MSPs keep trade alive. They are not merely alternatives to banks. They are, in many respects, to continue tissue of Afghanistan economy. Today, more than 70% of Afghans remain unbanked. Yet remittance continues to follow. Trade continue, households survive, markets function. This is not accidental. It is because MSPs from a nationwide financial logic, urban and rural, formal and informal, domestic and across border. They serve migrant workers sending funds home, humanitarian agencies moving aid, traders settling across border accounts, family preserving purchasing power, and small business managing daily liquidity. In an economy facing sanctions, limited correspondent banking, and constrained dollar access, MSP act as stabilizers. They absorb shocks. They smooth volatility. They prevent systematic paralysis. From macroeconomic perspective, MSPs perform three critical functions. First, they preserve monetary circulation. Second, they sustain trade continuity. Third, they ensure social resilience. There is also a recent and very real historical lesson. At the beginning of Afghanistan political transition, formal banking channels to outside world were almost entirely frozen. Yet humanitarian aids did not stop. Food reached to families. medicine reached to clinics. Cash assistance reached widow and displacement people. For more than a year, it was primarily Afghan money service providers who carried a weight of this system. The majority of international humanitarian organizations operating inside Afghanistan paid not only beneficiaries, but even their own local staffs through money service providers. In practice, MSPs become the payroll system of survival. They become the last mile of international compassion. Without MSP's network, much of this aid would have remained on paper, not in the people's hands. This is why elimination is not reform. Disconnection is not stability. The correct part is transformation, not erasure. However, this strengthening also creates responsibilities. MSPs must involve the future requirement formal compliance frameworks, transaction transparency, AML and safety alignment, digital record keeping, and interoperability with the banking system. The global financial system is not hostile to MSPs. It is hostile to opacity. The path forward is not elimination. It is integration. MSPs can become regulated liquidity engines. They can become compliant settlement rails. They can become on-ramped a formal finance. We have seen this evaluation elsewhere, from Kenya's mobile money ecosystem to Pakistan branchless banking framework and the regulated remittance corridor of Gulf. Afghanistan does not need to invent, it needs to adapt. There is also a human dimension. I have personally seen how a single remittance can keep an entire household functions for a month. Every MSP counter representative, a family survival, a farmer receiving funds, a student paying fees, a trader rebuilding inventory, a mother buying food. To dismantle MSP without alternative into the destabilized society, the responsibility passes not supervision, it's evaluation. Bank and MSPs are not advisory. They are complementary instruments of the constrained environment. In a fully normalized Afghanistan, bank will be lead. In constrained Afghanistan, MSPs sustained. The strategic goal is conversion. Let MSPs become feeder into banking. Let banks become amplifiers of MSPs' liquidity. Let compliance become the shared language. This conference is about correspondent banking. Correspondent banking required predictability, trustability, and institutional continuity. MSP can be part of the future, and they are upgraded, not erased. For international partners, the message is clear. Engaging MSP's ecosystem is not risk amplification, it is risk management. Because the unmanaged system growth in the dark, managed system integrated into light. Afghanistan financial future will not be built by copying Western banking model overnight. It will be built by harmonizing reality with standards. MSPs are reality. Compliance is the standard. The bridge between them is policy, technology, and trust. This is not theory. This is not abstraction. This is the financial reality of nation and transition. On behalf of Katawazi groups of company, I offering these comments. We believe in financial architecture of Afghanistan. This is regionally connected, globally compliant, locally accessible, and human in purpose. MSPs are not weakness. They are foundations. Our task is not to deny them. It is design them into the future. Thank you.
Very good, very good. That was one of the most articulate MSP speeches I've ever heard on Afghanistan. Thank you for that. Excellent. I'm going to start with one question for each of the speakers, and then feel free to raise your hand, and we'll grab the mic and get you a mic if you'd like to jump in. I'll start with Bernd. So Bernd, moving into trade finance, I'm sure in this, sorry, can you hear me now? Yeah, so moving into trade finance is huge. And I know the traders, we have several in the room, would be elated to hear that you guys are thinking about this. But we have big traders, medium size, we have small ones, we have local farms. How can that program assist not just maybe the middle or the SME level, but could bigger traders also be involved in joining in that as well?
Well, I guess the question does not have to go to me, but rather to Nadine.
Okay.
We have been talking to the World Bank for additional funding. Right now, our resources are good for small, maybe medium traders, but not for larger ones. We don't have the coffers for that, but we are trying to get these.
Okay. All right, so there's hope for that maybe at some point. Ahmad, the big issue that has always been plaguing, I feel, the MSP sector was the compliance issue, but you've addressed it several times today because our next panel is all about compliance. So why has the MSP issue on compliance been resolved? Has it really been resolved? Are you organized now as an industry in a better way so that you can influence policy and actually do strong performance-based compliance?
Yes, it is organized now, MSPs, and recently I have heard the news that before all MSPs was afraid that each transaction what they are doing in the banking touching their account, and they are going to the task procedures.
Okay.
And now I heard from Mr. Mubin Ahmed, Deputy CEO of Afghan United Bank, that they are raised this case to the central bank that this transaction will not, should not be touched in the customer's account. And then I'm quite sure after this, the compliance issue will be progress and MSP will come under organized system.
And you feel the central bank would welcome this movement now with the MSPs?
Yes.
Yeah, it sounds like it, yeah. Okay, great. Are there any questions? Yes, Mr. Akiki. Can one of my helpers grab the microphone on the table there and provide it to Mr. Akiki so we can get you on the video? There we go.
Thank you very much, Mr. Greco, for giving me a chance to ask a question. I understand so far a lot of the issues related to somehow trade finance. And I think we are somehow ignoring the 4 banks that were very specialized in Afghanistan. Unfortunately, with after 2-3 years of the government, Karzai government, for somehow they were completely abolished. And those were the very important, since we're talking about economic stability and economic development. They were Industrial Development Bank. And that was a very successful institution. Second was the Afghanistan Agricultural Bank, for which the World Bank give 2 credits or loans to it for the development of them. Fortunately, I was one of the negotiators from the government of Afghanistan to the World Bank, and we got that one. And it was developing very good and was helping the agricultural sector very good. And the system was based on IFCs and, like international standards, put it this way. The third was Export Promotion Bank. We're talking now about the trade finance, but we already had something what was called Export Development Bank. And that was unfortunately the third bank that I'm talking about was abolished. The fourth one was Mortgage Bank. I was auditor of that bank too, mortgage. Unfortunately, those banks were gone. Whether there was some kind of, espionage about it or whatever, something wrong went there, and those banks were completely abolished. And I would like to have my respected audience and the moderator, Mr. Greco, to indicate that what about these banks? Could they be revised or revived and implemented and coming back? Because Afghanistan, the industrial and the agricultural and the mortgage and export banks or export activities, I mean all activities, were not considered as strong as they were supposed to be, because all of these, as Mr. Hadi said, talking about economic stability, or we're talking sustainable development goal. How could we get that? They're just on the air. Thank you.
Well, I'll let my colleagues, do you guys want to jump in on any of that? Or I think my recommendation would be, Mr. Akiki, is that you write a recommendation for our report specifically on this, include the data sets. I know you and I talk a lot about data, and it's really hard right now for the World Bank to get good data. A lot of their programs have been cut and their budgets cut, so we need to be able to find a way to get better data in this area, and then I think we would be happy to push that forward as a policy recommendation in the future as well. You talked about trust, you know, Bernd, in the issue of trust, is there something that the regional corresponding banks that are doing transactions with the Afghan banks now, but very quietly, is there a way that they could help us build more trust in the banking relationships between the Afghan banks and the regionals, and then have you guys kind of play a role in moving that forward as part of your trade finance initiative?
Thank you very much.
Yeah.
No, Jeff, we should not overestimate our role. We do a lot in as MSME financing, and we de-risk facilities that our partners give.
Okay.
We haven't been involved in their relationships with corresponding banks. But on your question, I would say these relationships per se build trust. Mm-hmm. You know, each relationship, if successful, is exactly that. It's based on trust, but it also creates trust and, brings the snowball further. This trade finance initiative, it is, to be fair, it's not an initiative, it's an idea at this stage. But I think there is a very strong need.
Yeah.
We have seen businesses lose money. We have lost money as a guarantor on these. And in the past, you know, what was missing is a lot of awareness. Customers, businesses wanted to do advance payment because they just felt it was easier, faster, you know, no big deal to do a hawala transfer to China or to Kazakhstan or what. But they have not fully understood the risks involved in that. Okay. And I think there's a lot of awareness creation that needs to be done. We're ready to get involved in that together with our partners to reach out. We are ready to reach out to chambers of commerce, to reach out to their clientele, to educate. We see a strong need for that.
Okay. All right, thank you. That's a good answer. Yes, Kishro. The microphone should still be there someplace. There we are.
Thank you. Thank you very much. My question is to Mr. Bernd, ACGF. But before the question, I would like to appreciate the re-engagement of ACGF during the new governments and now expansion of that relationship with more banks in Afghanistan, more financial institutions to support MSME segment. And also now you're talking about the trade finance, which is really important. Is untapped market in Afghanistan. 99% of the payments are going through direct payments. We call it MT103. It's not trade finance. And I think it's going to be a big change in the banking sector in the future. And you must be aware of the recent change in policy of the central bank about the investments in Afghanistan. So central bank sent an official letter to the banks and advised the banks to increase investment ratio in Afghanistan to 30%. We call it CD ratio, credit to deposit ratio, to 30% in the next 3 years. Right now it's between 5 to 7%, but the plan is 30% for the next 3 years. So 2026 is the first year. And more than 60% of the focus of the banking sector is to create MSME portfolio, loan portfolio. The question is, are you ready? Is ACGF is ready to support the existing financial institutions, I mean the banks and other MFIs, and including the new MFIs and banks which ACGF is going to onboard to guarantee and provide credit guarantee to all these portfolio for the next 2 to 3 years? Or you think, or do you think that you need ACGF need more or fresh capital from the donors, especially World Bank or European Union, to support ACGF in Afghanistan? Because right now, ACGF is only the institution to provide credit guarantee scheme, which was very successful in the past, in the last 1 decade. And there's no alternative option right now in Afghanistan. And since banks are playing with depositors' money, so that's the major source of fund in the banking sector, so banks are very cautious when they're financing in Afghanistan. And without credit guarantee, it is really high risk to move forward. Thank you.
Thank you very much, Mr. Khesro, and also for your encouraging words. Yes, we are aware of the central bank, the Afghanistan bank, to increase pressure on commercial banks to use their means to support the MSMEs. We appreciate that, obviously, because it creates demand on our guarantee products more than before. And I don't think it's a secret to say that SME lending was quite weak the last couple of years. And maybe in contrast to microfinance, which developed stronger and with more dynamic. And we look forward to support SME lending. You are right, our resources are quite limited. We just signed an agreement with the EU for the Mala project, the second phase that started just in January. We have a counter guarantee facility in place with UNCDF, supported by UNDP. And we are talking to the World Bank to become part of their next program. And Nadine this morning mentioned that de-risking will be part of it, and that is exactly that what we're looking at. We have also asked for a TA envelope because we feel, and our experience has been, that providing de-risking doesn't do the job by itself. It has to come with capacity building. Mm-hmm. The Afghan financial sector is not the most developed one, to be diplomatic here. There are many needs, and we have been working on these needs to some extent. We want to increase that, and we do have a TA envelope from the EU, but it wouldn't be sufficient to deal with the needs that we have. So in response to you, we need further funding, and we are trying to raise that, and we are optimistic that quite soon we will be in the position to really reach out much more on SMEs, on larger SMEs as well.
That would be great. We'd love to hear that. Capital is king when it comes to growth and future stability in Afghanistan. I want to thank our two speakers for doing a wonderful job and giving us great content today for discussion and for ongoing collaboration together as we go forward. I'd now like to ask panel 3 to come up on our compliance challenges and actionable solutions, and I'll introduce them as they're making their way forward. Thank you. Thank you both. All right. One of the toughest issues on Afghanistan that we always talk about is compliance, and the corresponding banks are no less concerned than everyone else on the issue, but we have a very good panel to talk about this. Our moderator and contributor is Mr. Mariullah Obadi, the Deputy CEO of Ghaznfar Bank, one of our gold sponsors. He's going to talk about dispelling some of the myths. I think Bernd started some of that myth dispelling as part of his conversation, and we can include it on Afghan commercial banking. Second panelist is Mr. Sansar Kakar, who's the chairman of AHG, which includes More Afghanistan, AfghanNet, and Hasab Pay, which I know a lot of people know. And he's also the founding member of the Afghanistan Digital Payments Association, ADPA. His topic is going to be the international transaction types that are happening in Afghanistan and the emerging patterns that he's seeing now in Afghanistan and regionally. Our third panelist is Ziauddin Haidari, who has been with us earlier today. His topic will be the Afghan APS, the payment ecosystem, and automated payment system. And lastly, Mr. Deepak Gupta, who's the COO of Afghan United Bank, our gold sponsor, and his topic is technology and compliance systems within Afghan banking, and why that they believe in the banking sector that this is a continued commitment to excellence. Over to you, Mr. Obadi.
Thank you very much, Jeff. Good afternoon, distinguished guests, respected panelists, and colleagues. I'm Mariullah Obadi, Deputy CEO of Ghaznfar Bank, and I'm a certified anti-money laundering specialist and also a certified financial crime specialist. Prior to my current role, I had the privilege of serving the bank as Chief Compliance Officer. So at the outset, I would like to express my sincere appreciation to Afghan American Chamber of Commerce and Afghan Banks Association for organizing this event. I will not introduce the panel members again because it has been introduced already. Dispelling myths regarding Afghanistan banking system. So first of all, much of the global narratives surrounding Afghanistan commercial banking is shaped by assumption rather than current operational realities. So today, my objective is to not defend about it, but to clarify the facts, dispel common myths, and explain how Afghan banks actively complied with international standards, governance, and control. Right now, most of the banks in Afghanistan, they have very strong correspondent banking relationship with the countries where most of the trade occurs, including Central Asia, Middle East, India, China, Turkey, Europe, and etc. So this points out that the compliance regime in Afghanistan is quite strong, so they could hold all these correspondent accounts, and they are establishing new ones. The strengths and commitment to international standards are there in Afghanistan banking system. We believe that compliance is a strategic commitment, not a checkbox. So Afghan commercial banks continue to align with international AML safety regime, sanction regime, and counter-proliferation of financing. Compliance is treated as a core business enabler, not merely a regulatory obligation in Afghanistan. So the key strengths in Afghanistan banking sector and compliance function and email safety function is the independent compliance department. So compliance is independent. That is the first pillar of a strong compliance program or a strong compliance regime. And as well as board level oversight is there and board level committees are there. And alignment with domestic laws, which are built based on international best practices and in line with the FATF recommendations, and also alignment and following international norms and best practices such as Basel principles, FATF recommendations, and also complying with the screening requirements such as sanction list, PEP database, adverse media news is being also screened out, and enforcement list. So we are, going a step beyond what is the basic requirement is for email safety and compliance, which shows that the compliance is the compliance regime and banks in Afghanistan, they are very conservative towards their compliance program. And similarly, the governance of the banks and corporate governance is very important in the bank, risk management and internal controls. Afghan banks operate conservative institutions largely due to enhanced international scrutiny. So the main strengths in this regards are a strong segregation of duties, fully embedded risk-based approach across customers, products, geographies, and etc. And also performing EWRA on annual basis or enterprise-wide risk assessment. And similarly, there are an independent internal audit functioning within the banks. So I will come to the main points. What are the main myths regarding Afghanistan and Afghanistan banking channels? The first one is that I have heard from some of the businessmen as well that SWIFT is not accessible in Afghanistan, while the reality is that the SWIFT infrastructure exists within the country and all banks are connected with the SWIFT. So what SWIFT is, first of all, SWIFT stands for Society for Worldwide Interbank Financial Telecommunication. Basically, they provide secure messaging services. They are not providing money settlement or fund transfer. That's being provided by correspondent banking relationships and Nostro accounts. And the second myth is that Afghanistan payment system or APS is not working or not functioning, while the reality is that APS is operational and it's used for all domestic sort of transactions for cards and etc. While some enhancements are required, including for expanded services and future projects and payment requirements. These upgrades are actively being pursued by the Afghanistan Bank as part of the modernization, and they're also thinking about different options such as privatization of APS. And the third myth is about sanctions. First of all, let me put some light on sanction regimes and what are the major economic sanction types. So there are mainly three sanction types. What is a comprehensive sanction, sectorial sanction, targeted sanction, which we also call it a smart sanction and compliance. Afghanistan is not under any comprehensive or sectorial sanction. But there are some Afghan individuals who are under especially designated list or under targeted sanction, like almost every country globally, there are individual and their targeted sanction, which is a standard international reality. Furthermore, the general licenses which have been issued by US Treasury have clarified many things, including dealing with Afghanistan banks and no issue of engagement with Afghan banks. Regarding sanction and ways forward, I will give some example about Ghazanfar Bank. In Afghanistan banks and how we in Ghazanfar Bank mitigate sanction risks. So first of all, it is zero tolerance policy. We have zero tolerance policy towards sanctions. This policy not only applies to the customers, it applies to the customers, to the counterparties, to the transaction, to the ports, from origin to destination, all of them are covered. And also we are digging deep into dual use goods and other due diligence requirements. There are some rules basically in the world for sanctioned transactions. Like in OFAC, we have OFAC 50% rule. What does it mean? It means that if you're engaging in a transaction where, let's suppose, 50% of the company is owned by a sanctioned party, still you have the ability to proceed with the transaction. But in Afghan banks, they often apply even stricter internal thresholds, including fully de-risking, regardless of the ownership percentage. Even if 1% is engaged, these sort of customers or transactions are de-risked and eliminated from the banking system. And practical risk mitigation measures for banks are automated and continuous sanction screening systems and programs which are in place. For example, in Ghazanfar Bank, we utilize Oracle FCCM or OFSA, including its different modules for AML safety and compliance, such as KYC, AML, transaction monitoring, real-time screening, case management, and etc. And also we are using from LexisNexis solution and SWIFT transaction screening. So there are multiple layers to ensure that no transaction is bypassed. So sanctions compliance in Afghanistan is managed proactively, continuously, and conservatively, often with low risk tolerance than peer markets. Now that clarity is provided on all misunderstandings, the question arises that what Afghan banks needs from international community. To strengthen transparency and financial integrity, Afghan banks seek to reduce blanket risking, and risk-based engagement should be in place, not disengagement. Support in rebuilding correspondent banking relationship and making it even more strong. The practical enablers are for assurance of major USD settlement banks and donor communities. We can establish, who can establish the correspondent banking relationship by engaging of international audit firms. We can, engage top 4 or top 5 international audit firms to audit the AML safety regime of Afghanistan banks and to receive the report on AML safety program and its compliance status. This report will provide assurance and confidence to the correspondent banks, international stakeholders, and donors, and confidence is built through transparency, assurance, and the feedback of external audit firm on the AML safety regime of the bank. So I will close my statement that the question is no longer whether Afghan banks can comply with international standards, but the real question is how global partners choose to engage, whether in controlled, risk-based, and ethical manner, or by disengagement and unintentionally encouraging obfuscation. With the context, it's important to examine how transaction types and payment patterns are evolving in practice, which brings me to our next panelist, Mr. Sanzar Kakar.
Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you for that introduction. That actually swings very well into what I was going to discuss. So today I'm going to discuss a problem, what that problem is, the solution for it, 9 reasons why I think that's a good solution, and then the next steps of what each of you in this room could do to get there. So as my colleague you mentioned, yes, the problem is not that Afghan banks don't have AML CFT. The problem is not that SWIFT is not enabled in Afghanistan. The problem is not of APS. The problem is not that Afghanistan is sanctioned. None of those things are the problem. The problem is the risk appetite of other banks outside Afghanistan. And that hasn't changed for 4 years. When Ahmad Mahmoud wants to send $100,000 to Afghanistan, right? He goes to his bank or does it online, wire transfer to Afghanistan. As soon as he puts it in Afghanistan, if it's even an option, his bank will reject it. Not because it's sanctioned, not because Afghan banks have AML CFT concerns, because they don't want to send to Afghanistan. That's their preference, right? When Ahmad Mahmoud's father in Afghanistan wants to send him $100,000 through SWIFT, and it lands in Ahmad Mahmoud's account outside Afghanistan, the bank will look at that, oh, we received some money from Afghanistan, they'll have a heart attack, and then they'll close his account, all right? This is what I've experienced, and it's not because of the reasons that he mentioned. It's not because of sanctions, because those banks don't want to do it. And this has been going on for 4 years. It hasn't gotten better, right? So we're here today for a very important reason, is because we were talking about correspondent banking for Afghanistan. And that's to try to increase and allow for transactions to go to and from Afghanistan, right? That's the problem. Why? We have billions of dollars in Afghanistan, but they're not putting it in the banks. There's 12 banks, but they're not depositing. Why aren't they depositing? Because they can't do anything with it. Why should I deposit it there? I'm not getting a return. I can't transfer it anywhere. No one can send it to me. So why would anyone deposit in an Afghan bank? Until we can solve the problem of sending and receiving to Afghanistan, then nobody's going to deposit their money. The money is there, but they're not going to deposit, right? So how do we do that? That's the problem. How do we solve it? In addition to SWIFT, we need another option. We need an alternate option, okay? And so some of the bankers in the room, they're going to say, oh, there's Sanzar. He's going to talk about stablecoins again. But it's very different now. The world is changing very, very, very quickly, okay? And I'm going to talk about what stablecoins are and how Afghanistan can use them, how the 12 banks that are part of the ABA can use it, and what we can do to start right away. Okay, now I'll back up a little bit. I'm a computer science engineer. I'll tell you what the blockchain is. You might have heard this all over the world. The blockchain is just a secure database. That's all it is. You've used Microsoft Excel. That's a database. You put information into it, right? Blockchain is just a secure version of a database. You don't have to put money into it. You could put land records. Here in the UAE, they store all land records on the blockchain because it's a secure database. You securely store information. Now, one of the ways of important information to store is financial information. So it's very good to store financial information on a blockchain because it's so secure and it's so reliable. It's immutable, it's permanent, it's anti-hack proof, right? And so there are things that came up as cryptocurrency. Now, I want to be very clear. I'm not talking about Bitcoin or Ethereum or Dogecoin. Those are speculative cryptocurrencies. Absolutely not interested, no need for it. Out of the question. I'm talking about stablecoins. Stablecoins are one-to-one with a fiat currency. One stablecoin, $1. Same thing. One stablecoin, €1, right? That's all it is. It has nothing to do with speculative problems which have Sharia compliance costs, which have a lot of other issues as well, right? Stablecoins. So what is a stablecoin? There are two types. There's private companies that issue stablecoins, like Circle, a US regulated company, or Tether. Together, they last year processed $30 trillion. Not 1 trillion, not 2 trillion, $30 trillion in 1 year was processed by them. Just those two, USDC and USDT, right? There are other types of stablecoins issued by central banks. The central banks themselves are issuing coins, including in this country. There's a central bank digital currency, CBDC, for the dirham. Many central banks are issuing their own stablecoins, right? So what is a stablecoin? We talked about SWIFT is a messaging system. You send a message, from me to Ahmad and Mahmoud. I want to do this. It's just a messaging system. But in stablecoin, the message is the money. When I send the message, that's sending the money. I don't need to settle later on. When I send the message, that is the money. When he received the message, he received the money. That's it. Very simple, right? Okay, so now I told you the problem. I told you the solution. I'm going to give you 9 reasons why we should consider this as an option for Afghanistan. Just consider it. Think about it, right? Number 1, it's instant, right? Immediate. As soon as you send a message, it's there, the money is gone, right? SWIFT can take between a few hours to 3-4 days even. The average SWIFT transaction is more than 1 day, right? Number 2, it's free. Free, you just send a message, right? SWIFT can charge $30 to $60. The banks can make money off this. You can add your fees to it. So instead of paying for SWIFT messages and infrastructure, it's free. Why not to use it? Number 3, there's restrictions on who you can send to SWIFT, right? With stablecoins, you can send it to anyone. No restrictions. Number 4, and this is the most important reason, it is highly regulated. Circle is one of the most regulated stablecoins or currencies more than anything else. Right now, it's available in 191 countries, regulated, authorized. They're audited by US Treasury, by FATF. Fully regulated, legal. It's not this is some black market magic. No, this is illegal, regulated in 191 countries. Why not Afghanistan? Right? The next reason, which is very important for bankers and treasury management, it's real-time settlement. When you send the message, the funds are gone instantly. You don't need to T+1, T+2, T+3. What about weekends? No. Instant settlement. You don't need settlement later on. Number 6. Because there's real-time settlement, you don't need to hold a balance at the International Bank of Settlements in Switzerland or with a correspondent bank or with somebody else. I need to hold a balance in case I send SWIFT or get SWIFT. No. You don't need to hold a balance, right? It's instant from your account directly to the destination. No need for settlement. Real-time settlement, right? And this is not just for individuals. It's also for organizations. Right now, Visa accepts stablecoin settlement. MasterCard, MoneyGram, all the biggest, largest financial institutions, they accept real-time settlement through stablecoins. You don't need to go through, SWIFT and then settle at the end of the day. No. Real-time settlement, directly with Visa, directly with MasterCard, directly with many other organizations, right? You don't need a correspondent bank. Great, let's have as many correspondent banks as we can. But there's going to be problems still, right? 4 years we've been having the same conversation. 4 years ago, we had the same conference, right? You don't need a correspondent bank. There's no intermediary. The message goes directly to the destination. All right, so that's what it is. Right now, my organization, we've already tested it, right? You can send it directly from your account to 87 countries, we've enabled, to a bank account. It doesn't need to, do they have a stablecoin account? No. Give me the bank identification code, the BIC, give me the IBAN number, khalas, you're sending it directly to their bank account. So the customer doesn't need to know if it's a stable coin or what is a stable coin. No. The customer logs on just like they're sending a wire transfer to a bank. I'm selecting Australia, here's the BIC number, here's the IBAN number. Click send, and it goes. In the back channel, either you decide I want to use SWIFT or I want to use stablecoin. That's your choice. That's your banking and correspondence. That's your internal details. Right? All right, so in closing, what's the action? What am I asking you to do? Each of you in this room, I'm asking you, okay? Please, there's 12 banks, there's financial organizations here. Let's go with the ABA, right? Let's think about this. Let's consider it. It hasn't worked for 4 years. Let's find a way to get transfers working for Afghanistan. Let's go to the central bank together and say, Mr. Governor, okay, let's have a pilot. Let's just do 100 transactions. Give it a small limit, whatever you like. Exactly the same. When a bank sends a SWIFT transfer, the same procedure, instead of using the SWIFT message, we're going to send a stablecoin message. Same thing, same AML CFT, same KYC, same compliance from central bank, reporting, FinTraca, everything, same. But just instead of using this system, let's use another option. Let's see how it works. If it works, great. Khalas, we can help people in Afghanistan. This is the #1 complaint of every sector in Afghanistan. Any sector in Afghanistan, ask the businessman, what's your biggest problem? Sending money to Afghanistan, sending money from Afghanistan. How can I pay my raw material suppliers? How can my customers pay me? #1 problem. 4 years in a row. Ask anybody. Right? We can solve the problem for Afghanistan. We can build a country together. So let's do it. Thank you.
Energetic one.
As always.
Thank you very much, Mr. Cocker. It was really nice speech regarding solutions and stable coins and CBDC. Yesterday there was an event of BAFT. They have been discussing the same, so I think that's the future. Moving forward, now I would request our colleague, Mr. Ziauddin Haidari, to put some light on Afghanistan payments ecosystem and automated payment system solution, capabilities, constraints, and the forward path. Thank you.
Thank you, Mehdi Sahib. This topic of Afghan payment system, I wish someone from central bank would talk about it because it's their baby. But since I'm requested to talk about, so I will share our own experience as a first microfinance bank and also talk about the Afghan payment system. So I think around 15 or 16 years ago, the Afghan payment system was established, which is the e-payment switch in Afghanistan, owned by Central Bank of Afghanistan. It has come a long way. There were issues with interoperability and creating the ecosystem over past, I think, 1 decade. But during last 5 years, it has taken momentum for creating the ecosystem, especially in 2021. All the banks were able to connect with national switch. But then there was slow in process because of the political transition and all other challenges that were there in Afghanistan. The good thing is that over last 1 year, again, there are a lot of discussions about APAs. We heard about the privatization. It's still not decided, but whether it is under the central bank or under the private sector, one thing is confirmed, that there is something on the way. And it is a transformation, and we see a lot of interest in digital solutions. At the moment, the banks, EMIs, and the payment solution providers like Hisab Pay and others, some are connected with APS, some are directly integrated with banks. But we heard this morning as well that a financial inclusion strategy and a digital roadmap is approved. I think this level of seriousness was not there, I think, before the August 2021, and we were struggling with the interoperability. So now we see a lot of interest, both from the customer side and also from the regulator, from the all government entities. They are very much into digitization, and there is a strong support of investments in this area. I think going forward, the next 6 months will be very critical as far as Afghan payment system is concerned, because there is a roadmap. They will be working on the implementation of this roadmap, and all banks are advised to align their digital transformation strategy with this national financial inclusion and digital transformation roadmap. And last, I think there are a lot of opportunities, especially for fintech companies. A lot of opportunities for data-driven decisions, like credit decisions or compliance, risk. All these assessment and analysis will be much more easier in Afghanistan. So I think both the international community, the international organizations, and the Afghan government and the private sector, the one area which everyone agrees is investment in digitalization, focusing on digital solutions. So with that, I'll stop here. Thank you so much. But I think central bank may be the right speaker about APS. This was just my own knowledge which I wanted to share about APS. In last point, before I conclude, in First Microfinance Bank Afghanistan, we have been also able to work with IFC to develop our own digital transformation strategy and roadmap, which we have already started implementing. And we see a lot of opportunities in this area. You all know, and you may know, the demography of Afghanistan. 70% of the population is below age of 25. So there is a very high rate of adoption to technology. And we see every day there is, whether it's AI, ChatGPT, or any other solution, the adoption rate is very high. So in a 1 year time, we see even in very remote areas of Afghanistan, people are using technology. There were some disruption last year, a few days in connectivity and internet. I think we felt that there is a lot of pressure, and that was one of the reasons that connectivity was restored. And I think this year, 2026, will be critical and very important for many digitalization and digital projects in Afghanistan. Thank you so much. Just a brief info about APS. Thank you.
Thank you very much, Haidari Saib, for your kind insights. Now I will request our colleague, Mr. Deepak Gupta, to share his remarks regarding technology and compliance system in Afghanistan banking industry and the commitment to excellence. Thank you.
Assalamu alaikum and good afternoon, distinguished colleagues, guests, and our partners. It has been really a privilege to be among the esteemed experts and partners in the banking or the financial industry. As we've been discussing since morning on the compliance and the risk mitigations, and it has been a very prudent topic and the strongest aspects where entire world looks Afghanistan at. As we have been discussing, we have been going through the assumptions part as mentioned, and I use this stage to take this stage as an awareness to the entire world where the correspondent banks or the respondent banks look Afghanistan at. So the Afghanistan banks, as I've been working for last 6 years in this domain, now the banks recognize compliance as a, not an option, it is a fundamental enabler of the financial, stability, integrity, and the inclusion. Somebody mentioned on the financial inclusion part also. Sir has mentioned, I think. So Afghan banks do recognize these things, and the banks have taken a lot of initiations on this series of digital upgrades. I'll just mention a few of them to give a confidence how the Afghan banks or the central bank leadership is taking actions on those things. Core banking system, the banks have taken steps to modernize or the real-time processing on the centralization of the data through core banking system. Then to internet and mobile banking platforms to expand customer reach, especially in the unreserved or the remote regions. Integration of the wallets, sir has also mentioned on the APS, and the payment gateways to support e-commerce and person-to-person transfers. The banks have also taken some measures for the adoption of the standardized APIs and interbank connectivity that supports faster settlement and transparency. That was also a part of the Mr. Kaka's address, how this interbank connectivity can be faster. So these steps have been designed to improvise the operational efficiency, deliver secure and reliable services. Apart from that, the central bank has also has been instrumental these days in accelerating progress and shaping the regulatory ecosystem. That is very, very much important, how the central bank, I just use this stage to tell the world how the central bank leadership is taking. They are making steps, they are taking steps for the policy issuance and regulatory standards that reflect evolving, I can say, international practices, guidelines on AML safety, digital banking norms, and then they are also doing promoting, capacity building through various workshops, circulars, and supervisory outreach. The central bank is also encouraging technology adoptions and risk-based supervision across the banking sector. So all those things between the banks and the central bank reflects a shared commitment to the entire world to uphold the integrity and the Afghanistan financial system. So that constitute a pillar to the compliance system. So coming to this, so the compliance, the Afghanistan bank system, they take that compliance is embedded in the core system and daily decision making. The key measures which are adopted by the Afghan banks include implementation of the automated transaction monitoring system. We have been talking on the monitoring and screening, sanction screening platforms aligned to evolving international lists. So these are the various parameters which the banks has adopted, and of course the comprehensive KYCs and customer due diligence, as ACGF has also mentioned. And we are really, if we see, if 3 banks in Afghanistan have been onboarded by ACGF, so this is the testimony of the Afghanistan banking compliance system. That is what it has been boarded. And banks in Afghanistan have been onboarded by many international banks. If I talk specifically of AUB, we have 23 correspondent banks across the globe. Onboarding with 23 banks is a testimony that Afghanistan banking system do follow international practices and standards, which validates the compliance system of the country. I will use the word country. ADIB, after 3 years of long struggle with ADIB and SDFC Bank, we have been onboarded, successfully onboarded. So that also gives confidence in the compliance system of the country. So if we see all those things, We have been talking, and definitely I'll like to thank ABA and Afghan Chamber of American and Commerce because they have given this platform. This panel is basically based on to illuminate the various myths which we have on regarding the Afghanistan banking system. So this is what I would like to vouch that Afghanistan banks are following the international practices. We are compliant, and of course there are certain improvisation that required and what that central bank is also looking at. So to conclude that, I would just like to stand that we are ready to work with the correspondent banks and international partners supported by our robust technology and sound compliant practices. So thank you so much. Thank you for that.
Thank you, buddy. Okay, so we're open for some questions. So Mr. Akiki first, and then Kishro next.
Thank you very much, Mr. Greco. My first comments is about you, that I wish you had invited Mr. Qureshi, who was an expert. Yes. Okay, thank you. My second suggestion is to Mr. Haidari. I know him for more than 20 years. A very knowledgeable person. If I suggest that instead of ecosystem, we should use the ASG practice, which stands for environmental, social, and governance. That practice is very broad. So just suggestion. Okay, and my questions comes to both Mr. Deepak and also Mr. Ubaidullah. That is very general question. I don't know which one of you could answer that, but these are what I call QC, questions and comments. So it's question and comments. Number one is we used to use and we're very used to that term, PPP. That is private-public partnership. And on that, private sector sometimes is not able to provide fund to get those projects. So I would change a little bit, and I will say instead of PPP, it should be BPP. So bank and public partnership. That one will have a strong trust, as our friend Mr. Greco, you started to use that one, everyone is talking about, and I love that word. So that is one suggestion. The second suggestion is that, or the third one is, that is to say regarding, we have forgotten that the recent, for the last 4 years, when the new government came, or the new system came, we have 13 big projects that they have started developing, starting from Kushtepa Canal with all the, water dams and all that stuff. So Kushtepa Canal, we're so happy that that canal is there, but we think of it just only in terms of water or irrigation. But that is a very agricultural industrial complex. And I would like to say that we have to see it, maybe it's after 1 year or so, it will be completed. So water is there, as the Christians say, hallelujah. But that's not enough. We have to think, and there is a big sort of, I shouldn't say article, but a big writing is done about it, about the future of Kushtepa Canal. By the way, we don't use the term properly. It's a Kushtepa Canal. Kuch is like a goat, and tepa is like hill. So that's what actually khush tepa means. Okay, we use all kinds of English terms to it. So that khush tepa canal is, sorry that I'm taking a little more time. Just, and I said question and answer, and also comments. I say QC. And so in that one, if any of you are interested, we could share that writing, that it has transport, it has agriculture, it has all kinds of things. So we just don't think about it, agriculture. So I'm trying to say that the banks, including the United Bank, they have a lot of problems in terms of utilizing the deposits. So this is something that I'm sure, Matiullah, you will probably know about it, that these things has to be used, the deposit. So this will develop trust, development, economic development, agricultural and industrial. Thank you.
Thank you, sir. Your points are very well taken, and we definitely look forward to work in these collaborations on that, the lines which you have mentioned also, on the partnerships lines. So definitely we will work accordingly.
Yeah, and I want to add that in Ghazanfar Bank, we have developed some products which can help us to achieve the same, result, such as Wakala. So through Wakala, we have been able to finance some of the major projects, national projects. And also we have developed a special product for agriculture development. So, an agricultural loan. So I think this will also serve the same purpose. Thank you.
And all banks are committed towards that.
Yeah.
For the economic development through various products, specifically as sir has mentioned on the agriculture products and various Islamic banking products, we are aligned to it.
I didn't bother you to ask you how is your relationship in terms of what is called Sharia board or Sharia council. Do you get something from it, or it is?
Yes, sir. We are now all the banks are Islamic banks in Afghanistan, and we are totally Sharia compliant. And all the even as you mentioned about the specifically to the loans, all the loans are being approved by Sharia board first, and then it goes to the other things and boards.
We have to go to Kishore next because we have another speaker waiting.
Thank you. My question is from Gokar side. The future is blockchain, and we believe on that. I believe on that. You believe on that as well. So we have to work together, and we're also looking forward to build crypto coin or currency coin of the AFN as well in the future. To bypass, the SWIFT or correspondent bank relationship, do you think this is an alternative option right now for Afghanistan? If you look at the trade deficit in Afghanistan, so if the $11 billion is the import and export is, let's say, $1.5, $1.7 billion. So there's a huge gap. So let's say if you're receiving funds, a stable coin to our, let's say, a circle account, how end of the day we can convert back the crypto to use dollar currency and use it again through our correspondent banking channel and use it again for investments or maybe bringing physical cash into the country, because the central bank is disconnected right now with US banks to ship physical cash. The second question is about onboarding process with Circle or such other financial institutions to provide crypto account services. Do you think they have simple KYC process to onboard a financial institution from Afghanistan? Thank you.
Excellent questions. Very good, very important, very relevant. In terms of the first one, yes, usually we think about, okay, a stable coin, how do I turn it into paper cash? And then paper cash, how do I turn it back into stablecoin? That is an important process to understand, but the world is moving so fast to stablecoins that there are central banks that are now keeping it as a reserve currency. So they don't just keep paper dollars and gold in the central bank, they keep stablecoins as well. So they can keep it on their assets, on their books. They don't need to keep converting back and forth for every transaction. They can keep their assets, their funds, the customer funds in that currency, and it's very liquid because immediately you can use it. You don't need to switch it back and forth. If you do want to switch it back and forth, yes, your second question in terms of either onboarding directly with Tether or with Circle, they generally want to look at very, very large organizations. And now that Circle is a public US company, they're very, very careful about who they onboard. And so usually it's easier just to go to a second tier if you want to switch. So there's thousands of these exchanges that are used. For example, the biggest one is Binance, and it's registered here in UAE and operational in Afghanistan as well. So people can switch back and forth if they want. Between any, it doesn't have to be dollars. They were talking about rupees or dirhams or euro, any stable coin to go back and forth between the conversion. But if you get the conversion wrong, then you're in the same problem. It costs a lot of fees, 1%, 2% to switch back and forth, and then it defeats the whole purpose. The ideal is to find a way where the conversion is free. So anytime you want, you can put dollars into your fiat bank account and convert it or back to a stable coin back and forth without any cost at all. That is the ideal when it works. If you start charging between that, then it defeats the purpose. So what you asked is the very important question to make sure it works. And it's headed this way. It's just a matter of when we will do it. In terms of how is it feasible for Afghanistan, I think it's the only option that's feasible. I don't think Hawala is sustainable. I don't think SWIFT is sustainable because it's not where we're going. The whole world is moving towards that. Even SWIFT themselves, by the way, SWIFT themselves are working on a blockchain project themselves. Forget everyone else. So that's where all remittances, transfers, payments are going to be in the future. Thank you.
All right, thank you so much, panel. You are relieved of your obligations. Let's hear a nice round of applause. Okay, the technology is failing me a little bit. Our opening Zoom was for 6 hours. That's the maximum you can get in Dubai on Zoom. And it expired at 3. Mr. Steven Rodriguez, the UNDP special rep in Afghanistan, was waiting on that Zoom, so we sent him the new link. But I don't see him on our screen unless he is the Samsung phone. Stephen, if you're there, can you speak to us briefly so we know that you can hear us? Okay, I've sent him 2 texts and called his secretary and also spoke or sent her a text. So what we'll do is we'll move on to our next panel, and then if I get Stephen back in for his keynote, we will do so as well. This is panel number 4. Can I ask them to take the stage with the topic of innovations, banking, digital payments, and fintech, and how can we improve Afghan access to correspondent banks and improve trade finance going forward? So this is Hojat, you're here, right? Here we go. Hojat Fazli, Sansar Kakar will speak on the issue of updating us on the e-payments and digital payment initiatives. Dr. Abhishek Jaju is going to be speaking on improving risk management through Afghan banking capacity development. He's a big friend of the... Okay, that's better. He is a good friend of ABA. And then Mr. Mobeen Ahmad Amin he's our deputy CEO from Afghan United Bank. He's going to speak on the topic of digital banking and recommendations for more innovation within the Afghan banking sector. And our last panelist is Mr. Nitin Madhav, my former U.S. government colleague. He's from the American University of Afghanistan, AUAF, and he's going to speak on the topic of building human resource capacity in order to support the long-term Afghan commercial bank development. And it's a success story that AUAF hasn't talked about until today, so we're very anxious to hear from them. And I will take over your name cards and ask you to go ahead and get started. All right, over to you, Hoja. Thank you so much for agreeing to be our moderator.
Thank you very much, Jeff. Bismillah ar-Rahman ar-Rahim. Good afternoon to everyone. I know it's end of the day, and probably everybody is tired. But Jeff, if I may, I would like to read out a statement from the World Bank. A few of colleagues are watching us online, and they requested that I should read the statement before the audience.
If it's nice, you can read it.
I don't know if it's nice, but I can read it, yeah?
Okay.
So, statement from the World Bank. Apologies, but as the World Bank, we wish to request a corrigendum to a statement made a while ago. On the World Bank and accurate data, we continue to play a leadership role in knowledge generation and on the data agenda in Afghanistan. Since the Taliban takeover, our program has contributed to providing the evidence base to inform the international dialogue. Our team is currently engaging in addressing crucial data and knowledge gaps on the private sector. A new enterprise survey and informal business survey will inform on the status and challenges of private sector firms operating in the formal and informal sector. We are also working on the largest initiative to access households' welfare and labor market through a new round of Afghanistan income expenditure and labor force survey. This will let us see monetary and multidimensional poverty, displacement, food security, access to services, and gender disaggregated statistics on labor market indicators. In terms of funding being cut from the World Bank, this is also factually inaccurate. We have just completed a board meeting with clearance to introduce a considerable private sector resilience program targeted to the private sector with considerable funding through private banks. We respectfully encourage statements based on evidence in the spirit of this conference and its perceived rigor. Thank you.
Who sent that?
From the World Bank.
Who in the World Bank?
Wajma.
Wajma.
Yes.
Okay. Wajma couldn't make her flight to get here because the weather has closed Kabul airport. So thank you, Wajma. Okay. Now
Yes.
we're ready.
So again, I don't want to even use my 12 minutes time, Jeff, but I would rather give it to the panelists. But maybe just as an introduction, if I may borrow two quotes from the previous respected speakers, I think, Bern, you said it, that the Afghanistan financial sector is not that much developed. That's true. And this is perhaps not just the case with Afghanistan, but also with the region, and particularly with countries that Afghanistan trades. Lack of digitalization or proper digital integration is an issue, and that's why in many cases even perhaps the opportunities for integration in Afghanistan could also be sometimes difficult, particularly when it comes to trade and businesses. And then Kakar Seb also talked about the lack of appetite with corresponding banks to do business with Afghanistan, and probably due to whatever reasons, whether political or otherwise. I think it also is the case that in many cases in Afghanistan, there are challenges, structural challenges when it comes to financial digital integration in the country. For instance, lack of infrastructures. I think this is really important. We have been talking to the private sector and particularly the financial sector in the country, that everybody is complaining about lack of proper infrastructures when it comes to digitalization. There are also regulatory and policy issues overall in the country, and I think that's also an issue and a challenge for the fintech, particularly, and electronic money service providers. Cybersecurity, for instance, again. And then the digital literacy, this is really an issue in the country. Many people in Afghanistan with a high electricity rate, they don't know how to use these digital services. And most importantly, the inaccessibility. Even banks in Afghanistan, the banking services are not accessible for everybody. And it's also not affordable. So I think these are all reasons that we are still way behind other countries when it comes to digital financial integration. Jeff, you talked about that money is the king. I would say that in the case of Afghanistan, cash is the king. And that's why, still, even if you look at the prospect of digitalization, down the line, everybody relies on the cash distributors, on the cash agents. Yes, we have done a lot of integration at the top level, but we need to think about a bottom-up integration. We have to integrate and digitalize end users, the beneficiaries, the public into the system. And I think that's where even the initiative that we implemented, probably one of the largest together with Hisab Pay, this is where we really stuck at points that, okay, yes, we do a nice integration and digitalization, but when it comes to, and that the issue is again with the infrastructures and with the trust as well. Maybe the other issue with that is the public trust. And with the past history of banking sector in Afghanistan, different cases and multiple crises as well. We had the Kabul bond crisis, and then sometimes, during COVID, and then very recent one, the change of the government. So these are all issues that people are still preferring for cash, and they still believe that perhaps digitalization may not be an option for them. Last thing, I think the informality of the Afghan business nature and the trade itself. It's widely informal in many ways and in many cases, and I think that itself is an issue when it comes to digitalization. But maybe colleagues and the panelists could talk to that, and I'm not an expert on banking or digitalization, but I think broadly speaking from the private sector perspective, these are all important issues. When it comes to corresponding banking, I think it's not the appetite issue that they don't want to do business with Afghanistan, but it's rather about the risk taking, that they are not interested or they don't have the appetite to take the risk. And the risk is higher, there is no doubt. So it might be higher 10 times than the profits or the business with Afghanistan. And that's why it gets very difficult. True that there are no sanctions, and then perhaps this is also a very wrong perception about the sanction scenario in Afghanistan, but again, the risk sharing. And for that, it's a job that everybody has to do. It's not just the private sector or the government or policymakers. I think everybody has the responsibility to look into that, whether it's the international community, the donors, the policymakers, the government, and the private sector. I really would like to hand it over to the colleagues, but maybe I can start with Nitin, who is a very long-standing friend of Afghanistan. And with his previous roles in supporting Afghanistan, particularly through the USAID, and now independently still interested to come and listen to us. So Nitin, over to you, please.
Thank you very much. Good afternoon, everybody. I want to thank AACC and Jeff for inviting me. And as you just said, a lot of you know me from my previous perch at USAID. But now I'm thrilled to actually be the new Executive Vice President of the American University of Afghanistan, AUAF. And this is AUAF's 20th year of operation. And even though we're a liberal arts university, the bulk of our students are business and computer science majors. So I wanted to talk about a fantastic human resource that we offer, our graduates. And take a look around the room and see how many women we have in the audience at the moment. And this actually matters for every organization that cares about talent, because 3 out of every 4 AUAF students are women. That's not a slogan, it's a competitive advantage, because we are training the most underutilized resource in Afghanistan, which is also its largest pool of untapped professional capacity. But if you're thinking, that's admirable, but can they perform in a bank? That's actually the right question to ask. So we have several graduates who are working in banks at the moment. For example, 2 of our alumni are working as audit officers at a bank. They support internal audits, review financial and operational processes, and they help ensure adherence to internal controls in regulatory environments. Their jobs require precision, confidentiality, and independent judgment, skills that are strengthened through AUAF's emphasis on analytical thinking, documentation, and ethical responsibility. They're both relied upon to identify control gaps, follow audit trails, and uphold professional standards in high-risk environments where accuracy and integrity are very essential. So when you recruit an AUAF graduate, you're getting a few things. First, capability that you can use immediately. Our students are trained to write clearly, present persuasively, and defend an argument with evidence. In banking, that translates into analysts who can write a memo, communicate risk, explain assumptions, and make the right decisions, not just run numbers. Secondly, digital fluency. Especially among our business and computer science students, these are graduates who are very comfortable with spreadsheets, data systems, and structured problem solving. They've learned to work in modern collaborative environments, often remotely across time zone and under constraints. Third, you're getting a talent pool that is very resilient and has good judgment. AUAF students are unusually strong under pressure. They've learned discipline, prioritization, professionalism, and circumstances that would overwhelm many people. In banking terms, they don't melt when things get hard. They don't need hand-holding to stay focused. By even considering an AUAF graduate, you're already tapping into the best of the best in the Afghan educational system. AUAF is harder to get into than Harvard. Let me repeat that. AUAF is harder to get into than Harvard. We only accept 1.36% of our applicants. So last year we had 21,000 applicants. We accepted 285, okay? So each student is carefully vetted, and we only admit those that have the highest chances of success. We offer 3 majors of interest to this community, specifically business, law, and computer science, all of which are built on a liberal arts foundation. And why is the liberal arts foundation important to the banking or business context? As a graduate of a liberal arts university, let me tell you, the liberal arts education gives graduates a strategic edge through critical thinking, ethical judgment and integrity, clear communication skills, intercultural skills, and an awareness. In a professional workplace environment, these skills translate into sharper analysis, more rigorous assessments, and better business decisions in uncertain times. AUAF's liberal arts and sciences curriculum is the values-added layer that turns technical proficiency into leadership, sharper thinkers, ethically grounded decision makers, persuasive communicators, and because we have tailored our programs to the Afghan context, it's the foundation for the specializations. So our business program, both undergraduate and MBA, provides students with a conceptual foundation in business and practical skills to address real-world problems. Undergraduate students focus on finance or management, and the graduate students focus on research or application within a specific industry, usually the one they're working in right now. Our finance graduates can do investment and financial analyses and evaluate business models. Where they really stand out is in their understanding of Islamic finance compared to conventional finance, both in concept and in practice. This allows them to assess where 2 models may or may not be compatible, and they can bridge disconnects between the 2 in practical ways. Our graduates are also unique in their understanding of financial instruments and fintech. Students can assess the application of technologies such as blockchain and the integration of agent banking or the formalization of the Hawala system. Our management graduates are trained to evaluate organizational effectiveness and alignment to strategic objectives. They can assess organizations from multiple perspectives: technology use, logistics, product development, promotion, etc. The issues and/or constraints that limit businesses and organizations usually go across many different disciplines. The law program teaches students an integrated legal curriculum combining international law, Islamic law, and the core principles of the Afghan legal tradition that have remained largely unchanged despite the political transition. This foundation equips graduates to work at the intersection of domestic legal practices, Islamic finance, and international banking norms, enabling them to structure and assess transactions that are both Sharia compliant and intelligible to regional and global financial institutions. In an environment where conventional banking and many avenues of international trade are constrained, our students are trained to support the private sector through alternative financing, contract design, and risk-aware legal structure that align with Islamic finance principles while remaining compatible with cross-border commercial expectations. In doing so, they help bridge Afghanistan's internal legal and financial realities with the wider transnational economy. Our computer science program does far more than train students to write code. It equips young Afghans with the problem-solving mindset that's essential for modern economies and resilient societies. Through a rigorous curriculum grounded in software engineering, data science, cybersecurity, and emerging technologies, our students learn how to design systems, analyze complexity, and build scalable solutions in real-world problems. Our graduates apply their skills in finance, logistics, healthcare, education, public administration. They help organizations improve efficiency, increase transparency, and make data-driven decisions. In a context like Afghanistan, where access, connectivity, and innovation are critical, computer science becomes a powerful enabler of economic opportunity and institutional capacity. For example, Tom, raise your hand, Tom, just hired one of our star students who's building a mechanism specifically designed to link Afghan businesses with Western customers by reducing the risk of sanctions and seizures. Equally important, we emphasize the adaptability and ethical responsibility. Technology evolves rapidly, and our goal is not only to teach today's tools, but to prepare graduates who can continuously learn, collaborate across disciplines, and apply technology responsibly, such as AI. We teach our students to understand where AI is helpful and how to use it well. For example, students evaluate AI-generated emails with criteria that's for best practices in email writing. This gives students insights into where AI is helpful and where it falls short and needs a human editor. AUAF integrated multiple AI platforms into our curriculum to enable faculty and students to delve deeper into content and get immediate feedback on assignments. We want to ensure that our curriculum aligns with the skills that you all need. Your feedback helps us tailor our academic programs to your workforce needs. Our students are not just future employees, but as future leaders, innovators, and entrepreneurs who will help shape the more connected, efficient, and inclusive systems wherever their careers may take them. So please think of offering internships to our students. For example, one of our students, Fakria, is a senior business student and works in the customer complaints department of a bank in Kabul. She said that her AUAF education prepared her to manage complex customer interactions, identify root causes of issues, and communicate clearly between clients and the bank. When we spoke with her last week, she talked about how the practical skills from her coursework enabled her to enter the job market with confidence and support herself and her family. So I want to offer you something very practical. We have a pipeline of vetted, capable professionals that you can hire, people who are trained to think clearly, communicate in professional English, analyze data, and manage ambiguity and work across cultures. But if you do that, you will quickly see that what I'm describing, AUF is not just a university. It's a talent engine, and it's one of the most credible, professionally trained pipelines connected to Afghanistan today. Thank you for your time, and I'd welcome the chance to talk to you all afterwards about what kind of roles you all are hiring for and how we can match you with the strongest candidates. Thank you.
Thank you very much, Nitin. I just have two quick questions. First one, that these graduates are also available for in-person work, or they're also available for online?
Both.
Both, okay. And the second one is that in terms of, so you said that, of course, there is no doubt the professionalism and quality of education at UAF, but does funding scarcity also play any role into your capacity to maybe take in more students as the demand is very high?
Yes. And so thank you for mentioning that. We have been coming to you hat in hand asking for donations for the last 20 years, and we will still continue to do so until we have a very strong and robust endowment. But we are always very happy to accept donations to increase the talent pool that we're able to accommodate.
Thank you very much. Mr. Mubin Ahmad Amin, who is the Deputy CEO of Afghan United Bank, I know that you have your own paper to probably or points to talk about, but I would also request that maybe if you could elaborate a bit on what kind of recommendations do you have when it comes to innovation in the corresponding banking with Afghanistan? What do you think is needed for the Afghan banks to do in order to improve its relationship with corresponding banks?
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. I think what you have asked, I have already covered in my speech. So I will go through that and inshallah I will come if I didn't answer. So I will quickly answer that as well. So good afternoon, dear colleagues, panelists, guests, leaders of the Afghan banking sector, and most importantly, our international correspondent banking partners. Thank you all for being here today. A special welcome to our global correspondent banking partners. Your support in enabling international trade and remittances has been a vital lifeline for the economy of Afghanistan, and we deeply value this partnership. It's truly an honor to join you in this discussion, a subject that is not only important but key for the future of our country, digital banking and innovation in correspondent banking. We all understand that the correspondent bank is the backbone of global finance. It enables liquidity flow, trade to be financed, and families to receive remittances. But in today's digital age, this ecosystem must evolve. It must become faster, more secure, and seamlessly interconnected. The world is moving toward real-time, low-cost digital transactions driven by APIs, blockchain, and new global standards. For Afghanistan, digital transformation is more than a technical upgrade. It's a direct path toward greater financial inclusion, transparency, and economic participation. So what are we doing about it? I would like to share the certain steps Afghan banks are taking to align with these global standards. First, we are modernizing from the core outward. Banks have migrated to real-time core banking system and are prioritizing integration with global network like SWIFT using the latest ISO 222 messaging standards. Second, we are going to digital where it matters most for our customer. Leading banks now offer mobile banking, internet banking, and SMS-based services. This is not just about convenience, it's reduced dependency on physical branches, reach underserved provinces, and bring more people into the formal economy. Third, we have forfeit our foundation. We have adopted digital KYC platform and enhanced our AML safety monitoring tools, aligning with international recommendation. Trust is our currency and we are investing in it. Risk management section, compliance and transaction transparency remain non-negotiable priorities, and Afghan banks are strengthening second line and third line oversight accordingly. Fourth, we are embracing partnership with banks or collaborating with fintechs to expand digital payments, introduce cardless withdrawals, and provide micro loans. We don't have to build everything in-house. We can innovate through collaboration. And fifth, we are taking cybersecurity seriously. Investment in 24/7 security operations, corruptions and incidents response teams are aligning our defenses with global norms. None of this happens in a vacuum. Our central bank, the Afghanistan Bank, has been an essential partner in this journey. DAB is steering a progressive regulatory framework for digital banking and e-money. It has facilitated a national payment switch for interoperability, a crucial piece for correspondent connectivity, and is focused on capacity building, training bank staff, and promoting digital literacy among customers. So we are building the runway. Now, how do we take off? How do we specifically innovate in correspondent banking? I offer 4 recommendations. Accelerate API-based connectivity for real-time data exchange, pilot real-time cross-border payment corridor with the international partners, priority corridors, example, or humanitarian trade flows. Phase pilot under correspondent supervision, build risk-sharing mechanism to reshore our correspondent partner and reduce costs. Support a national digital identity system, a secure eKYC infrastructure that makes verification fast and reliable. Dear friends, the path is demanding, but the direction is clear. Digital transformation is the bridge between our current reality and our future as a connected, successful financial sector. The steps I have outlined: building our digital core, embracing APIs, creating specialized corridors, and innovative ensured compliance, are not just technical upgrade. They are signal to the world that Afghan banks are committed to being secure, efficient, and innovative partners. The journey requires collaboration between banks, with our regulatory, with technology providers, and most importantly, with our international correspondent partners. Here today, let us build this bridge together. We invite our correspondent partners to engage with us through pilot programs, structured dialogues, and shared risk framework, as to have progressive being measured, transparent, and mutual. Thank you.
Thank you very much, Amin Seb. Indeed, good recommendations. Kokar Seb, maybe you could tell us a bit about the bottom-up integration, and particularly as a lead fintech, what needs to be done in Afghanistan to really, make the money as the king, not the cash.
Wonderful. So that's exactly it, is that, it was mentioned that the population of Afghanistan is young. And in many parts of the world, you just pay with tap to pay, like here. Right? You don't have to take cash out to do everything. And people are happy to do that, and they're happy to pay for that. Right now, if I want to pay a government tarifa in Kabul, the average time is 6 hours. That means I have to wait in line to pay my government bill for 6 hours. Not inside in a nice air-conditioned place, either outside in the sun or like it is today in the snow, to pay my government bill, whatever it might be. So if you ask that Afghan that's waiting in that line for 6 hours, right, are you willing to pay 5 Afghani, 10 Afghani, just from your phone? He would say, of course. Where? When? How? Right? They're so hungry and thirsty for digital payments in Afghanistan. We have now reached almost 1 million users in Afghanistan as a SabPay, 1 million users. And that's a very kind of an exponential growth. And we expect to grow much faster as well in the months and years to come. And it stems from actually one of my favorite stories. So my favorite story is from over 150 years ago, about the London Shoe Company. And the London Shoe Company, they were manufacturing shoes in London, nice, proper shoes. And they said, okay, we want to expand. Let's go to Africa. So they sent 2 different sales agents to Africa separately, all right? And they said, go see if there's any market to sell our shoes in Africa. The first sales agent, he comes back to London and he says, nobody wears shoes in Africa. Don't worry about it. There's no market there. Forget about it. The second sales agent, he comes back to London and he says, oh, you're not going to believe this. Nobody wears shoes in Africa. We can sell to everybody, right? So when I see challenges in Afghanistan, I always try to think of that story. Oh, so, you have to wait in line. There's not e-payments for government payments. Wonderful. Great opportunity. Let's sign it up. Today we have 80 different government bills that you can pay through Hisab Pay. 80. You can pay instantly from your phone, 24 hours a day, right? Oh, there's not really an easy way to do a bus booking to go from Kandahar to Kabul, or a flight booking or hotel booking. Oh, really? Wonderful. Today we have several of the major bus companies where you can pick your seat in the bus through Hisab Pay and book and pay for it right away, not to mention flights and hotels and everything as well. Oh, there's no Uber? Great, order a taxi. There's no Uber Eats? Great, order your food to your home. How can I find a good doctor? Oh, I can book one through Hisab Pay. I'd like to pay anyone through a card. I'd like to transfer money to anyone. All these services are there, and it's taken us many, many years and millions of dollars of investment to get this set up. So what am I asking? What am I asking the banks in the room? What am I asking here? Is that now we have this infrastructure. We don't need to duplicate it. Let's invest together into it. I'm happy to open up our platforms and APIs to all the banks. Instead of you developing your own, electricity bill payment system and mobile top-up payment system and integrating separately with each of the 5 telecoms, it's already done. You can offer it right now to all of your customers. Great value add. They should keep their money in their bank accounts. With one click from their bank account, pay their electric bill, top up their phone, send money to any country in the world, on and on and on and on. Just one click, right? And you can add your own fees on top of that, as much as you want. Right? They're your customers. They're going to pay for that convenience, to you. So that's what we've done already. What are we going to do now? We're about to launch our digital financing platform. All right? This is for microfinance as well as for the banks. The idea is, instead of each individual customer to go separately to each bank, oh, Mr. Bank, I would like a loan. Okay, here's all this paper. You need to sign and stamp and date and attest, and then go verify your address and give me your KYC and your AML CFT and your biometrics and your e-Tazkira and your address verification and on and on and on and on. Okay, thank you. Let me do all of that after 1 month. Okay, loan rejected. Okay, now I have to go to the next bank and I have to try all of that from zero. Actually, even for the same bank, you need to do that. I have accounts at 10 of the 12 banks in Afghanistan. And in many of the accounts, I actually have multiple accounts. And I'm required to create all that paperwork again for the same account in the same bank even. Forget even another bank, right? We can simplify this, digitize it, make it easy for people. Why are we making it difficult for customers to be our customer? There's 40 million Afghans. There's 4 million new Afghans, coming from Iran, and new customers coming from Iran and Pakistan. Wonderful. Let's make it easy for all of them, 40 million, to become customers, not 1 million. Right? So we should make it as easy as possible. Oh, you have your Tazkira? Just take a picture with your phone. That's it. We'll do the rest of it ourselves. We'll go visit your address. We'll check with NSIA to check your e-Tazkira is correct. You don't need to verify it. We're going to go do a credit check. Right? We'll combine our resources. I know right now there's banks in this room that are developing their own credit scoring application. Why? How is that going to help you? You're going to do your own credit analysis? What if that person has a loan from 10 other banks? Do you know about it? No. Right? We need to do it together. If we have a joint credit analysis system, where instead of each of us investing in these systems, we have one system, then we can all check how many loans, one application. You can apply to any bank you want. You don't need to fill it out 100 times. Right? That way the banks can do a proper analysis. It's easier for the customer. It digitizes it. It speeds it up. Make it very, very easy. Oh yes, you'll automatically get your payment. Click, automatic, you get repayments. Don't worry about paying every month and coming to the bank and waiting in line. Oh, I need to pay my money on my financing. No. Automatically it'll be deducted from your account. Even we're talking about trade finance. Why does trade finance have to be a big, long thing? Right? What I love about the UAE, most of the government services, I go online, I click, I print it out. It has a QR code that can verify it. It has the signatures and stamps. That's it. I go straight to the border. I don't need to have 100 checks and offices and let's go from this office, this office, this office. Great. Why can't trade finance be that? Any business that wants to send goods, great. You apply, which bank, how much you want, for what reason, put your details in there, and it goes to the banks. Same application. They can approve it or reject it. If they approve it based on your credit history, your score, your deposits, your account, everything else, great. Instant, print, finished, done. Let's make it easy for people. Let's make business and banking easy, fun, enjoyable, and just get everyone on board, right? There's a huge market here. We have the youngest population outside of sub-Saharan Africa in the world, right? Japan, 10 years ago, they were selling more adult diapers than baby diapers. Nowadays, the future of the world is in Afghanistan. We have a great opportunity here to do that. So it's not that, oh, no one in Afghanistan uses banks, no one needs bank accounts, no, they don't use phones, no, they don't have pictures, nobody has a tazkira, no. All those are opportunities. All those are exciting ways that we can work together. That platform is there. EMIs are not someone to be afraid of. We're a technology partner. The money stays in the banks. We're not allowed to keep $1 deposit. Everything stays in the banks, right? You are allowed to do loans. We don't do financing. We're just the platform, the technology. We're your IT partner. So use your IT partner, right, together to leverage across all of it. And the more banks that can use that, your customers will then have more reasons. Oh, let me keep all my money in the bank account because I can do everything there. I don't need to take out money and to keep cash to pay my landlord, to pay my bills, to send money to my friends. No, I don't need cash. Leave it all there. Right? That's when they'll leave their money there, is when they have opportunities to use it. Right now, they don't have opportunities to use it. We've already built that infrastructure. I've invested millions of dollars. Great. Connect it for free. Add your fees on top. Wonderful. Same thing for financing. Let's make it easy so that I can send a message right now. 1 million customers, almost 1 million. Send a message to all 1 million customers. Hey, you want to apply for financing? Here's the form. And then you can pick which banks the form goes to. See what they'll say. If they'll approve it or reject it, that's up to them. You'll get the financing. Go on for you. So, in conclusion, don't duplicate, use the tech platform, lend directly to the people, give services to your customers, and it's ready and usable. It's not some theory, it's available, it's working, it's approved. It's just about connecting your core systems to our core systems. You don't have to pay anything, free, don't develop your own systems, don't spend millions of dollars, use what we already have together to build the country. Thank you very much.
Thank you, Dr. Seb. Indeed, it's always lovely to listen to you. I was trying not to intervene, as the previous moderators, same role, but I should have at some point. Anyways, thank you very much. I may come back to you. Abhishek Jojo, who is the CEO of AJMS. Improving risk management and making sure that there is little risk or even no risk for correspondent banks, but most importantly for fintech when it comes to digital financial inclusion. Tell us, what do you like to offer?
First of all, thank you so much for the question, and great to be part of such a great panel. I have listened the speeches of all the panelists, and I would say that the kind of insightful discussion we are having, it's something very good for all the stakeholders of Afghanistan, especially from the banking and the fintech side. So without further ado, good afternoon, everyone. Chief people who are developing the framework of Afghanistan banking and fintech entirely as an industry. Fellow panelists, thank you so much for having us here. My topic is very important, especially after the other panelists, what they discussed about. One focused more on the payments, one focused more on how to digitize the entire ecosystem of banking through the use of IT solutions, and one focused on capacity building. But among all these three things, there is one uniform layer which always follows, which I always tell that if you're implementing anything, there is an application layer, there is a model development layer, which is on the capacity side, but there is an infrastructure layer, which is your foundation of risk. How do you measure your risk? Whatever products we want to launch, at the end of the day, you have to protect the rights of all the stakeholders, be it your regulator, be it your partners, be it your correspondent banking partners, be it your customers. Yes, you want to ease the life of each of these stakeholders, but at the same time, with the business, you need to manage the risk, what is there at hand. I can bring the global best practices for you. I'm sure everybody is aware about Basel Committee on Banking Supervision, the laws and regulation that comes in. In fact, Afghanistan also adopts a lot of risk management standards. DAB, which is the Afghanistan Bank, your central bank also adopts that. But the most important thing is, does this fit you as a country, the regulation, what is happening globally? The answer is no. You have to come out and customize the solution. I'll give you a small example. We are based out of UAE today. If you look at Basel Committee on Banking Supervision's capital standards, and you look at the capital adequacy ratio, they prescribed at 8% of the total risk-weighted asset, while the regulator here prescribes 12% of the risk-weighted asset. Why? Because they see the kind of additional risk which may happen because of multiple factors. One can be lack of data. Today, if I want to do an underwriting of a loan, one of the major challenges I face is whether on what data I should rely on. What is the credibility of the information that is coming? And that exactly is an issue. What you're facing in Afghanistan today, the credibility of the information that is coming to you. Yes, there is enriched data which has come, and Afghanistan has also pivoted a lot of, I would say, benchmarking in terms of how payment should be dealt with. The relationship with the correspondent bank. In fact, one of the correspondent bank we were dealing, Afghanistan banking system deals, is also happened to be our client in GCC. And as AJMS, what we strive is to build that resilience in your banking system. If you don't have that resilience, the most vulnerable today, after implementing any tectonic shift, technology, capacity building, and we always keep on saying, people, process, and system. These are the key three frameworks, and any risk and every risk arises from it. Now, one of the things is my moderator asked me how we can achieve low risk or no risk. The myth of having no risk means we should not do the business. If we do the business, there is a risk. How do we manage that risk? In our day-to-day lives, we are under stress. There are people who have different ways or different responses to each of the stress. That's how a great bank or a medium sector bank can be differentiated. How they react to the risk. They will have different responses. And that's where we as an organization come in. We not only develop their people, process, system, we recommend that how the response to each of the risk items should be. If you base your underlining on how we respond to each of the segment, whether it is credit risk, liquidity risk, reputation risk, that is one of the most important factor today in the banking sector. If I go and present Afghanistan Bank, and we have been working with the banking sector quite a lot, especially on the compliance, correspondent banking side. And one of the major questions asked is, Abhishek, you being compliance professional, you being risk professional, don't you see the underlying risk? I say it is not the underlying risk, it is the perception risk. Afghanistan banking system and the fintech system has evolved so much. They have one of the best class of systems in process. It's just about you want a standard, you need them to demonstrate it to you. And that's where lies the communication, which is one of the major risks. Our friends was asking about certain marketing plans, especially if you look at communication. How you communicate. I would give an example of a great man. I am sure everybody would have heard about him. Elon Musk. I'm sure everybody has heard about him, right? The moment he goes on Twitter and announces something, how the prices of his share prices changes, right? That is the power of communication. How you communicate to the stakeholder, whether direct, indirect, and what is the underlying risk. Obviously, it is not allowed if you're commenting about a listed entity. There are certain compliances, regulations, and things which you have to do. But the premise is that the infrastructure which you have developed in Afghanistan, from here, making a strong presence and building that resilience is not a difficult task. The products which our fellow panelists mentioned, especially on the fintech side, is it something new globally happening? The answer is no. I'll give you an example from Africa. A lot of countries have never penetrated or cracked the code of wallet money. Kenya was the first country, and today it's like a benchmark, and all the countries in Africa follow. In fact, UAE or other CIS countries, I would say, followed the suit later. Why? Only because of one thing: necessity. The product was a necessity for the market. If you are bringing a product which is a necessity, you need to develop your infrastructure very strongly, be it from the system or be it from, and system also has cybersecurity framework, right? And Afghanistan also has implemented COBIT framework, ISO 27001. These are benchmark frameworks which are required from overall risk management perspective. But one thing which I would say Afghanistan as a banking sector has to focus going forward, which is very important, is how you deal with the globalization which is happening, because the use of services are not limited only in Afghanistan. If an Afghan national or a resident wants to make a payment for a government service, let's say for example, if he's making the payment outside Afghanistan, he's not currently present in Afghanistan, what are the protocols, what are the risk management standards you have implemented to ensure there is no identity fraud? This is very important. Globally, there are billions of fraud happening because of identity fraud. People are losing money because of that. So you should build that resilience within your framework. So summarize, not taking much time of that. When you talk about your people, invest in them, build the infrastructure layer. You guys have a strong talent, young talent, and building that talent is the way forward. Second is on the system, cyber security, which is very important. Building the right product for the right fitment, but cyber security is the critical part, and the processes. So processes should not be copy pasted from one bank to the other or global to local. It has to be customized based on the size and complexity of your organization. You should do that assessment and take a call whether this is a product, right time from your strategic perspective, right time from your risk management perspective, and then come out whether yes, this you as an organization want to adopt it. So with these three major concepts in mind, I'll give the floor back to you.
Thank you very much, Abhishek. Truly valuable advices and certainly interesting for all the participants as well. We can open the floor for Q&A shortly. Yeah.
Testing, there we go. All right, any questions? Mr. Akiki, hang on. I'm going to get some people that haven't talked yet. You go first, then I'm going to go.
My question is from Mr. Abhishek. Given the Afghanistan unique, operating environment, what priority capacity building initiative across governance, compliance, technology, or human capital can be the most effective strength risk management in Afghanistan bank, and how these can be, regulator or correspondent bank or the development partners jointly support this transformation in this, sustainable manners. What is your opinion on that?
Thank you. And I'll give the answer in two parts. First is the ecosystem, which is the second part of the question. Let me answer. So Afghanistan being a very, very focused banking market, your customer base is very clear. So you have developed that ecosystem, having your banking association, discussion with the banks, bringing the global experts, supporting your banking sector. So that development of the ecosystem with regards to the overall development on the capacity side is very important. It should not be only limited to training, it should be limited to work. It should be enhanced to workshops. That is very important. It should be enhanced to conferences like this, where we are sitting, bringing the insight from all the panelists and other panelists which are there. So that development of the ecosystem with the stakeholders, engagement with the regulators, engagement with the customers, those are things which are also very important, because that direct feedback, if it comes, it only enhances your overall mechanism. Secondly, in terms of the capacity building side, which is the first part of the question, there are three things which I feel 2026 Afghanistan banking and fintech should focus on, and which probably I would say will pick up a lot. One is the advancement on artificial intelligence. This is something at the board level, it should be discussed on a much, much higher level, because this is something which is becoming a reality. We are seeing on a day-to-day basis on the advantage of AI efficiency it brings, and at the same time enhances your overall decision-making process. That is something which will help you. Again, we are talking about the advancement here. People are talking also on how ethical AI should be implemented and other things. So let's focus on the base. That is the first part. Second part is, I don't want to focus on the basics of AML or the compliances and all, because your system is very well taken care of. But one thing which I focus is the cyber security, which comes because you are becoming more digital and digital every day. With digital, there is a risk on cyber security. Understanding of cyber security is very important. Even a simple phishing emails and the impact it creates across the banking system, not only your bank, across the banking system, is also to be taken care and implemented. And last but not the least, I think one of the foundations which should build the banking sector and the fintech sector should be on the regulatory. Look at what the region is playing around, look at globally what is playing around, and bring those thought process that your bank or your people are much more updated about it. So that updates on corporate governance and regulator is something very critical. Yeah.
Very good answers there. We're going to go to Kabul, to Najibullah Amiri from the ABA. He's got a question he would like to pose to anyone on the panel that would like to jump in on it. Go ahead, Najib.
Question in my mind that about the from EGMS, Mr. Abhishek can clarify on this. How can ABA work more closely with regional corresponding banks on improving Afghan banking and finance infrastructure?
What you were saying, because it's a little bit hard to hear, but I think I get what you're saying. So how can the ABA work more closely with partnerships, corresponding banks, in partnership to improve your capacities, but also to help them figure out in Afghanistan what is the most important finance infrastructure to focus on now? Yes. Is that right? Okay.
Yes, definitely.
Anybody like to jump in?
Okay, I'll just put 3 points, and probably I'll give other panelists also for sure. So first of all, I think we need to understand the kind of relationship we want to enter with our correspondent bank. What are we asking? Correspondent banks are not looking for only providing you a payment solution. They are not looking for clearing the payments. They are not thinking of MT102 all day in and day out with you. They have much more broader perspective. They look at your AML compliance, they are satisfied. They look at your overall infrastructure in terms of how do you manage your day-to-day risk, they may be satisfied. But it is very important that you understand what are you going to ask from your correspondent bank. If you are only asking a downward stream payment, they will only look you as a low value correspondent banking partner. Don't position yourself that way. We have always supported the banking system, and we have always made sure that we position the bank in different way as compared to what it is. There's a huge power of the consumer what you have, and there is a huge demonstration that can be done, and which is where I think a lot of people should focus on. And answering to Mr. Amiri's question, which is also relevant from the fact, even in 2026, we are talking about one of the most integrated framework globally, which is on the correspondent banking side. People are talking about other correspondent networks which are happening, virtual assets which are happening. But from Afghanistan perspective, we are talking about how we can enhance Afghanistan correspondent banking network. So one thing I feel like, if you want a UAE correspondent banking partner, you need to build your business case from AED perspective, how it values them, how it enhances them, and how the compliances system process comes later. That's part of the due diligence. They'll come do on-site inspection. But the first thing is, what kind of value you want to generate as a correspondent banking partner. That is very important. So yeah, open the floor to.
Any others? Hojat, you can jump in on these too. I know that Harakat, you guys have spent a lot of time and work trying to bring up the capacity of industry in Afghanistan in different sectors too. Is there anything you want to jump in on?
I really wanted to, maybe as a conclusion of this panel, but maybe this is the time I can talk about this. So we have been listening and consulting a lot of the with the private sector, and particularly with the banking, fintech, and the digital financial service providers. So there are basically 3-4 things that is really holding us back from scaling up the digital integration, digital financial services in Afghanistan. First and foremost is affordability for the users. This is really something that's not happening in Afghanistan. For instance, in order for you to be able to afford using digital financial services, you need to have access to internet, you need to have a smartphone, and of course this is something that is not possible or affordable for everyone. Second is, again, the issue of trust. This is really something in Afghanistan, and people are not easy to trust, using digital channels and services. The third one, which is the most important one, the literacy and knowledge. So many don't know, how the system works, how these platforms work, or maybe, are not customized properly to the knowledge and understanding of the users. And then the fourth one is basically accessibility. Even the banks, and I know that colleagues from the banking sector are here, so not everyone, I would say probably, is it 10% or less than, more than 10% of the population have access to banking services? So less than 10%, right? So imagine if less than 10% of the population has access, and then there is also issues of multiple accounts as well, if you would also take into consideration that one as well. So it's really difficult to really talk about, scaling it up and talking about. So two things come up. First one is the domestic internal integration. So we have to work on how do we integrate internally inside Afghanistan. For many things to happen, Kakar Sahib was talking about, his platform of linking it to the DABs, to, SIA and other government services. So that's very important. We have to first do this internally, the integration inside domestically, and that would also, resolve a lot of issues. The other part of this is the external integration. How do we connect and integrate Afghanistan into, rest of the world, the region first, neighboring countries, and then rest of the world. So I think, these are important issues to look at, and unless and until we are able to really, address those fundamental sort of issues and challenges, it would really be hard to really, scale it up or maybe expand it. Yeah.
Okay, that's a superb answer. Thank you so much. There's a lot in the chatter that we'll talk about in our last session today. But what we're going to do now is take a quick coffee break, 15 minutes. We're going to come back, and Stephen Rodriguez from the UNDP will provide his keynote. And then we'll hear from First Deputy Governor Khalid from DABS as well. Mr. Obeid, one more question before the break? Okay.
Thank you very much for a very insightful discussion. I had one question. It has been discussed that if we have one digital platform for risk scoring of customers, which would work for all banks and financial institutions. So as per international best practices, every bank and financial institution, they have their own customer base, geographic precision, demographic risks, and as well as list of products and services that they offer to their customer. So obviously the risk scoring for each organization will be different. So how could you manage this with one single platform? Thank you.
Wonderful, excellent question, and that's very important because each organization is going to have their own risk tolerance and preferences, and based on their capacity and so forth. I probably misspoke. I was focusing more on like a credit bureau, and for people to understand, which we don't have in Afghanistan. We also don't have a credit registry. So if someone is using one land as a collateral against a loan, and then they use that same land on another application, nobody knows about it. So if there's a single joint credit bureau and collateral registry, that'll be able to be used by the entire sector, then you can reference that. Let's do a credit check. Maybe he has other loans, maybe he has used this collateral in other places. But then you're exactly correct. That bank or that institution needs to make their own analysis based on that information. Maybe there'll be a common application. That application will then come to the banks. The banks will then do their own analysis, scoring, ranking, and they'll choose whether or not to do it. But those two things, credit bureau, collateral registry, and a common application, I think would make it easier for the customers on that side. Excellent question.
Is your view that has to be done digitally first, or should we just try to do this in practice first and then move to digital platforms for that?
For the credit bureau and collateral registry, we could do a paper process, but you could jump straight to digital as well.
Yeah, you'd be building it twice basically for the investment.
I'll just add one last point. I think he mentioned about the credit bureaus also. Credit bureaus works in two ways. One is information from all the banks have to also go in a similar format back to credit bureau, because then only that centralized platform works very effectively. And obviously in each of the jurisdiction, when we see credit bureaus, you pick up India or here or anywhere, one of the thing is it is driven by the mandate from the government also. So if the government mandate is also there, it helps you a lot. Government means regulators and all, because what happens is you have a base platform where you get the information about the historical behavior of the customer, delinquency of the customer. Obviously it does not reflect the future. He may default in the future also. That's where your own risk assessment comes in, that you look at what is his past behavior, what is his existing outstanding loans, wherever he has taken the loans from. Based on that, your credit quality and credit this thing is done. So it's a two-way process. And I mean, obviously, because it's an evolving area, lending is an evolving area, like our colleague mentioned, that penetration is only 10%. But the moment lending comes, the penetration would be very high, because people will understand the value of how they can leverage and grow the business, right? And businesses or individual, if those things comes up, the penetration generally goes up in terms of usage of the services also.
I just wanted to add to what you said. It's a fact that there can be a number of enablers that can be built into a digital system. And speaking from my experience in India, I'm sure Mr. Abhishek would be aware of that. You have banks that are now doing a lot of their retail financing using a digital platform, where you could say there is a very high level of automation that has been achieved. One of these things are, as again was mentioned, credit bureaus. Since you are able to link up with credit bureaus, you are able to get a scoring rate from there, and you know what is the score, and you know whether this is a score that you are willing to accept given your risk appetite. The second thing is that in terms of the mortgages that you may have on properties, whether there's any charge or lien or mortgage on it, you have something like, say, Sarsai, and you could use that, and you'll be able to get all the information about what kind of digital liabilities have been created over the assets that are in his particular name. So I think these things are quite doable, and it has shortened time in terms of the time required for processing a loan. And it is also something which has been seen to be very helpful in terms of the user interface and the user experience at the end of it. Ultimately, it's a satisfied user who will get you more users. So I think that really helps. And this increased automation that is happening is going to work. That is where, again, now artificial intelligence is also coming in. And that is also going to make a big difference in the next 5 years. So I think, Afghanistan is at the beginning stage. This is the time when they can pick up all these things and build into a system where these can be properly used, and it could come in, as something that they don't have to grow into. It's something they start with. So that's basically what I wanted to say. And that's just a supplement to what you were saying.
100%, exactly. It's the example also of phone lines in Afghanistan. Countries, when they had to make a phone line to every house and every business in the country, Afghanistan, we didn't have that. We went straight to 3G. We skipped all of that things. So similarly, in finance, we can skip a lot of the older process and go directly to AI analysis, for example.
You have 60% coverage in terms of mobile. Yeah. You have something like 22% coverage in terms of internet availability. And if you have only 10% in terms of your banking services, then I'm sure that there is a huge, as you said, that example about Africa and the shoes being sold in Africa. There's a huge potential available. Thanks.
Very good. Ms. Mobin, I'm going to ask you the last question. Your boss told me that you have a big announcement to make. I would like you to make the big announcement as the end to this panel discussion. Can you do that? This is on TerraPay.
Yeah. So thank you. Actually, the bank, like as we were discussing this for the innovation, we have been integrated with TerraPay, where we can receive funds from all the world who are integrated, like 190 countries are already integrated into this ecosystem, where seamlessly you can receive funds directly from wallets, from bank accounts to wallet and bank accounts in Afghanistan, where we have already integrated all the available wallets in Afghanistan through our bank with therapy, and so they can receive funds and send funds directly from their wallets or account without coming to the bank or visiting the bank. They can do through their mobile applications.
Is this an exclusive agreement just with AUB?
It was a big achievement for us because we have worked more than 2 years on this to do all the API integration with this through their platforms, which was a huge work for us as well.
Okay. Yeah. So in our last discussion today, we're going to talk about this and a host of other things that the bankers, the e-payment and the digital payment guys have been talking about at the conference out in the hallway. And we might have a big announcement for everybody here today in our closeout. So let's hear it for this panel, though. Great panel. So we'll have a 10 to 15 minute coffee break. There's some food out there. And then we'll come back in and we'll start our final sessions. All right, so I'm going to go ahead and start. One of the things that I wanted everybody to know is that we do not have AIB Bank here. And you may not know that the CEO of AIB Bank, Mike Cunningham, has come down with stage 4, pretty serious cancer. And so he has resigned from AIB, and God bless him. I'm a cancer survivor. I know he can beat it, but it's going to be a tough fight for the cancer that he has. And our prayers, I just want, on behalf of all of us, Mike, if you're watching, our prayers are with you. We're missing you here. But Asadullah Faizi is doing a great job sitting in for you, so we're hoping that you come through this okay. So AIB has called for their board meeting this week in Kabul, so they have not been able to attend, and there's no pressure on them. They've been a very good supporter of everything that we've tried to do with the banking sector, so we appreciate it. Yes, Mr. Hakiki has asked us to raise our hands and pray for him together. Yes, for the recovery that we expect. Okay, next, we are very happy to have with us today our keynote from the United Nations Development Program, one of our gold sponsors of this event. Please note that UNDP is helping us to pay for the live streaming and the video production of today's event. We're very appreciative of that. Stephen Rodriguez is the UNDP resident representative in Afghanistan, and he has been in Afghanistan for going on 3 years now, since 2023. He's been a UNDP rep in many countries around the world, including Liberia, Rwanda, and Indonesia. And he's joining us now from Kabul. Stephen, welcome, sir. We're very honored to have you, and I'm sorry we're a little bit late getting there, but it's been a long day of very good and intensive banking and finance discussions here in Dubai, and we welcome your comments right now. Thank you.
Thank you so much, and it's really a pleasure to see you again, Jeffrey. It's been a while. I think we last saw each other a few months ago when you were in Kabul. Can you confirm that you can hear me okay in the room?
Yes, we can hear you fine, sir.
Okay, that's
Very
great.
good.
And by the way, Mike from AIB is also a good friend of mine, and I was quite devastated when he gave me that news a few months ago. So I join in extending my thoughts and prayers for his recovery.
Thank you. I know he'll appreciate that. Thank you.
So let me start by thanking the Afghanistan Banks Association and the Afghan American Chamber of Commerce, as well as the other partner organizations, for convening this event. I was listening to some of the conversation, Jeffrey, and it really is so timely that we're having these discussions now. The banking sector is critical to the economic recovery of Afghanistan. And we know it's a country that's facing immense challenges. It continues to deal with a very complex political situation. But since the last year and a half or so, we're seeing rapidly decline in donor financing. I think last year was a cut of about $1 billion US. What this means is that the Afghan banks and the Afghan private sector must play an even more significant role in generating economic growth and creating jobs for the hundreds of thousands of young people entering the labor market every year. But unfortunately, we know that the political transition in 2021 and the country's loss of international recognition has created many disruptions. That's disrupted economic activity, disrupted the financial system. And while things are beginning to be restored, we're still seeing the consequences of that being felt even today. But what I would say, and the argument I make when I meet with the member states and the international organizations, is that we must continue to engage and support the Afghan banking sector and the overall financial sector, because it is too vital for us to ignore. This is the only way to improve the lives of millions of Afghans and to reduce that perpetual dependency on humanitarian assistance. Some data in terms of what we know. About 75% of Afghans, 3 out of every 4 Afghan, is living at a basic subsistence level. They can barely meet their basic needs. Unemployment is very high. The economy is not growing fast enough to reduce poverty. And some of you mentioned 85% of Afghan adults remain unbanked. They're not connected to the banking sector. Only 6.8% of females have a bank account compared to 20% of males. And so when you put international isolation together with the restrictions on women's economic participation, we're seeing deepened financial exclusion and constraints on economic activity. We also know that many of the banks and MFIs, the microfinance institutions, are struggling with liquidity. And I know the World Bank is coming in and stepping in to help address that challenge. But overall, what we're seeing is a banking sector that is struggling to meet the financial needs of the population. And I think addressing these issues, as you've been discussing throughout the course of the day, is vital for trade, for economic growth, and for development. But it's not all negative. And I overheard some of the panelists speaking earlier. And the Afghan banks have in fact made some good progress in a number of areas. In spite of the difficult circumstances, they're keeping financial services running. They're improving their standing and their adherence to international norms. We see banks strengthening their compliance with global anti-money laundering and counter-terrorism financing rules. They're improving their internal rating systems. When I went to visit AIB Bank, I saw a huge AML-CFT department and a risk management department. And I know Gazanfar also has a very strong set of systems in place there. So while these efforts are not always visible to the international community, they are crucial for rebuilding that trust and that confidence in the banking sector in Afghanistan. And it is also encouraging that due to these improvements, some of the Afghan banks have already begun to facilitate international trade using correspondent relationships with foreign banks. And I've met with some of the banks that are doing this, including Gazanfar. I know Kishro is in the room, and we've had these discussions. Last year, the Afghanistan Banks Association also held consultations with international partners to showcase the reforms that are being made, reforms in governance, in digital banking, in Islamic finance practices. And what this demonstrates is that Afghan banks are proactively engaging the international community and taking steps to restore confidence. Now, while these efforts demonstrate good progress, we all know that more is needed to fully reconnect the Afghan finance sector to the rest of the world. And I heard one of the panelists speaking earlier about the fact that many foreign banks do not wish to do business with banks and businesses in Afghanistan. Some of it is reputational, some of it is branding, and so on. But another key part of the challenge is that the central bank, the DABS, its inability to access its transactional accounts and its foreign reserves remains a major barrier to banking and to trade. The perceived lack of independence of the central bank and the central bank's inability to participate in critical international banking oversight systems, which are designed to deal with issues of money laundering and terrorist financing, are part of the challenge, and we have to be very frank about it. And until these challenges are overcome, some of the progress made by banks and the efforts made by FinTracker are going to remain limited. But there's a political process in place under the Doha framework with the UN, which the UN is leading, to try and bring the international community and the Afghan authorities together, plus the other stakeholders, to try and address those issues. Now, while these issues are being negotiated, I would say there are a few concrete actions that the Afghan banks can take to further build trust and strengthen those correspondent relationships. And I'll suggest maybe just a few. One is strengthening compliance and transparency. I will encourage the banks to continue investing in those robust AML CFT systems and in adopting international best practices that can demonstrate to foreign partners that Afghan banks meet global standards. It will take time, but this is part of the process of rebuilding trust and rebuilding the image of Afghanistan abroad. Proactive engagement and partnerships, again, to showcase the improvements and the success stories, and to seek dialogue with regional and international banks, sharing audit results, engaging in platforms and conferences like this one, engaging in the UN-led Doha Private Sector Working Group process. All of that can help to, again, build trust and credibility for the banking and finance sector in Afghanistan. A few speakers have also spoken about digital innovation, embracing digital payment systems, and not just relying on SWIFT systems. And I was so happy to hear one of the speakers talk about stable coins, and someone else also spoke about AI and using AI to find new solutions, new technologies that can facilitate financial transactions. So this is another space for the banking sector to push forward. And I think when we take these steps, they will help to reestablish that credibility of the Afghan banks, but it will also find new solutions to old challenges. Now, in addition to all that which is taking place, I want to just highlight a few things that UNDP is doing. Because one of the cornerstones of UNDP's support is access to finance. We have a major initiative which we launched in 2024 and which we'll continue to implement over the next few years. Our aim is to help banks and MFIs to lend again, responsibly and at scale. So we're focused on a few things. Institutionalizing training for professionals in the financial sector to help them to transition to Islamic finance to help them to introduce new Sharia-compliant products, to help them to improve banking standards, including adherence to AML CFT guidelines. We also have credit guarantees and risk-sharing mechanisms in place to help banks and MFIs to lend more. And we're working with banks and the MFIs to provide subsidized and matching loans to thousands of businesses across the country. We're establishing more dedicated funding for women-led businesses. And of course, we're supporting digital payment systems as well. So in short, we're working on all of these issues. And I'd love, based on what I've heard from some of the panelists, to connect our Access to Finance team to some of the companies and some of the individuals that we heard talking earlier, because many of the issues you raised are the issues we're trying to deal with. Of course, we're already partnering with some of the companies that were on your panel. With ACGF, we have a credit guarantee scheme. We have programs with Harakat, with Gazanfar Bank, and some of the digital payment companies in the room. But I also see additional opportunities for partnerships, including with the World Bank. I see my dear colleagues are online, and they're about to launch the next phase of their own program in this area, and I'd love us to collaborate to address some of these issues. And by the way, another speaker also spoke about the credit bureau, and that's an area of interest to us in UNDP as well under our Access to Finance program. In addition, we also have a policy and research capacity. We have a policy team and a global network of access to finance experts in about 170 countries that can help to support the work on these financial sector issues, including drawing lessons from other post-conflict countries where the financial sector is dealing with similar challenges as Afghanistan. So as I conclude, what we're trying to do, as I said, is to push for 2026 to be the year of financial recovery for the Afghan banking sector. We believe it's a very ambitious vision, but it's achievable. The foundations are in place. The foundations have been built by the Afghan bankers themselves, the entrepreneurs and the partner institutions who continue to work under very difficult circumstances. But together, I believe we can remove some of these obstacles. We can rebuild some of the trust. We can find new solutions, including using technology and AI to help move the banking and financial sector forward. So let me just reaffirm that we remain fully committed, dear colleagues. We will remain a long-term partner to the banking and finance community. And in 2026, we'll continue to mobilize our expertise globally. We'll continue to invest in the reform agenda, and we'll continue to advocate for the banking sector, not just within Afghanistan, but internationally as well on that global stage. So with that, thank you once again for the opportunity. And as I said, I'd love to connect my Access to Finance team with some of the speakers in the room, because I believe there's work that we can do together. So thank you very much, and back over to you, Jeffrey.
Thank you, Stephen. Are you willing to take a couple of questions from the bankers if they are interested? Just general questions? I might start if I could. One of the things
sure,
that
and
we've
I think
talked,
I have one.
The coffee breaks have given us a lot of chance to kind of strategize among our groups. And one of the ideas that we're putting on the table in our final closing discussion, the Afghan Banks Association and its board members that are here, the Digital Payments and E-Payments Trade Associations, represented by their board members here, and outside e-payment and digital payment providers from India and from other regional countries. We've all discussed doing a May conference in Kabul at the Serena, where we are now Kabul Grand Hotel, that we would bring several of the Islamic banks and the corresponding banks from the region in the morning to join us for the day, and having a real national discussion on how to make them all work together much better, and to have the corresponding banks engaged in that discussion because they're very interested in doing that. And I've met with many of them here today, and they said, for example, one bank from Bahrain said they're coming. They committed to do it. They're very excited by this idea. And we just bring them in the morning and fly back out in the evening. Is this something you guys would think about working with us on or speaking at and so forth?
So, no, thanks, Jeffrey. And two quick responses to your question. Yes, it's a subject area within our portfolio and that we're very much interested in, and we'd be very interested in participating in that conference. The World Bank has also done quite a bit of work on digital payments, and they've hosted conferences as well, regional conferences. So we want to connect that conversation. But the other point is, I'd love to see if our teams, maybe from some of these lead institutions, can do some of the legwork before, because many conferences, many meetings have taken place, and I'd love to see if we can make a few breakthroughs so that if we come to another conference, we actually have something tangible to say, that the prior conversations and the working processes over the last 2, 3, 4 months have led to some solutions to X, Y, and Z. So yes, but let's also do some work to
Yes,
have
absolutely.
something to
We
show.
agree. There's a lot of work to be done. Any questions from the banks for Stephen while he's here? Any updates or things that you're interested in, or from our audience as well? Anything for Stephen Rodriguez from UNDP? All right, I think we're in good shape, Stephen. Thank you so much for doing this, and we want to give you a round of applause.
Thank you. It's been a pleasure. And
All right.
greetings to all my friends in the audience there. Bye-bye.
Thank you. Bye-bye. Okay, that was great. Thank you. That was a good setup. We're now going to introduce what for us is an historic day, for me personally, especially as an American. I want to introduce our closing keynote. It's really a short video remarks by the first Deputy Governor of the Central Bank of Afghanistan, Mr. Sadiqullah Khalid. Mr. Khalid is not sanctioned, just so we're very clear with the audience here and abroad. I've met with him on several occasions in Kabul. He is one of the most articulate in both English and in other languages of the central bank leaders. He's extremely competent in the area of compliance and reporting. He's very exacting on the central bank staff, and we've witnessed that ourselves and heard many stories about it. And we asked him if he would be willing to speak to our audience here and around the world that are watching this video. He provided this update to us yesterday. His topic that he addressed is Afghanistan's banking compliance track record since 2022 and looking forward into 2026 and beyond. The Afghan Central Bank, as many of our audience, and I know the Afghan bankers believe this, the central bank is critical to the financial, monetary, and economic stability of Afghanistan today, and it has been since 2002. While the U.S., the UN, and most of the bilateral governments still do not recognize the Taliban interim administration, they all agree that the critical importance that the central bank plays in Afghanistan now and into the future for the stability of the country, for the continued compliance in AML and CFT, and the continued measurement of performance in international banking rules and regulations. Today's remarks by the first governor are a step forward, we believe, as co-hosts of this conference with the Afghan Bank Association. We believe in more openness and more transparency by the TIA and the about the international banking system. And many, I think, will agree after they hear his remarks today that there is a place for us to move forward to in this area in complete agreement with many of the things that the central bank has done. So if we can, Suze, can we cue up the video from the first Deputy Governor?
Bismillahir Rahmanir Rahim. Esteemed guests, distinguished colleagues, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. It is a pleasure to address the Afghanistan Correspondent Banking Conference in Dubai. I extend my heartfelt gratitude to the Afghanistan Banks Association, the Afghan American Chamber of Commerce, the Afghanistan Business Council of Dubai, the Canada Afghan Business Council, and the Afghan Investors and Businessmen's Association of Turkey for organizing this conference. This conference represents a key moment for the Afghanistan banking sector as we seek to strengthen our relationship with regional and international banking communities. It is a testament to our collective commitment to fostering a robust financial ecosystem that supports transparency, stability, and sustainable economic growth. Over the past few years, the Afghanistan Bank has made significant steps in enhancing supervisory oversight and banks' governance and compliance with international banking regulation and standards. Since 2021, we have worked diligently to improve our compliance framework, aligning our practices with the global norms for MLTF. Our achievements are not merely numbers and statistics. They reflect our dedication to ensuring our financial institutions operate transparently and responsibly. We recognize that compliance is not just a regulatory requirement, but a fundamental pillar that supports integrity, stability, and growth in our economy. As we gather here today, we acknowledge the essential role played by our corresponding banks. Your expertise and partnership are invaluable as we navigate the complexities of international trade finance. By engaging with each other, we can open new avenues for collaboration and channeling humanitarian and commercial financial inflows to serve the needs of our citizens and businesses effectively. I invite all of you to engage with our banks to explore the opportunities, continue dialogue, information sharing, and pragmatic cooperation between Afghan banks and international corresponding banks that promote mutual benefits, ensuring a resilient banking ecosystem. I would like to express my sincere appreciation to the international community, including the United Nations Assistance Mission in Afghanistan and the European Union, whose unwavering support has been crucial in our journey toward strengthening our banking sector. We hope that international community to continue and expand the use of banking channel for the transfer and distribution of humanitarian assistance fund. Together, let us embark on this journey of collaboration and innovation. I am confident that our combined efforts will lead to improve sustainable banking relation for Afghanistan's banking sector and the broader economy. I hope you would have a productive discussion in the sessions ahead. Thank you for your attention.
Okay, so on behalf of the Afghan American Chamber of Commerce, we are waiting for the full restoration of rights to women and girls in Afghanistan. We believe the future can only be a unity government in Afghanistan where all groups are represented equally, and our hope is that eventually the Taliban will help to do that. So for those in our international audience, this does not mean that we're endorsing the Taliban interim administration, and we certainly want change in Afghanistan politically. But the economic and business aspects are what we're here about, and that's what we're focused on. So we're going to switch now in our closing just to take 15 minutes to hear from our experts. I've asked them to think of one thing out of today's discussions that you think our actionable recommendation report should focus on, and give a little bit of the reason why you think that should be. And we'll start with Kishore, we'll just go straight down the line. And I had Mr. From the Azizi Bank as well. I think he left. He was here a minute ago. I think he ran for the door maybe when I told him. Okay. Go ahead, Kishore.
All right. Thank you very much, Jeff. I think today we had wonderful discussions in each panel, and the future is positive and very optimistic. And as Stephen very well mentioned, you can see a lot of progress in the last couple of years as well. When you compare 2022 and today 2025, achievements in the banking sector. So I just noted a few points from the discussions. The first one is about correspondent banking relationship importance to the economy of the country and also to the region. So the conclusion is that correspondent banking is about business, it's about trust, it's about transparency, and also responsibility of everyone. And Afghanistan is an untapped market. 30% of the international payments are going through the correspondent banking channel. The rest is through the traditional financial system, and that means it's a blue ocean, as I said. So through the new correspondent banking channel, I think we can bring more and more these payments through the proper financial system. The second point is about focusing on regional correspondent banking relationship is more viable. 90% of the trade to Afghanistan or from Afghanistan is with Central Asian countries, the Middle East, and also South Asia. So direct relationship with banks in these countries, I think, is more important for Afghan bankers to facilitate the trade payments. And instead of focusing in European countries or US banks, since Afghanistan is a high-risk jurisdiction, and it doesn't make sense, if you have just like 1%, 2%, 3% business with Western countries, it doesn't make sense to make direct correspondent bank relationship with them. So I think India is an example we were talking about. I think he left, but that was one of my suggestions. If the size of trade with India is, let's say, 1.5 to 2 billion US dollar, which is huge, almost like 25% of the trade of Afghanistan, I think India is the top priority to approach them and make a direct correspondent banking relationship to facilitate import and export to and from India payments. And the last point is about the trade finance. I think trade finance and as well blockchain, I think this is the future. We need to focus. We as an Afghan bankers, we need to focus and work on that. Trade finance is also alternative option of the payments because technically saying MT103 and MT22 is more actually most banks, actually, correspondent banks, they're more conservative when they do clearance of these two type of transactions. But if it is trade finance for the legitimated business, I think that's more viable.
Okay, those are excellent. Four great takeaways. I asked for one, but you gave me four, and I like all four of them. So we'll figure out how to make that work. All right, Sensar.
Sure, he gave you four, I'll give you two.
Okay.
ABA to ask DAB for a very controlled stablecoins pilot for remittances. That's number one.
Okay.
Number two, UNDP to, as they mentioned, they were interested in it as well, which is fantastic, to support a kind of digital platform that includes a credit bureau and a collateral registry for Afghanistan.
Okay, very good. We're on to Deepak next.
The key takeaway from my perspective stands for a collective commitment and responsibility towards the sustainable and responsible banking in secure and compliant financial ecosystem under the able leadership of the central bank. We cannot ignore them, as well as for the coordination of the digital innovation and technology. Thank you.
Okay, that's excellent. All right, we're on to Ahmed. I have to say, if you've been in banking in Afghanistan for a while, I think this is the first time we've had bankers sitting with E and digital payment guys and MSPs. So this is going to be on television for a long time on YouTube. So just take a picture today. So go ahead, Ahmed. I'm sorry.
Today we spoke about systems, risk, regulation, correspondent banks. But behind every system, there is a person. Behind every regulation, a family. Behind every transaction, a life trying to move forward. What this day really shown us is something simple. Afghanistan financial future will not be built by choosing between reality and standard. It will be built by connecting them. Bank matter, MSPs matter. The future is not the replacing other. The future is integration. If leave this room with one shared thought, let be this. Engagement is not risk. Silence is not risk. Distance is not risk. Design is hope. Thank you for creating a space where we could truly think together, not in parallel, but in partnership. The conversation is not end here. It has just begun.
Okay, those are great. I have those. I wanted to ask Mr. Haidari, at our last break, you and I and Kishore were talking about the new initiative by DABS. Can you just give a description? What would be the takeaway for the banks and the digital guys together to help DABS implement the new initiative?
Thank you, Jeff. From my perspective, I think 3 points or key takeaways. First, we heard about trade finance due to changing in the business dynamics. This is a need, and recommendation is to sit with business community, with chambers, discuss further, explore what is the scale of trade finance needs and what are the products in this specific area that we can work with them. Second point, we heard about myths about banking sector, the misunderstanding, the compliance systems that were there in Afghanistan. I think this is a first of its kind to talk about these issues, clear misunderstandings about Afghanistan banking sector, and I think it cannot be one-off. So we need to have regular such kind of discussions with a bigger audience. I know in the room we have a limited number of people, but on YouTube there are a lot of people, and many organizations are watching the video on YouTube. So I think we need to regularly communicate what we have, and we also offer, I think everyone is in agreement that the entire sector is open to any kind of due diligence and external audit to give the assurance to the international banks that there is opportunity for you. You're not helping the banking sector in Afghanistan, there is a business opportunity. Third, I think digitalization, we see this as an opportunity. There is a momentum. Central bank has come up with a financial inclusion strategy for next 5 years. And I think the recommendation is to have conferences with fintech banks and central bank to further discuss the inputs that we had from the panel, different panel members, to work on them. These were the 3 points. Thank you.
Okay, excellent. So I think your second point on the communication about the myths in the sector and debunking, that also gets to the trust issue that almost every single person brought up today, is
Yes.
we need to really focus on communicating better in order to build more trust in those banks, corresponding banks, and in the Afghan public too, you know?
Yes,
Okay.
absolutely.
All right. That's excellent. Now, can I throw it open to Mr. Akiki, Professor, or Mr. Pant? Anything you think that we haven't touched on or that will be important in the report that you haven't already noted?
This is not something that was directly discussed, but I think is in the shadows of what was discussed, which is that with the kind of demographics that you have here, there are going to be issues in terms of how the future is going to be financed.
Yeah.
And that is where, when we look at the credit deposit ratios and we look at the AML kind of situation that we have, these banks, ALCOs are discussing anyway, you find that there is a very short-term liability backing any kind of an investment decision that you may take, which is definitely going to be long-term. So there's going to be a huge gap in the different buckets, time buckets that you have, apart from the very short time buckets. One way that could be done is use the example of Singapore, where they started a pension fund, and where people who were in employment or others who could generate that kind of a surplus were encouraged to finance or put their money into a pension fund. Now the pension fund here could be by way of mini sukuks. You know, you could have sukuks for about, say, 10,000 Afghani or 100,000 Afghani, but within the affordable range for the kind of target segment that you are looking at. When that money comes in, one way of utilizing that money is to get into the housing sector. And housing has always been a big multiplier. If you look at the impact of housing on GDP generation, you find that housing sometimes impacts close to about 22 industries or activities, as against maybe, if you are taking something else, maybe like simply agriculture, which may be impacting about 7 or 8 segments of activity. So I think that could be a multiplier, and there would be an investment that would be going into real estate, which is tangible, and therefore could be a safer investment without the need for any kind of external support apart from supervision. So this is something that I think, in terms of both the long-term creation of liabilities and of investing those in an activity which is going to have a huge multiplier effect. The other thing that I think is that in terms of the discussion that was there, in terms of support to MSME, if we could have something like the equivalent that we have in India of a CGT MSE, which is a credit guarantee trust fund for your MSE, that is your micro and small enterprises. Here you could leave the micro out because the micro here would be very small, but small and medium activities. And where there could be a charge that is there, which is borne by the borrower, which is about 1.5%, or it would be less depending upon how you do the costing on this. And in case the banks feel that they can afford it, they could absorb that cost. So that's going to be their social contribution. So when we talk about ESG, the ESG contribution part of it could also be looked at from this side. And therefore you would have a credit guarantee trust. And you could, to the extent that you raise money, in India it is 75% of 75%. So the total amount paid out is 75% of the loan that is in default. And it is paid out in the first instance in an installment of 75% of that 75% which was guaranteed. So essentially you are guaranteeing something like 2/3 of the loan amount. And that's another thing that could be thought of.
Okay, very intriguing, especially on agriculture. For me, I think housing might be still too early for the donors, especially who we want to come in on this, not just AFCG, but others as well. That's great stuff. Okay, can we go to Mr. Akiki, your final recommendation? And then Mr. Abadi, if you have anything final, please jump in as well.
Thank you, Mr. Greco. Every institutions, every projects, every concept, they have like mission, vision, goals, and all that stuff. that we know. But in order to achieve those missions, goals, and in Islamic terms, the niyat, we need two important things. One is technological knowledge, and the other one is human resources. These both reinforce trust. So therefore, my point is, a lot of our respected panelists talk about capacity, about technological things, about AI and all that. But in order to have, in the bank is not just a physical thing. Inside the bank, there is human resources, and there is what I would call a system, technological and stuff. So how we increase the capacity of that is because we have to institutionalize and support the educational level of Afghanistan. And for that, we need to support the changes of curriculum, and the institutions that we have to give them advice. We had here before expert from the American University of Afghanistan, and we do have my respected student, Mr. Hujjat.
Fazli, yes?
Yeah, he is my student. I have taught them not only, business, but ethics too.
Yeah.
And how to deal. So what I'm saying, I'm proud that he's the head of the Harakat institution, and my other friend who was from AIU, he's not there. So they should work, as I have previously done something in American University since I was professor, that they should increase the, what I would call it, the accounting and the auditing and the system of banking. So for that, I propose that Mr. Hujjat Fazli, should provide a second tranche to the American University for building the accounting school, which will help us, that we're all talking about trust and systems and that. And the last time that they provided was around $2 million, but unfortunately the American University at that time sort of screwed that project, didn't work properly. So I'm suggesting that that idea and that concept, which was approved by the American University, should be revised. Thank you.
Okay, that's excellent. I know Nitin is happy that you said that from the American University in Afghanistan as well. All right, Mr. Obadi, can you pass the mic for him as well?
Thank you very much, Jeff and colleagues. I believe we have lots of, wonderful action items. If we consider all of them, there will be, much major improvement in financial sector of Afghanistan. The only thing I want to add is that we have everything in place. We have system, we have technology, we have great people, and also we are aligned with international best practices, and everything is in place. The only thing which is lacking is information and awareness.
Information and what was the second?
Awareness.
Awareness.
So the donor community, along with the financial sector, they have to, work more on awareness. So board and also banking sector and locally, people could understand that banks are capable of doing, providing services and transferring US dollar to all over the globe and receiving funds, and et cetera, and et cetera. And similarly communicating with the donors and international communities so they could also help us to reach with the US correspondent banks especially, and bring these realities to them and discuss the real picture and real situation of banking sector and financial sector of Afghanistan with them. I think this will help us to build the correspondent banking relationship much faster and easier. Thank you.
That's excellent points, both on the information and the awareness. That gets back to what many of you have said with regard to this building trust and better communicating what the value of the things you've already done, but also trying to set a platform for the corresponding banks to want to join in some of those activities as a partnership model, a mentoring model, I think Mr. Akiki used at one time. Okay, those are excellent. Thank you. Any other inputs, Bernd or anyone that you'd like to make before we close out?
I would like to come back to my suggestion and to what Zia was mentioning. I do believe that the trade finance product has a lot of potential. I think there are two needs based on that. The first one is the product needs to be set. Right now, there used to be LCs in the past, before 2021, but right now there isn't. And that needs to be developed, and the international relationship needs to be built in order to offer that to customers. But also what is needed, and we were discussing that, is to translate the need that is surely there into demand. For that, we need awareness creation for customers to understand the risks and the benefits of the risks of their standards, paying upfront, and the benefits of having such Islamic LCs that mitigate these risks very effectively. It's not an easy task. There's a lot of work to be done, but I think there is an opportunity now that is much stronger than it had been in the past, where this was tried and demand was not sufficient. But now, and Zia mentioned that a lot, specifically in the Central Asian countries, there is a sweet spot for that.
Yeah, absolutely. So I'm a little bit torn. So if we, Nadine's message to us from the World Bank this morning was, you have to lead the private sector. Our goal is to get you start leading in these sector areas that are going to bring growth and more opportunity and jobs. But at the same time, a trade finance mechanism that's never been done in a successful way, sustainably in Afghanistan, it needs donor participation in it too. So how can we get the ABA and the other members from the other systems, the digital payments and ePay, how can we get them interested in working on this together so that the trade finance platform is actually having their input into the formation instead of the donors just meeting together and agreeing on it, but not really engaging the people that are going to do the work and bring you the business, the demand model, long term?
I think if I understand the donors properly, we are talking to them. We have talked to the World Bank last week.
Okay.
They are very interested in the needs of the private sector.
Okay.
And I think they're ready to engage in that.
Okay.
And the need is there, demand needs to be built. But I think they would be ready to work on this.
And Harakat, don't you agree? Harakat could play a big role in this too with their IFC work and helping to bring engagement in this consensus building around a trade finance product. That would be great. Hojat, over to you.
Thank you very much, Jeff. Yes, absolutely. I think all what we are always insisting on is to do this collectively. As the problem is not just individual or a specific sector problem, but it's rather a collective problem for the country and for the private sector. So that's why everyone's role and contribution matters, and we have to work this collectively. I think Harakat on the one side, working with the businesses, with the wider private sector, and more sort of like facilitating and supporting the demand side, and then institutions such as ACGA, for others, the banks could also do on the supply side in terms of providing the services and also the inputs into this entire process. So yes, absolutely. And then by the way, we are already engaging a lot with not just ACGA, but with all other private sectors as well, that how do we strengthen this coordination, advocacy, and facilitation through the private sector forum that we have together with the IFC, which is right now in Afghanistan the only leading inclusive. We don't have many things inclusive in Afghanistan these days, but that forum is truly inclusive and neutral, which is there for the private sector and we particularly for the women as well. And then I also wanted to maybe have recognition and recommendation as well. Jeff, I really would like to thank you for organizing this event and bringing us all together. So really thank you. It was a fruitful and an informative long day, I would say. And I think what I could recommend is to, first and foremost, as you will be doing the recommendations and refining the final report, but it would also be interesting to maybe sort of identify rules for different stakeholders or maybe institutions in terms of what could be done by whom and how, and then also the cross-cutting issues, so that it would also help us in terms of our own planning, and also in the future that if you would like to discuss similar issues or topics, would already have sort of like a institutional memory of what we have discussed in this event as well. Thank you.
All right, great. We will definitely make the report reflective of all the inputs of our speakers today. There's no question about it. So let me close, if I can, to urge in our video audience around the world, please remain engaged with Afghanistan. We're urging international and regional corresponding banks to increase their involvement in Afghanistan, in trade finance, in partnerships and mentorship, and possibly in investments with Afghan commercial banks and the finance sector innovators that are represented here today on this panel. Stay involved in Afghanistan. It's in all of our interests to do so. The Afghan people want our support very openly, and they need our support, continued support, whether it be monetary or otherwise, and there's many ways we can contribute as a world economy. So this ends our live streaming event on our very happy day here on Thursday in Dubai. Our in-person attendees are now invited to join us for a networking reception and a dinner here at the Embassy Suites in Business Bay, Dubai. And we're looking forward to having all of our guests, both watching online and here, to get together again and to keep pushing forward on actionable recommendations that will change the economy for Afghanistan and bring greater corresponding bank involvement in the country. Thank you all so much.